morning, everyone. Welcome back to the second day of Bitcoin Asia. I'm your host today, Cassie. 大家好，欢迎来到第二天的比特币亚洲大会。我是你们今天的主持人 Cassie。我看到很多熟悉的面孔 I see many familiar faces. So I think most of you were here yesterday, right? Were you guys having fun? Thank you. 我看到昨天很多人都已经来过了，我相信你们现在都已经玩得非常开心，对吧？ So today, back on the Nakamoto stage, we have once again gathered the brightest minds in the Bitcoin community, who have been reshaping and shaping the future of Bitcoin. 今天在中本聪的舞台上，我们再次请来了比特币社群中最厉害的人才，他们正在塑造比特币的未来。 We'll be exploring Bitcoin in TradFi, DeFi, its culture, its latest technology, just to make sure that by the end of today, you will be convinced, well, of course, most of you are, that Bitcoin is taking over the world. 我们将会在去中心化金融、传统金融，还有它的文化和技术的领域，探索比特币的最新发展。希望今天大家在离开的时候，都可以更加清楚。 为什么比特币将会是我们的将来 ？So right now, are you ready for today's event? A little bit more? Are you ready for today's event? Okay, cool. 大家准备好今天的活动了吧？那我们就开始第一回嘉宾。So to kickstart our first speech today, it's my honor to introduce Stephen Livora, the host of a leading Bitcoin podcast. In the Bitcoin community, 著名的比特币主持人 Stephen Livora， 欢迎 Stephen。Welcome Stephen。
Thank you very much. So, I'm going to be talking about why Bitcoin is different. So, obviously, cards out on the table. I'm a maxi. I think basically everything else is a shitcoin, but I'm going to explain why. All right? So why is Bitcoin different? So let's just start with a quick analogy. So when you want to ride the bus, you buy the bus ticket, you take the ride. However, who actually buys a bus ticket or mass bus tickets to speculate on the future price appreciation of bus tickets? Nobody. That's right, because the utility token thesis is bunk. So there are people like crypto influencers who will say, oh, Bitcoin is bad, it doesn't have XYZ technology, buy my altcoin bags. That's the typical argument we'll say. And for years we've heard different versions of this argument. They may say, oh, Bitcoin, this doesn't have whatever, this particular expressive smart contract, or this particular token support, or this whatever it may be, and they'll say, oh, look, this altcoin, my altcoin bags, it's got this technology, so you need to buy right now, and they'll argue, oh, flippening this, flippening that, etc. We've all heard the same lines over and over, but it hasn't happened. So, as I was mentioning, the utility token thesis is bunk. Value does not accrue to a token merely because it is used as gas or the fee asset for a transfer. Okay, and so when it comes to things like, okay, as an example, stablecoins. Obviously, I'm a maxi, but I think stablecoins are, it's okay if you need to buy the bus ticket to take the ride because someone somewhere needs to pay you in stablecoin instead of doing a fiat wire. Okay, fair enough, but that doesn't necessarily mean that value will accrue to the alt chain or the altcoin token underlying that payment rail. Right? So even if, let's say, Tether or these other stablecoins are transferring across Ethereum, Tron, Solana, whatever, doesn't mean that Ethereum, Tron, and Solana are necessarily going to go up. And that's an important point for people to understand because it's very confusing. So we're going to get into a few points around how and why. Okay, so ultimately, just think of it like this. You may have seen the mental gymnastics meme, so I made one. Bitcoin is superior money. People hodl it and try to accumulate. Number go up. Okay, and I'm not against spending, of course. You earn and spend, but you want to try to be a net accumulator of Bitcoin. That's my worldview, at least. Now, when it comes to shitcoins, it's like this constant sort of mental gymnastics. Oh, I need to flash loan to borrow poo-poo coin against PP coin, and it's ultrasound money, and it's, you know, world computer dank sharding, and oh, look out, you need to do staking so that you can earn 4%, but then actually end up down 50%. What was the point of all that? So it really comes back to, why do people hodl? Why do people hold? It's not just about like transactionally using it or buying the bus ticket to take the bus ride. Why hold something? That's what matters the most. So the fundamentals, and I'm going to shout out my friend Pierre Richard. This is based off one of his tweets, which I thought was a great explanation, and I've lifted that here. But why is Bitcoin fundamentally better? It's credible monetary policy. There will never be more than 21 million Bitcoins. That's obvious. It has the strongest liquidity, the strongest brand. It is a decentralized network of nodes. You can run a Bitcoin node at home and verify your own coins, your own transactions. You can verify that. It's a decentralized network of nodes. There's tens of thousands of them, maybe 100,000 around the world. There is stability and conservatism in Bitcoin protocol development. In Bitcoin, you have the freedom to send, to receive, to hodl. These are paramount. And of course, Bitcoin is digital, global, and 24/7. These are the fundamental things that make Bitcoin better. That's why Bitcoin is money, and the other altcoins, they're sort of more like technology projects or technology platforms, and kind of like bus tickets, as opposed to something that you would want to hodl. Now, here's the other thing. People talk about altcoins, oh, look, it's pumping, this and that. They'll often talk to you in dollar terms, in fiat terms. But here's what the reality is. If you believe Bitcoin is going to become the money someday, take a look at the charts or take a look at the table. So this is the all-time high of these altcoins priced in Bitcoin. So for example, Ethereum's high, I believe, was in 2017, in that era. It was 0.1475 in BTC terms. So about 14.75 million sats, if you prefer. And the current price, or as of a couple of days ago, is about 4.2 million sats. So it's down, you're down in Bitcoin terms 70%. And similarly with other altcoins. So you can see, and that's, you know, people have been talking about Ethereum's pump recently. But nevertheless, it's still down off its all-time high. Now you could say, hey, Stefan, well, Bitcoin is down from its all-time high. Okay, fine. Bitcoin's all-time high recently was about 123,000. And as we speak today, what is it, 111,000? Call it 10% down from its high. So while Bitcoin is down from its high maybe 10%, these altcoins are down 60 to 80%. So is this really something you want to hold? Do you really think that holding a decentralized, you know, index or basket of shitcoins is going to be the right play? I don't think so. I think Bitcoin is the play. So here's a pattern. After many years of, you know, being around this space, here's the common pattern you see. They get this initial pump, and then they dump, and then maybe you get some echo pumps, and so on and so forth. That's if you're lucky. If you're lucky enough to get an echo pump. Right, now you could say, hey, Stefan, you can't be serious. That's just your hand-drawn fake chart. Okay, we'll have a look. Ethereum, initial pump, 2017. They had the echo pump in 2021. And now it's having another little echo pump. But nevertheless, it's still down from its all-time high in Bitcoin terms. So we see the same kind of thing play out in various assets, whether it's in property, like physical property that you buy. The price of that is going down in Bitcoin terms. That is the fundamental point that you should take away from today. There's a reason to hold Bitcoin. It's because it's fundamentally going to become money. Now here's Solana. Sol priced in BTC. Similar pattern. Initial pump, and then echo pump. Okay, now Solana kind of ate a bit of Ethereum's lunch, or that's the narrative, let's say. So that's what we've seen. Now what about staking? You'll say, oh look, Stefan, Bitcoin has no yield. I need to have my shitcoin so that I can shitcoin stake. Okay, let's look at the numbers from Ethereum since the merge, which is about 3 years ago. Bitcoin's fiat, this is fiat returns, obviously, US dollar terms. So Bitcoin has returned about 454%, and Ethereum with no staking is 200, and with staking is 240. So it makes like a small difference that you were less bad off, right? So this is like accounting for the compounding, right? Like if you had theoretically had some Ethereum and you had compounded it. Now here's the other thing. A lot of financial institutions and stablecoin issuers are building their own chains anyway. So this again might cut against this kind of utility token thesis for the Ethereum, Solanas, and Trons of the world and other shitcoins, because they're going to these people are building their own stablecoin layers anyway. So, you know, now yeah, you could sort of argue back and forth a little bit, but I think the fundamental point is there's just, you know, altcoins can pump and dump temporarily, but the question is, are they long-run investable, or are you just chasing a quick pump? So just be honest with yourself. Now, to be fair, Bitcoin will also be volatile on the way to full hyper-Bitcoinization, maybe decades away, is how I see it. But there is something interesting. Now, shout out to Giovanni Santastasi as the, let's say, the inventor and explainer of Bitcoin power law. So for people who aren't familiar, power laws are like this mathematical relationship, and we see it in nature, and we see it in the growth of networks. So things like the size of the animal versus how many calories it consumes. The distance of the stars from the sun follows a power law. Networks and cities also tend to grow. They have this power law growth. And so Bitcoin has grown on this power law across 8 orders of magnitude. So there are times it's above the line and below the line, but nevertheless, across 8 orders of magnitude, 0, 10 cents, $1, $10, $100, you know, $1,000, $10,000, $100,000, 8 orders of magnitude, it still followed a similar trajectory, this power trend. So fundamental takeaways, number 1, assess Bitcoin as a money. It's not only a tech platform. Many crypto tokens are more like bus tickets or more like a technology platform, and there's kind of a race to centralization there, as we're seeing with some of these stablecoin issuers issuing their own platforms. So the TAM for Bitcoin is simply so much greater. Think about the big tech giants, whatever, how much they're worth, $1, 2, 3, $4 trillion. Bitcoin's total addressable market is hundreds of trillions of dollars. Quick, you know, side fact, on the power law trajectory, Bitcoin is going to hit around 2045, $10 million per coin, or $200 trillion in market cap. So fundamentally, you have to think, why would people want to hold a token, not merely pay it as fees? So in short, if you want to take a bus ride, buy the bus ticket. But if you want to actually hold and secure money, you've got to hold Bitcoin. So I'll leave you with that. Follow me online, and that's all from me. Thank you.
Stephen, I really love your perspective. It's really good. And do you know what else is really good? I bet some of you see this pen coming, right? Yes, we're going to talk about really good Bitcoin RGB, a crucial technical update that has been reshaping Bitcoin's capabilities. This protocol has brought scalable smart contracts, tokenized assets, and centralized finance directly to Bitcoin without causing network congestion. 接下来我们要讨论的是 RGB Really Good Bitcoin， 一项塑造比特币功能的关键技术。这个协议将可扩展的智慧合约、代币化资产，还有中心化金融直接带入比特币，而不会造成网络融资。Joining us to shed light on this incredible development are Anand Tapatia from Bitcoin Tribe and Federico Tanger from Business. Both of them are actively building on the RGB protocol. Please welcome Anand and Federico. 来自Bitcoin Tribe 的 Anand Tapatia 和来自 Business 的 Federico Tanger 会向我们介绍这一项令人瞩目的项目。欢迎 Anand 跟 Federico。
Hello, everyone. So, today we're here to talk about RGB. For those of you who don't know, RGB is a protocol for tokenization on top of Bitcoin and Lightning Network. So the goal is to bring back the token economy, the stablecoin economy, to bring it back to Bitcoin so that users can fully leverage all the security and the stability of the Bitcoin network. With Bitfinex, we've always been a big believers of RGB. We supported the RGB ecosystem from the very beginning, and over 3 years ago, we also created an internal team that does full-time open source development on RGB. And over the years, we tried to contribute it as much as possible to the ecosystem. And I mean, we came a long way together with all the other companies that work on RGB, that build product on RGB, that contributed to the protocol, that build the tools for developers. We went from something that was a bit more than an idea to something that now is finally started to being adopted by industry leaders in the crypto industry. So yeah, I think one of the biggest signal of traction for RGB is the announcement that just came last night. The Tether is committing to issue USDT natively on RGB. So this is going to be very important because it marks the moment when USDT comes back to Bitcoin. USDT was actually issued initially on Omni layer, so for the first few years, USDT was running on Bitcoin, but then, of course, eventually, over the years, Ethereum, Tron, and the others took over most of the volumes. So with RGB, USDT is going to go back to Bitcoin, and with all the advantages of the Lightning Network, which provides a much better speed and lower latency, lower cost for payments, but also it enables very good trading experience on DEXs on top of Lightning. So yeah, this is going to be great for not only for RGB, but for the whole Bitcoin and Lightning system, as it will bring a lot of volumes of people not only paying, but trading directly on top of Lightning and Bitcoin. Recently, to further boost the development of the ecosystem on RGB, we also created an association that where all the companies that are building on top of RGB or that are trying to contribute to RGB, they all together work together for common goals of open source development and promotion of the ecosystem. And yeah, this is also marks a moment where like more and more companies are recognizing this as a protocol that can truly be the future of Bitcoin finance and of Lightning adoption. So yeah, we'll leave the word to Anand from Bitcoin Tribe that also gonna share like a few announcements regarding the future of RGB adoption.
Thanks, Federico. This is awesome news, Federico. Thanks for taking the stage to announce it. How Tether has come back to Bitcoin, where it started from and where its real home is. I don't know about you guys, but I'm pretty excited. I'm Anand Tapadia from the Bitcoin Tribe team, one of the association members, and I can't wait. So if like me, you guys can't wait either, I have some stuff for you where you can start trying RGB right away. So RGB, Bitcoin, assets on Bitcoin, it's actually a great segue from where Stephen Levera left off and how tokens have real world value and they can be secured on Bitcoin blockchain, the most incorruptible platform humanity has ever seen. It doesn't have to be limited to one type of asset. It can be anything from stable coins to real world assets to digital assets, which don't necessarily have a real world existence. It has Lightning. Also, RGB is not limited to just putting stuff on Bitcoin. It can be smart. So it's basically smart assets on sound money. That's why we are so excited. And we have seen this before. There are a lot of people trying to put real world assets on blockchains, but RGB is way better. That's why it took so long. But finally we are here. It is off chain, so there's absolutely no bloat. It's multi-asset ready. It has obviously Bitcoin native security. It's Lightning compatible and all the good stuff that you would want to associate and all the stuff that was not there before RGB. And it's not just me saying that. We have done a thorough analysis across Bitcoin and non-Bitcoin based asset mechanisms, and we can definitely say that RGB is way better than most of the others out there. It doesn't need an indexer like some of the other protocols might need, and that's why this is because of the client-side validation that it uses. A lot of study behind this. You can grab me, we can catch up, and I can explain more. So this is where Tribe comes in. Tribe is an awesome place where you can, it's the home for RGB assets. You can try out RGB right away. You can issue your own assets. You can send, receive, play around. You can even register and verify right from within the app. A lot of people have been using it already, and the feedback has been really nice. So I would love if you guys want to try it out and come and chat with me or anyone who is wearing this t-shirt about Bitcoin Tribe. We also have a community feature, which is a bit experimental, but it's all, together in one single app. Tribe is not just an app, by the way. It's not just a pretty UI. It is a complete platform from buying, selling, swapping, registering your asset, verification of the asset, self-verification of the asset, wallet SDKs so that it's not just us. Anyone, anywhere can use it, infrastructure tools. It has everything. So we are very excited that years of work for RGB has, resulted into this platform. So we have something for you today. So download the app, try this demo token. It's demo, but it's really worth trying, and you can exchange it with other assets out there. How does this demo work? You just download it, you set up your wallet, and that's it. With a few clicks, you can obviously, it doesn't need a registration or account creation with us. You can simply start using it. All the details are there. Again, privacy focused, low cost, and natively Bitcoin. That's about it. I'm going to leave it to this slide so that you guys can download the app, start playing with it, and enjoy the power of RGB. Thank you.
Welcome back to the Bitcoin Magazine news desk powered by Metaplanet. I am Frank Corver, the political correspondent for Bitcoin Magazine, and I'm joined to my left by Carol Kabat, CEO of Union, Gandalf, CEO of Oro, and the one and only Shinobi, technical and opinion editor for Bitcoin Magazine. Gentlemen, I want to dive right in. We just heard about more building on Bitcoin, more coming to Bitcoin, more maybe from the crypto space, so Tether, something that was more popular on Tron and some of the other blockchains, coming to different L2s, or Tether even coming to Lightning on Bitcoin. Lots of upgrades happening with Bitcoin, lots of things coming to Bitcoin. A little bit of an overview of what you are doing in the Bitcoin space, what you're building on Bitcoin, if you don't mind.
Yeah, exactly. So Union is one of the largest Bitcoin bridges out there. We use zero-knowledge cryptography to ensure that we never take custody of the Bitcoins. So it's a fully self-custodial solution. The entire protocol is enforced by smart contracts and cryptography. And so it's kind of the first unlock to getting Bitcoin out of the blockchain of Bitcoin itself into, let's say, Ethereum, Solana. Right now we operate mainly around Babylon, so we help other chains secure themselves by Bitcoin too. And now we're expanding into the DeFi space with Oro.
So is it a form of, maybe just to clarify a little bit, a form of something along the lines of like a wrapped Bitcoin that you could then use in DeFi on other chains?
Exactly, and the way we wrap that Bitcoin is not by us using a multi-sig or an oracle, but purely by smart contracts.
Understood. Yeah. Okay, excellent. And at Oro, you're building on top of what Union is building, if I'm correct.
Absolutely, yeah.
Okay.
So my background's in the liquid staking space, and the Bitcoin liquid staking has done really, really well. But there are a couple of key challenges that none of the other liquid staking protocols have been able to take on.
Okay.
One of those is fragmented liquidity and interoperability, and the other is sustainable yield.
Okay.
And so Oro is tackling both of those. By building on Union, we're interoperable across all the chains that Union is live on, which is EVM, Cosmos, all the Babylon ones, etc. And as far as the sustainable yield, we've actually tapped into the Bitcoin mining scene, and we're actually capturing a lot of that yield in a liquid manner, which has never been seen before.
If you could clarify a little bit more, so the yield from the Bitcoin mining, how exactly does that work?
Absolutely. So we've got a rent-to-own model that we're working with some of the top mining manufacturers and the mining farms. And essentially, because of our unique relationship with these protocols, we're able to capture the yield without actually expending any of the underlying reserves. So it's fully backed one-to-one, which is what the institutions and the retail investors are wanting. They don't want to give away their Bitcoin. So it's fully liquid, but they're able to capture that yield. And it's essentially the highest yield that Bitcoin's able to provide, and it's paid out in Bitcoin.
Okay. I think part of the story of the financial kind of world developing around Bitcoin, definitely part of the story here at Bitcoin 2025. I just got word we have to head back to the Nakamoto stage. Stick with us. We'll be right back here at the Bitcoin Magazine news desk right after this.
All right. Good morning, everybody. Thank you so much for coming today. My name is Gabe Parker. I do business development at Citria, which is the first ZK rollup on Bitcoin. Previously, before Citria, I was a Bitcoin researcher at Galaxy, or Galaxy Digital. And today, I'm going to be actually kind of putting on my research cap from back in the day, because we're going to be exploring the landscape of real Bitcoin DeFi. So when talking about Bitcoin DeFi, obviously Bitcoin yield is a really critical part. And why is it critical? Is, in my opinion, I think Bitcoin needs a risk-free rate, or something to determine the opportunity cost. So an example of this is like Ethereum and Solana, their risk-free rate is the staking rate. So it's pretty simple, if you want to lend out ETH or SOL, your benchmark is the staking rate, because that's the opportunity cost. Bitcoin doesn't really have that, and I think it would be helpful if Bitcoin did have like a risk-free rate. I think the most important thing, though, when talking about Bitcoin yield is that Bitcoiners need easy ways to stack sats passively. There's currently not many ways to do this at the moment. If there are, the yields are not that high. And it's important to think about, all right, like the yields are not high, we need to make them higher. It's critical because Treasury companies will inevitably just deploy some of their Bitcoin on-chain to kind of be competitive. I'll kind of get into that later. But this bottom chart here is kind of something I want you guys to remember throughout the keynote. This is the total number of Bitcoin in circulation today. And on the bottom, the first column is BTC and Treasury companies, and the second one next to it is BTC used in DeFi. So all you need to know is for Bitcoin being a productive asset, we're still super early. Like 60% of Bitcoin does not move on chain, right? It hasn't moved in the past 3 years. So we're really early, but still really excited, and we have a lot to talk about. So I went into like where, Bitcoin DeFi activity, where does it exist? It's pretty simple. It doesn't exist on Bitcoin, unfortunately. Well, some of it does, but there's about $34.5 billion of Bitcoin that's wrapped and deployed in other ecosystems, mainly Ethereum. And when looking into, what are people doing with wrapped Bitcoin on Ethereum, it's like 85% of it is used as collateral for lending, which makes sense because Bitcoiners don't want to sell their Bitcoin, so they just put Bitcoin as collateral, they borrow cash, and they use the cash to do whatever, right? So Bitcoin-backed lending is the primary use case and biggest market within Bitcoin DeFi right now. But the problem is that nobody borrows Bitcoin, so when you deposit Bitcoin as collateral, you're getting like 0.04% APY. So it's not really for yield. I think it's more for just access to cash. The second most common activity is BTC staking, which actually occurs on Bitcoin layer 1. An example of this is Babylon, right? They have around $6 billion in TVL, and this Bitcoin stays on Bitcoin, which is good, but the issue is the yield is less than 1%. And I think there's some allocators and holders that don't think that's the high enough yield to take on that risk. So yeah, currently it's just important to know that about 1.5% of BTC supply is locked up and deployed in DeFi smart contracts. And yeah, the biggest market is Bitcoin-backed lending, which is my favorite personally. So I kind of mentioned, yeah, some of these yields, Bitcoin, like depositing into a lending pool or staking, you know, those yields aren't high, and that was kind of highlighted in these first two rows. But I wanted to see, okay, where are like the good yields in Bitcoin, right? And before I kind of get into that, sustainability means how long can this yield strategy last for, right? Like I kind of gauged like three plus years. And accessibility means can retail take part, or do you have to be a super wealthy investor, an accredited investor? So if there's, you know, just kind of going down, I'm not going to go through all of them, but like inflationary tokens sold for BTC, this is kind of like, you know, if you've heard of like dual staking, where you stake Bitcoin on a layer 2 and then you get rewarded in the layer 2 token, but they sell it for Bitcoin, and it, you know, yields around 4.5%, right? But it's not sustainable, and but the accessibility is high. Kind of like just going down more, right? Like we get to more like TradFi, off-chain type strategies like covered calls, so like selling call options on your Bitcoin, collecting a premium. You know, this is a great way to earn yield on Bitcoin, actually. But the issue is that it's really hard for retail to get access to this, right? So the takeaway here is that, you know, the really high quality, you know, yield strategies are, unfortunately, they're off-chain, and unfortunately, they are hard to, you know, get access to. And, you know, I think making these high quality yield strategies more accessible on chain was perfect for this treasury wave that I kind of, you know, think will happen sooner than we think, where smaller treasury companies that, you know, there's a huge gap between Strategy and all of the other smaller treasury companies, and these smaller treasury companies need ways to compete with Strategy, right? I'm not saying that Strategy will deploy BTC on chain to get yield, because I think, you know, Saylor, he doesn't need to do that, right? But I think the smaller Bitcoin treasury companies have a lot of incentive to just deploy just a little bit of Bitcoin on chain. So it's important to, those yields I was mentioning earlier, it's important to actually kind of bring that on chain, so we can incentivize them to just, you know, not just do everything off chain like it is today. Yeah, and the smaller treasury companies kind of equal to about like over $1 billion, so it's a lot of capital. Okay, so how do we think about BTC DeFi at Citria? Well, after kind of looking at the landscape, right, I kind of want to go through the strategies first. Like, we want to be the home for Bitcoin-backed lending and Bitcoin structured products. So structured products are basically, you know, vaults essentially, and you deposit Bitcoin, and then an asset manager will kind of run a strategy on it. These are kind of like the two pillars that, you know, we think we can win. And in my opinion, these are the two biggest pillars for, you know, Bitcoin DeFi, but for Bitcoin layer 2s. And for these structured products, which is my favorite, and I'm really excited about them, you know, it's important to make sure they're transparent, right? Like every user knows what strategy is happening, you know, what is the asset manager doing. They need to be safe and conservative, right? Like Bitcoiners really only need 3 to 4% yield in order for it to be, you know, really worth their time, because that you have exposure to Bitcoin already. Getting 3% plus on that is amazing, right? But yeah, like the main goal is just, we want to make institutional grade yield strategies accessible to all. And vaults is actually a great way to do that. And the vaults kind of fall into, as you see, the structured products column. And of course, you know, we'll have BTC vaults and stablecoin vaults, but the main focus is BTC vaults. And an example of a BTC vault would be, you know, we're partnering with a major institution that will run an options vault. So users deposit BTC, and then the asset manager will run covered calls, as I said earlier, and then, you know, the users get this premium as a yield. And the reason why the vaults is innovative is because you as a user actually can't, you know, unless you have $5 million, you KYC, AML, you can't go do these strategies with these asset managers. So what we're kind of figuring out is, with vaults, retail users, pretty much all users, can get access to the high quality yields that big institutions can earn. And for the lending, the lending business is exciting because all this Bitcoin-backed lending happens on Ethereum, which makes no sense to me. It should be on a chain, Citria, that inherits security from Bitcoin, right? Citria and Bitcoin are like two brothers. They are very close. They rely on each other. And I think if you're a true Bitcoiner, you would much rather do that loan activity on a Bitcoin layer 2 secured by Bitcoin than on Ethereum, right? But on top of our lending vertical, we're thinking about like private credit businesses, so miner financing. Miners actually borrow Bitcoin a lot, and we want to just kind of open up that world to on-chain, right? A lot of miners do this off-chain currently, but providing like a private credit market for miners themselves would be great. And the last one is Bitcoin-backed stablecoins. So we have a project called Nectra, actually, which is essentially a protocol where you deposit Bitcoin and then you mint a stablecoin, right? So essentially, the stablecoin you mint, it's a loan, right? That's why it's in the lending category, but it's a loan backed by Bitcoin. That the stablecoin itself is backed by Bitcoin. So yeah, this is kind of how we see Bitcoin DeFi. And as I said earlier, if you can win these two categories of Bitcoin-backed lending and structured products with safe yield, I think you win the whole Bitcoin DeFi and Bitcoin L2 game. So yeah, Bitcoin DeFi is very simple. It's not like Ethereum or Solana. So yeah, and the last thing, where should Bitcoin DeFi exist, right? Like, we know it's coming, so where should it exist? It should not exist on Ethereum. It should not exist on Solana, right? It should exist on a chain that is an extension of Bitcoin, right? Like Citria is a Bitcoin rollup, right? We are an extension of Bitcoin. We post our data to Bitcoin. Bitcoin nodes know everything that's happening on Citria, right? So by default, the transactions inherit security from Bitcoin. And another topic too is that the BTC used on Citria is trust minimized. It's not like Wrap Bitcoin, which is controlled by BitGo and Justin Sun, right? This presentation wasn't about trust minimized Bitcoin, but I highly encourage you guys just to keep it in your mind of like the types of wrapped Bitcoin and the security of each. So right here is our website, citria.xyz. Our Twitter below. The QR code is for our website. And we're currently on testnet right now, and mainnet is going to be in October. So our booth is right over there, behind to the left. So please stop by, get some merch. Thank you guys so much. I hope you learned something today, and I hope you have a good rest of your day. So thank you.
I'm Simon Garovich.
Welcome back to the Bitcoin Magazine News Desk, powered by Metaplanet. We're here at Bitcoin Asia 2025. Things are heating up. People are still filing in. We've had a few main stage talks so far. I'm here joined by a panel. To my left, we have Karel Kabat, CEO of Union. To his left, we have Gandalf, CEO of Oro, and Shinobi, technical editor and opinion editor for Bitcoin Magazine. Shinobi, I want to start with you this time. We just had someone from Citria on stage talking about what's happening on that Bitcoin L2. When you look at a Bitcoin L2 and assess whether it's quality, whether it's something that you might want to engage with or use, what are some of the factors that you consider?
Well, the first two things I look at are the trust model for the end users, and then how native to Bitcoin it is. Like, for instance, a lot of these protocols or layer 2s integrate a lot of tokenomics schemes or secondary non-Bitcoin tokens. I'm not personally very confident that a lot of those incentive structures can prove themselves to remain stable over time. So that is something I kind of rank down a little bit right away. And then the trust model for the end user is the absolute most important part. Like, to me, is the user themselves capable of taking those coins and exiting that layer 2 to the main chain without having to go through any counterparty, any process, or requiring the involvement of any other party? And obviously, in the real world, given the engineering constraints of a system like a blockchain, you're not going to always be able to hit that perfect goal. but that is kind of the target that we should be shooting for.
Okay, appreciate it. We're about to head back to the stage, but I want to get back to you real quick, Gandalf, if you don't mind. We were just talking about some of the work that you're doing on Lightning. If you could give a bit of a recap of what we were talking about off camera there.
Absolutely. So with Oro, because the yield is paid out in Bitcoin and it comes from the Lightning Network, from the miners there, it means we can actually create a completely closed ecosystem there that we accept the Bitcoin, native Bitcoin, and provide a yield-bearing derivative for that asset, and we keep everything on the Lightning Network. And DeFi doesn't exist on Lightning right now. There are some people that are trying to do it, but none of them are able to provide the yield in Bitcoin. They're not able to accept native Bitcoin and actually generate a yield from that, and we're able to do all of that, and that just unlocks a $2 trillion market right now.
Okay.
And there's no competitor. There's nobody doing it.
Okay, appreciate it. Want to go to a final thought from Carol. We have to head back over to the main stage in about 30 seconds. But also, I just wanted to tell you, so you're paying attention to obviously what's happening with Bitcoin, right? But you also have to pay attention to these other chains. How do you assess which other chains you want to deploy your product on?
We go where our products can earn additional revenue for the users. So there's actually a massive difference between the yield that you can find on various chains. And we go by which chains we believe in and which we can generate zero-knowledge proofs for, because we don't want to introduce any counterparty risk. So we mainly go for L1s, which are more secure than most L2s out there right now.
Okay.
And that way, basically for Oro, we keep it secure.
Okay, appreciate that. We're headed back to the Nakamoto stage, everybody, here at Bitcoin Asia 2025. We'll be right back after this.
Before we start, one thing I do want to state is that the opinions of these panelists are their individual opinions. They don't necessarily represent the respective institutions that they hail from. So with that, let's meet our panel. I want to invite you each to tell us a little bit about yourself and then maybe share your one-sentence thesis about what it means, multi-generation Bitcoin, what it means to you.
All right, thank you everybody. I hope everybody's having fun. My name is Pauline and I run strategy over at ChangeNow. It's an instant non-custodial crypto exchange. And been in crypto for 7 years. I work a lot with the retail investors, with the younger generation. And my take on multi-generational Bitcoin is kids and Zoomers and Millennials, it's going to be up to you to build a new layer of intergenerational wealth, because those boomers and those Gen Xers, they're not sharing.
Well said. Gracie?
Hi everyone, I'm Gracie Chen. I'm CEO of BitGet. We are a central exchange and we serve more than 120 million users around the world together with Bitcoin Wallet. That's a decentralized wallet that we have in our ecosystem. So my one-liner for multi-generational Bitcoin is that in our Asian culture, every Chinese New Year, my son, I actually have a 6-year son, and I'm a single mother there. So my son received some red packet. So every year, I just change his red packet fiat, Chinese yuan, Hong Kong D, USD, everything into Bitcoin, and start to store that for him. I think that's a smart activity since I've done it for a few years, and I think everyone should do it.
Love that, making it practical. Thank you. Sagun.
Hey everyone, Sagun here, morning Hong Kong, happy to be here today. Yeah, my background is, I've been since 12 years almost in the Bitcoin space, class of 2013, come from a computer science background, so kind of had the privilege to learn and understand Bitcoin early, got lucky there. Yeah, and I kind of been there in this space, having looked at 3 epochs. So I will try to kind of nuance and share today a little bit from my experience of last 12 years, how each cycle looks from that perspective. My one key line would be that we are in second antibiotics revolution. The first antibiotics elongated human life. That was around 1920s. After a century, here we are. And Bitcoin is a tool that will give humanity a reason to have more babies. So we are finally entering a generation where there won't be a population decline, there will be a population proliferation, because people will finally have the ability to store wealth that will give them the confidence to have families. I think that's one of the biggest problems we're facing today as a generation. Yeah. In the West, a lot more than in Asia, but I think Bitcoin becomes that fundamental inflection point. So when our children look back, they will see Bitcoin as an antibiotic for human population to proliferate.
All right, we are starting out on a bullish note with that. I love it. So let's set the table for this conversation a little bit. You know, a lot of people in the room may already have wills or trusts. So Gun, maybe I'll start with you here. How different is it when you think about sort of traditional estate planning compared to how you have to consider Bitcoin-specific estate planning?
Yeah, I think the most simplest mental model to kind of understand this is we are kind of evolving from the idea of jurisdictions. Mostly previous estate planning and trust planning is tied to a jurisdiction or a country or a state that you live in, and it's governed by those laws. Internet and email changed a lot of borderless communication. Bitcoin brings a very similar kind of borderless wealth transfer and movement. So fundamentally, Bitcoin, if you see the way it is designed technically, it is not tied to a certain jurisdiction. So the whole mental model flips now. You're actually thinking about planning and propagating your wealth, and it's nothing to do with a certain jurisdiction. Yes, there are conversations around people saying that how does one treat Bitcoin in a certain jurisdiction today? But that's just a today problem because we're bridging the old world from the new world. But if you're talking about inheritance 20 years, 30 years, 40 years down the line, I think fundamentally you need to kind of understand and believe that this is one tool that can help you wire your wealth from one generation to the other. And it's borderless, so it's not tied to jurisdiction, so it's not tied to law per se. Yeah, you might want to tie it, but that's just a today problem. I see it that way.
Yeah, go ahead, Gracie.
Actually, I want to address what Sagan said in terms of it's not tied to jurisdiction. On the opposite, I mean, I don't disagree with that, but on the other note is that especially when the SEC approved spot ETF, when lots of institutional money are coming into cryptocurrency, we're not just in a small circle of crypto native people, miners, traders, etc. It's becoming more mainstream. And a lot of people are holding Bitcoin not by holding Bitcoin directly, but by buying, for example, ETF, or by working with exchanges like us to purchase the cryptocurrency. So jurisdiction actually become a very key thing here. Unless you are a self-custodial all your cryptocurrencies, like what Sagan, actually he was sharing his methodology backstage, which I find very fascinating. But I think mainstream and most of the crypto holders can't do that because it just asks you to be very technical and very degen. So my take on that is jurisdiction is very important, and for people like us who want to pass my generation, my Bitcoin to my next generation, I actually need to work with local governments and the local lawyers to set up maybe a will, a trust, and then the problem becomes how to custody those cryptocurrency and how to pass them over when, touch wood, anything bad happened to you. Like you said, we need to talk about death here, although it's a hard topic, but we will die one day in the future. And when you die, you don't have access to a lot of information. And your family doesn't. So how to set up that whole structure to make sure, number one, they know that you have Bitcoin and how much you have, where they are. Number two, how to pass it to them, like legally, technically, everything. So it's a very tedious structure that you need to think about. And there are a lot of different solutions. You can self-custody, you can put it into an exchange, you can maybe leave it in ETF, or you can even put it in a hardware wallet and put it in maybe your HSBC safe box. So there are a lot of ways around this, and I guess that's why I find this topic that I'm invited to speak at very fascinating and very interesting.
Definitely. Yeah, Pauline, please jump in.
Yeah. Before we, I'm going to curb your enthusiasm here a little bit. I do agree with you. I just think that before we start talking about how to preserve your wealth, we need to pay closer attention how to start building that wealth. So I'm a millennial. I'm turning 30 in a couple of months, and I come from a relatively low-income background. And as a lot of millennials, and as a lot of Zoomers, as a lot of people my age, I have not had any opportunity to build a lot of wealth for myself, and I do find that Bitcoin and cryptocurrencies in general are a very good investment asset to start building that wealth for myself. And the problem here is that not a lot of people who Bitcoin is going pretty much to save, to help out in building wealth, are not aware of that. So before we start worrying about self-custody, before we start worrying about passing wealth from generation to generation, and it's going to be a trickle-down situation here, we need to start educating people. We've been doing that a lot in Change now. We need to start educating people that it's easy to start stacking your first sats, and we don't have much time left because we've got these, no shade to Bitcoin treasuries, no shade, maybe a little bit of shade to big name investment firms like BlackRock and like MicroStrategy, because they're hoarding Bitcoin. There's a finite amount of it. And long before you know it, the same thing is going to become to Bitcoin as it's going to become, as it's already become for example, the housing market in the United States, where big name investment firms have pretty much bought up the entire fund of available housing. It is just sitting empty. The same thing, in my opinion, is going to it's going to happen to Bitcoin. And I do think it's very important that we start reaching out to younger people, to demographics that are getting more and more income as millennials are aging, they're getting better jobs, they start making money that they have even after buying Labubus and matcha lattes and avocado toast and iPads and iPhones and everything like that. They have some money left over. We need to motivate them that that money can be put into savings in a very reliable and demonstrably increasing in value wealth.
Yeah. And I want to stay on the topic of education because obviously it's something very important. We talk about it a lot in this space, whether it's Bitcoin 101 education or learning how to set up a hardware wallet. How can we make this really practical? If we were to give the audience a next step to take to whether it's their kids or someone they're mentoring, how do we make this really pragmatic? What's the hands-on next step that people can take with them?
Honestly, I'm still looking for that answer because as someone who's extremely online, I am very deep in public discourse on various issues. And in the West, at the very least in the West, I follow Western discourse as a white person. Right now, the reputation of Bitcoin is that of a Ponzi scheme, that of a scam, that of a casino. And I'm still kind of looking for ways to make it known, again, to those people more of a liberal mindset, right? Less of a libertarian, more of a liberal mindset. How we can kind of still looking for a word, how we can demystify Bitcoin, how we can de-scamify it, and how we can de-Ponzi schemify it in the public eye. And I think I am going to dedicate the next few years of my career working on actually fixing that.
Love that. Thank you. Gracie, I want to go over to you. We've heard the meme in our space, not your keys, not your coins, right? It's a very, very popular one. Do you feel like there's accuracy to that? Do you think there's anything that you want to clarify about when people say that in terms of, is that the only solution? Should we think about diversifying how we custody our Bitcoin stack?
I think about diversification, but also know who you are. Know what's your strength and weakness. So now your key, now your coin is very much attributed to probably the other two panelists who have the very strong opinion around holding their own wallet and their own cryptocurrency. Honestly, I'm running exchange, and we are custodying our users' cryptocurrency a lot. And you probably seen, FTX collapse. There are other exchanges who just went bankrupted, and people lost their cryptocurrency because of that, or maybe lost half of some portion of it. However, if you are holding your own assets, your own keys, you can also lose them. Your hardware wallet can be burned down in a fire. Your software wallet, once you lost that, 12 digits of, 12 words of all the remembering words, then you lost the access to that wallet as well. So there are different ways of losing your assets, even if it's your key and it's your coin. So that's back to my point. You probably want to diversify, or you want to put all your eggs in one basket and make sure you take care of that basket very well. If you want to work with exchanges, you realize you probably you can't or you don't want to self-custody all your wallets. You want to pick up a good one. You want to look at the ranking of all the exchanges and only work with maybe with top 5, top 10 who publish their proof of reserve, who are very transparent about what they hold, and they have Merkle Tree proof of reserve, things like that. That you want to work with only the best ones. And then if you want to buy a hard wallet, don't buy it on Douyin or Taobao. You buy it on the official website of Ledger, for example, because I've seen cases that if they buy it in a third-party website, they just buy a fake one, and they lost their cryptocurrency because of that. So that's my point. Diversification is one way of looking at it, but I would personally more be in the position of put all your eggs in one basket, take care of that basket very well.
Yeah, well said. Sagun, I want to go to you. From just a technology standpoint, there's been a lot of recent developments that I think have been pretty exciting. What's one that you're most excited about that you think a lot of people aren't even aware of yet?
I think to address that, I would also like to kind of highlight what Gracie was, I'll fold in the answer with both the aspects. So we are at a juncture where you won't lose your keys anymore. I mean, even if you did, the technical insurance that comes along with the technology called Miniscript is a standard that a lot of wallets are upgrading to. So you should definitely look out if you're looking at pure Bitcoin in that sense and you have a wallet. You should definitely go back to your wallet provider and check whether are they giving you the Miniscript standard. The reason why I bring this up is because Miniscript gives you an ability to create multiple keys as a signing mechanism, so that if you lose one of your keys, you have the other 2 keys. So example, if I have 3 keys, I can actually use 2 of 3. This has been known as multi-sig in Bitcoin, but Miniscript steps it up from an inheritance standpoint as well, from a backup recovery standpoint as well. So all this news around, having lost my keys and lost my stash is a thing of past already. There are wallet providers that give you an ability to recover, and then there is a multi-jurisdiction setup that you can do for yourself, technically. So you could actually place your keys with certain providers in multiple jurisdictions as well. And in case if you lose it because of a fire or a situation at your home, you still have 2 other keys that are geographically spread out. So you could still go back and recover. So I think we are at a cusp or an inflection point in humanity's term, where Bitcoin will not easily be lost. I think that's a juncture. It is much safer. It won't get hacked if you have the right kind of standards that your wallet is following. So I think one takeaway for all of us here in the audience is to kind of go and check back with your wallet providers whether are they following the miniscript standard or not. And that's very important because we're talking about wealth preservation. If you're talking about passing on this stash to your loved ones, and if you're not doing the respective due diligence on what kind of wallet standard are you following, I think you are doing a disservice to your loved ones in some sense by not being proactive in upgrading to the right kind of wallets that support these standards. And I think this is one technology to look out for. This has been in the works for quite a bit. Yeah. This was launched 2 years back, but wallet providers are just starting to now upgrade to this.
Love that. All right, look up miniscript. That's your homework assignment so far. Pauline, go ahead.
Yeah, actually, thank you so much for bringing that up because I think might have happened to if quite a lot of people in the audience. Back in 2019, I bought my mom some Bitcoin. It was like $300 worth. Back then, like 0.002 or something like that. And I gave her her mobile wallet. I was like, Mom, this is your backup. This is your password. Please don't lose it. A few months pass. I think she changed her phone, like she got herself a new phone, and the backup just, like, she forgot the password. She lost it somewhere. So I still look at that wallet sometimes. There's like 6,000 to 7,000 worth of Bitcoin in there right now. I kind of keep it as a cautionary tale for myself to make sure not to buy my mom any Bitcoin anymore.
That's the lesson, yeah.
So you just jump in right there, right? Like this scenario in 2019, if I do it in 2025 now, and if I had a miniscript back wallet, the beauty is if you watched any of the Pirates of Caribbean movies where they're doing a gold treasure hunt and they have these 2 or 3 keys to open up, right? So when I'm setting it up, it is 3 keys to open up that gold treasure hunt, that gold I can take out. But after 2 years, that same thing can be opened up with just 1 key, not all 3. So it's called contracting multisig. So when I set it up till 24 months, 3 keys can be used. But after 24 months, let's say somebody forgets to whom I've gifted this, I can just use one of the keys that I hold to claw it back. So this is a recovery mechanism that's so beautiful now, that's been put into so many wallets out there. I'm talking technically, it'll be very difficult to lose your keys or your stash, because even if you did, there's a recovery mechanism, very strong recovery mechanisms.
Very exciting. Believe it or not, panel, we are out of time. Thank you so much for this discussion. Audience, hopefully you walk away from this conversation at least beginning to think about this. You know, we never know what's right around the corner. So hopefully that is your encouragement. Thank you so much for being here, and we hope you enjoy the rest of the conference.
Thank you so much.
Thank you.
Welcome back to the Bitcoin Magazine News Desk, powered by MetaPlanet. We're here at Bitcoin Asia 2025. Things warming up on day 2 of the conference. I'm Frank Korver, the political correspondent for Bitcoin Magazine, joined to my left by Alan Helm, co-founder of Bitcoin for Corporations, as well as Joachim Buch, the managing editor and Bitcoin therapist at Bitcoin Magazine. Alan, I want to go over to you first. We had the Bitcoin for Corporations Symposium yesterday. Please give us a bit of a recap for that. I think you're going to be talking a little bit about it on your panel today, so please give us a little introduction to what we might be able to look forward to a little bit later in the day.
Yeah, for sure. Thanks, Frank. So we had our Bitcoin for Corporations Symposium yesterday, where we brought together 40 of our members who are all focused on accelerating corporate Bitcoin adoption. So it's a mix of Bitcoin accretive companies or treasury companies, and then some of the vendors and providers that are helping not only educate these individuals, but provide the platforms and tools. And so it was a full day of networking. We had our own programming that was hyper-focused on the financial engineering side. And all around good vibes. I mean, the history here in this region as it pertains to Bitcoin, you know, is very closely tied to mining and energy, and, you know, even the individual retail component. And so I think, you know, naturally the financialization of Bitcoin coming here has been super, super exciting. But beyond that, yeah, we're having another panel later today, being joined by my peers, Matt Cole of Strive, Gurpreet from Kraken Institutional, and then Andrew Webley from the Smarter Web Co. Awesome. So We're going to cover everything from you know, Bitcoin treasuries and how to value them, some of the KPIs that are being tossed around like MNAV, you know, BTC torque, BTC yield, but then the intangibles, right? Like how do you, you know, pick a financial engineering team, you know, people who have access to capital markets and that sort of thing. So it'll be exciting.
Appreciate that, Alan. Thank you for the overview. Over to you, Joachim. I know we're going back to the main stage in just a second, but just a quick thought on what it's like in your role. You're the managing editor of Bitcoin Magazine. Bitcoin touches everything. It touches energy, it touches finance, touches all this. How do you wrap your head around all these articles coming your way and, you know, just enough to at least have enough of a grasp to make sure that what we're putting out is the highest quality content possible?
It's impossible. We have to be experts in absolutely everything. We start out somewhere, and all of a sudden, like yesterday I get a question about energy grids, right? They now have to know a bunch of things about how electricity flows and how grids operate in different countries. We really have to look at so many. Bitcoin is wonderful in that sense that it really touches on technology and cypherpunky ideals and computer science and economics and money and energy and
therapy and
price therapy, psychology. We really need the therapy. Yeah, given what you said, like we have all these amazing companies buying vacuuming up every Bitcoin there is on the planet, right? And still the price is doing nothing's happening. Like let's go home, guys. Like what is happening? Like I need therapy here. Like somebody needs to help me understand what the hell's going on.
And what we're joking about is Joachim has recently been writing price prediction reports where, you know, a lot of us are wondering what is happening. We talked about this yesterday. We're hearing all this bullish news, right? Companies are buying, nation states are buying all this kind of stuff, but the price goes down. You know, it's still a market. There's buyers and sellers, and we talked about this earlier. Not everybody completely understands Bitcoin. To some people, it's still a speculative asset, right?
Yeah, for sure.
And to that point, we do plenty of, you know, price pieces for that reason. We keep people updated on why things are happening. But anyway, we're headed back over to the Nakamoto stage, ladies and gentlemen. Stay tuned with us here at Bitcoin Asia 2025. We'll be right back after this.
Morning. First of all, I know it's Chinese Valentine's Day, so I really appreciate people for showing up so early. My name is Jason Fang. I am the founder and managing partner for Sora Ventures. We're the early backers of Metaplanet, as well as Moon Inc. in Hong Kong, as well as DV8 in Thailand, and most recently BitPlanet, or SGA in South Korea. So today we have a very special panel here because whereas I think a lot of people know that there are a lot of digital asset treasury plays in the US, Asia presents to be one of the most challenging, difficult markets to really work on. And today we have some of these top leaders who are dealing with these unique challenges in their own jurisdictions, and very excited to learn more from them. So why don't I start off with Japan, and then Hong Kong, and then Thailand. Well, it would be great if you guys can make an intro about yourself.
All right. Good morning, everyone. My name is Viro from Remix Point. We are a JPX listed company. We do treasury of Bitcoin. And also, we not only treasury company in Japan, we have an electricity business and also like a storage battery businesses as well. So we've been working a lot of things in Japan as a treasury, and also like bringing a lot of like Web2 people to like, you know, in this space as well. So I'm so excited to speak with you guys here. Thank you.
Great. John Riggins. I'm the CEO of Moon Inc., a publicly listed company here in Hong Kong. I actually spent the last 10 years of my career with BTC Inc., who's putting on this conference. And so it's just really exciting to see how large this has gotten, how significant it's gotten, and how important Hong Kong is becoming as a connector of East and West, and really a thoroughfare for the Bitcoin economy here.
Awesome. I'm Kip from Cliff Capital. We're a hedge fund based out of Bangkok. We have recently joined hands with the TXO, Sora Ventures, and we have started the first ever micro-strategy of Thailand, Metaplanet of Thailand, the first Bitcoin treasury for the Thai Lisco. Before this, we have been looking into this sector, and we have been exploring ways on how we can find capital efficiency in our jurisdiction for these type of companies and creating that competitive advantage to strive in the global markets. Thank you.
Yeah, so obviously we know so much about Michael Saylor and his work on building MicroStrategy in the early days, but only have we seen similar strategies starting from last year. And my God, has the industry grew so fast. I mean, I think as of right now, we have definitely seen way more than what we expected in the last 12 months in terms of public companies adopting Bitcoin as kind of the standard. But every country has kind of the unique narrative. Why don't we start with Japan here? Obviously, I mean, we're the early backers of MetaPlanet, so we know quite well about Japan, but would love to kind of hear your opinion on what have you guys learned building kind of like the second MetaPlanet in the Japanese market?
All right, so I think when it comes to Japanese market, it's pretty unique compared to the other markets because of regulation. When it comes to tax, basically crypto is like a progressive tax, so you gotta pay up to 55% if you have like capital gain as a crypto. So as you know, like people don't want to pay that much like tax when it comes to crypto. Like MetaPlanet and also like Remix Point, what we are building is like, we have a treasury. And so tax rate for stocks are basically 20% in Japan. So that means like a lot of like stock trader and then crypto trader can hold treasury company stocks instead of having crypto. Because as you know, like a lot of like treasury company hold a BTC, once they acquire more BTC, the stock price is going up. So our market is like really depending on the depending on the regulation now. And then also we are like sleeping giant. This is Hazib from Dragonfly mentioned at the WebEx 3 days ago, because we have like only the 5% of individual investors are investing in crypto. And also our GDP is almost same as Germany and India. We have a huge potential in Japan, and also at the WebEx, our Prime Minister and the Minister of Finance, they mentioned a lot of things about the crypto. So I hope you guys are going to find more potential in Japan. Yes.
And my understanding is you guys are actually the second public company in Japan on the Tokyo Stock Exchange to announce a Bitcoin treasury play, correct?
Yes.
And they're also one of the few out there that are very local Japanese. So MetaPlanet, we have a lot of international investors. You guys have predominantly local Japanese.
Yeah, and definitely the MetaPlanet opened up the like big market in Japan. Because once you open up the X in Japan, a lot of people post only in Japanese. And then once like MetaPlanet has like a lot of the activities, I can see a lot of Japanese people react. Even like not people in the crypto space, people who own the like more stock market and like this industry too. Yeah.
Yeah, very interesting. Similarly, for Hong Kong, Moon is, I think, the second public company that has kind of publicly announced that they would start buying Bitcoin and getting Bitcoin involved on the balance sheet, a more aggressive strategy. What is unique about, I guess, John, from your perspective, because you've been in Bitcoin for, what, 10 plus years. What is unique that really captured attention about building that narrative in Hong Kong?
Yeah, well, I spent the first few years of that in China, in Shanghai, when China was really kind of the center for all trading activity around Bitcoin, all mining activity and infrastructure around Bitcoin. And so, I started really understanding how important China was long-term for Bitcoin's development, the community, and then just the talent here. And, things have really developed in different ways over the last 10 years. So when we participated with Jason in the MetaPlanet investment a year ago, we started thinking, okay, what's kind of the next most important market to look at in terms of how Bitcoin is going to shape a capital market with a lot of potential demand for kind of this new kind of vision for what Bitcoin is going to do for commerce. So when we started looking at places to go, we thought, hey, Greater China is the most important place to be long term. And we were very deliberate in looking at companies to work with, potentially to acquire, and ended up acquiring 1723, listed on the Hong Kong Stock Exchange, very much because of the sector, the industry that it's in. It's a prepaid products company, historically in the telecommunications space, with SIM cards, prepaid vouchers, and we really saw a lot of potential for Bitcoin to be kind of injected as a business line that could transform the company to really be forward-thinking for how Bitcoin is transforming commerce around the world. So that was kind of one of the main focuses for us. And we just launched a prepaid Bitcoin card that you can find at our booth. I'm really excited about kind of the Bitcoin, the additional Bitcoin business that we can bring to a legacy company in Hong Kong that's been operating here for 30 plus years. So that was kind of a main thing. And then the idea for Bitcoin on the balance sheet, we just want to prepare the company to be successful long term. And so having Bitcoin as a treasury asset is something that we have been focused on and are interested in acquiring more Bitcoin to shore up that balance sheet long term. But Hong Kong's an interesting market for a few different reasons. Looked like you were about to say something.
Yeah, so a lot of people probably don't know about this, but there are a lot of public companies in Hong Kong that are usually for sale. The category that is most popular for sale, to my understanding, is constructions. So you can buy a construction shell for relatively cheap. In fact, I think much cheaper than what we acquire at Moon Inc. But Moon Inc. is crucial in the sense that we're looking at this, to my understanding, from a business perspective, something that's quite unique when it comes to building a Bitcoin treasury play compared to the US or in Europe. John, can you share a bit more on kind of like how that is relevant to building kind of the vision on kind of the future kind of strategy model, leveraging the existing business that you guys have right now?
Totally. It's vital in Hong Kong and something that we're really excited about what we can do with this company that's been operating here for 30 plus years. We already have a good retail distribution network in Hong Kong. And so adding a Bitcoin product is something that we think there is demand for in the marketplace. In addition to there being demand in the marketplace for a publicly listed company in Hong Kong that can give you some exposure to Bitcoin and kind of the development of that economy. And so one thing that we've also done over the past few months since we acquired 1723, now Moon Inc., is look at how we can expand that business into other parts of Asia. So that's why it's really important to gather in person at events like this and kind of meet the people who are forward thinking from other markets. And the first market that we decided to enter with an investment was Thailand, partly because of Kit, but also because there's a lot of trade between Thailand and Hong Kong. We think it's a good fit for our existing SIM card products and for this Bitcoin product that we can launch to really have a product that is used all over Asia and can be a great kind of corporate partnership for another company that's focused on building a treasury business, but also a Bitcoin business. So that's been a key part of the strategy for sure.
Great. And then speaking of Thailand, out of all the places we've seen, obviously U.S. is by far the most saturated, and then we've seen a good amount in Japan when it comes to Asia. But Thailand, I don't think there's a lot, right? And so I'd love to learn from Kip, what is the narrative there? What drives kind of the Bitcoin adoption there in a place that historically, relative to other places like Japan and historically hasn't had that big of an impact? What's interesting about Thailand? What drives the market today that's different from years ago?
I think if you look at Thailand in terms of DATs, there are many different ways in which one can acquire exposure to Bitcoin. And having that exposure, but the logistic of getting into an exposure are two different things. You can actually go out and buy Bitcoin, having it on your wallets, or you can choose to buy a Bitcoin proxy like the DAT that we were creating, right? The logistic is very different. In Thailand, if you look at the capital markets breakdown, we're actually dominated by retails versus institutions. And institution, they usually buy and hold, whereas retail, they trade. So if you have a logistic that is supporting the act of trading, then you have a far better product than buying Bitcoin outright and having to deal with a difficult logistics. For example, if you go to an exchange in Thailand today and you want to buy Bitcoin, first thing is digital finance literacy. You have to understand all that full package of custody, what Bitcoin is, what blockchain, and so forth. It is a really difficult task. Second, when you deal with exchanges, you have to prepay your money. You got to transfer your money first, and you buy later, right? That's a lot of friction in terms of logistics. For stocks, Thai retail have been trading stocks for many, many decades. Stocks in Thailand is post-paid. You buy stocks first, you pay later, T+2. If you buy your stocks and you sell it today, you don't have to pay anything because it's self-intraday settlement. So now you see people, retail who tends to trade more than buying and hold or betting long term, they actually fit the product category of how DAT is offering and classifying itself in Thailand. It is a different asset class. It is a Bitcoin proxy. The logistics is different. The exposure is different. So I think that narrative is what going to be the key driver of Bitcoin Treasury. That's the first angle. The second angle is more of having a comprehensive value chain. Right now, we have a lot of exchanges, really successful exchanges. One of the top exchanges that is performing very well in the whole of Asia Pacific. But exchanges are in the business of facilitating transactions. And you need to create a company that promotes asset building. And that is how you create a healthy ecosystem. You have a company that, money comes and go, asset comes and go, that is exchanges, transaction, promotion type of, vehicle. And if you bundle that with an asset company, I think the whole value chain in Thailand will be comprehensive. There will be much more attraction of talent. There'll be a lot more companies coming to Thailand to want to utilize this healthy ecosystem, having the liquidity there through the exchange and also the asset base. This is similar to why a lot of DeFis, they're looking at TVLs as one of the key benchmark on, looking at how healthy a DeFi companies are. I think DAT, the size of DAT in a country, also kind of represent, the TVL on DeFi chains and how that would, signal a healthy ecosystem going forward.
And I also kind of realized that, what's really interesting about Thailand is because of how early it is in this strategy, Deviate was actually one of the most international deal that's been done in the last decade. We had I think 8 international players invested in a Thai stock. We haven't seen that in 10 plus years, and because of that, we attracted a lot of attention. And one of them is we had the chance to meet with the ex-Prime Minister of Thailand. Can you also share a bit more on why is it interesting for why is this interesting for Thailand? What does that signal to maybe a lot of players out there? Can we probably foresee more DAT plays coming to Thailand?
Sure. So I think Thailand is a unique place in terms of creating DATs. We have such a unique, great ecosystem for Bitcoin to foster. We have great exchanges. We have a progressive policies and also framework to support the whole ecosystem. We have asset management license issued. We have custody license issued. We have exchanges, broker dealers. We have all the license that is required to make a healthy industry grow. I think the only issue is how do we get more government involvement in the space? And one of the key friction in getting the government to be involved is Bitcoin and an asset is very radical in terms of how an incremental type of government would interact with such an asset. You can do things too drastic, too radical. Having, for example, if Thailand wants to create financial inclusion through having strategic reserve, asking the government and emerging market governments to come together and agree on using the government money to start a strategic reserve is really burdensome. And because it's such a burden to do that, you can actually use DAT that is run by a LISCO to be the beginning of such an action. For example, a quasi-government entities like the government pension funds or the social security funds, they don't have to change any mandates to buy DATs versus having to buy cryptocurrency. When government-related entities have to buy cryptocurrencies, of course, they need to be changing the charters, and changing a charter would require significant votes, significant efforts, significant feasibility studies, and also there's a lot of friction coming along with the opposition party, right? Sometimes it's not about buying the crypto itself, sometimes it's just the politics at play, and the opposition just want to block you, right? So when you try to minimize the logistic of having to change the mandate and DAT being under this vehicle of a listco, Thailand is able to move much faster in getting the government involved in these type of assets. And these type of assets would allow the country to have such a great financial inclusion and would foster such a great value chain throughout the whole Thailand. I think another key area to highlight is, if you look at Southeast Asia, TradFi is the place where Singapore has dominated already, but digital finance is still up for grab. And I think if governments in Southeast Asia, they are able to move fast enough to foster the ecosystem or the blockchain economy, I'm sure that race will come, and having frictionless interaction with the whole industry using DAT, I think that's one of the best way to kickstart things and the best way to go.
Very interesting. We're going to come back to Japan because I know this is one of the hottest markets in Asia to be doing any form of digital asset treasury plays right now. So obviously you guys are one of the leaders in Japan, and what's really interesting about that is we're probably seeing a lot more public companies adopting the Bitcoin standard every week.
Yeah.
How are you guys looking at this? How are you guys differentiating yourself from obviously big players like Metaplanet, but also a lot of these new players who are just slowly learning from you guys and slowly kind of building that Bitcoin stack on their balance sheet?
Yep. So I can see a lot of treasury company starting every single week. And then what we're doing as let me explain is a little bit different from Metaplanet, because we've been electricity company. So like I mentioned, we've been treasury, but also we're looking for more synergies to involve Bitcoin as an ecosystem. So what we are building is like I said, electricity. So when it comes to electricity for Bitcoin, mining, a lot of things are related to electricity. So we are not doing treasury, but also we're in the process of doing mining and also doing validator system as well. Because our electricity is, as you know, maybe Japan, the price for electricity is not stable. During the daytime, sustainable energy creates more electricity, solars and windmill. These things create more energy. So that means we can get electricity price much cheaper than the night. And also we are developing more storage battery, which can hold electricity to do mining at the night as well. So as a limit point, we want to do more mining services and validators, which related to electricity in the Bitcoin and crypto space. And then building a business related to Bitcoin. And then also our CEO, Tashiro, he's also CEO of Bitpoint, which is also exchange in Japan. So when it comes to treasury, as you know, we hold a lot of BTC. That means they have a lot of risk of hacking. And it's pretty dangerous to, just show we have over 1,200 BTC. And as we know for sure that if you don't have a key, that's no coin. So we're using custody as well. But in the future, our knowledge of Tashiro, and then want to find a way how we can hold a crypto and also try to educate the other treasury company how to hold BTC by themselves and then building by myself as well. Yep.
Very interesting. Okay, I'm going to ask everyone the last question about regulation, because regulation is actually one of the biggest difference between doing a Bitcoin treasury play in Asia versus Europe and the US. For example, in the US, if you want to just buy Bitcoin on your balance sheet, you basically have the freedom to do whatever you want. In the EU, for example, EU is unique in the sense that there are many entry points to working with regulators. So for example, if the French regulators, they don't allow you to do certain things, you could go to Luxembourg. Luxembourg is generally kind of the place where they're a lot more lean in terms of opening up to a new innovation and ideas. But in Asia, if you're doing a Bitcoin treasury play in Japan, you're only working with the Japanese regulators. You can't, there's no other route. If they don't like you, you're done, right? So it's very different. That mentality when you're entering doing a Bitcoin treasury play in Asia is very different. But out of all the places in Asia, Japan is by far the leading, which is very interesting. People who've been in the industry for a long time will know that Japan was one of the first countries that adopted Bitcoin, exchanges. And then during DeFi and a lot of stuff that was happening, the last couple of years, they kind of died down, right? And then government also introduced this insane tax on people who have digital asset. A lot of my friends who are Japanese, because of that, they moved out of Japan, right? And now we're seeing it come back again, where for the first time, Japan is leading a big part in our industry, but this time also in Bitcoin. So I want to learn from you guys, which is, what do you foresee from a regular perspective the next couple of months or next couple of years? Is Japan going to continue to be very bullish on this Bitcoin treasury play, or do you think there's going to be more regulation coming in?
So I think we're going to be more like be active in the treasury space, because like I can see a lot of companies, even though they have no idea about the BTC, are like seeking the opportunity how to get the BTC and also like making the their stock prices going up as well. So I think definitely more institutional, like I mentioned, like it's be like sleeping giant. I see a lot of company who does have no idea about crypto. Like 90% of like individual investors hasn't done anything like crypto space investment as well. So I see like a lot of education in Japan as well. Like my friends like building like more BTC like education contents and also like having some like offline meeting as well. So I see it used to be more community people came into this space, like to know what Bitcoin is, how they can use a Bitcoin as an asset. But now I see more like enterprises, institutional people come to like our like education classes as well. So that means like more like big asset is gonna moving to crypto space, especially BTC. So we're pretty bullish for it.
And I know Japan is actually relative. Everything this year is relative, guys. So relative to all the other countries out there, I know when you're running public companies in Japan, usually the communication with regulators is a lot more transparent, right?
Yep.
And so what are you guys doing to kind of help them understand what you guys are building?
So as a limit point, I think we're not, like I said, we're not doing treasury. That means like also like we are involving more like company in Japan doing treasury as well. Because if we just do treasury, that means like it's pretty tough for a lot of like Web2 company to understand what treasury is like. But like I mentioned, electricity business is really has a lot of synergy with BTC. So that means people from like these like Web2 sites slowly to understand what Bitcoin is like. Even like not only the treasury side, it's also like a mining. This is how Bitcoin was born, and how Bitcoin is like mined as well. So this activity hopefully help a lot of people in Japan to understand treasury and then making more like this market is like more hyped. Yeah.
Great. I was just told that we're gonna finish up. But I want to ask John this last question, which is the regulators as well, because we're in Hong Kong and obviously there's a lot of these public companies coming out. So maybe a couple sentences, can you kind of brief on what is your take on regulators doing kind of these DAT plays right now?
Yeah, maybe a couple of quick things. So, I think from a regulator perspective, a public company holding Bitcoin is really one of the safest ways for retail and institutional investors to get exposure to kind of the development of Bitcoin. Over the short term and over the long term. We're audited. There are clear guidelines for how we can raise funds and operate as a public company here. The Hong Kong Stock Exchange runs one of the most respected public markets in the world, partly because they look after minority shareholder interests so intensely. So that's one thing that we've definitely experienced at Moon is kind of that focus on minority shareholders and clear guidelines for how all companies here operate. I think that what we saw with Metaplanet in Japan and the volume and liquidity that kind of that forward-looking approach brought to the Tokyo Stock Exchange and is bringing to other stock exchanges around the world is kind of a nice example of the demand that exists for Bitcoin exposure in a public markets vehicle. And I think that that's something that is going to trend in a positive direction in every market around the world. We think that the Greater China market is the biggest market that exists, and that's why we're here. But incredibly bullish on kind of the development of regulation for Bitcoin exposure in public markets everywhere.
All right. If you guys want to learn more about Moon, I think they have a booth there as well. You guys have a booth?
We don't have a booth here.
Okay, maybe next year then. Same with Thailand. I don't think you guys have a booth, right?
No, we don't have it yet.
All right.
Not yet.
Thank you so much for your time. Again, thank you so much for joining us. And then you guys want to learn more about them, you can find them after the panel. Thank you.
Thank you.
back at the Bitcoin Magazine News Desk presented by MetaPlanet, joined once again by an all-star panel as we unpack all that's happening here at Bitcoin Asia 2025. We've got Alan Helm, co-founder of Bitcoin for Corporations, Alexander Lizet, director of Bitcoin strategy at Capital B, and Pauline Chandit of Change Now. All right, so the big story here, obviously, fiat currencies collapsing globally, down 99% against Bitcoin, but the conversation emerging about how that will impact the world. We're seeing institutions adopt Treasury companies exploding. We've got 300 entities in 30 countries owning more than 1 million BTC. Behind the scenes, we had a little debate around the adoption and how it's unfolding. So over to Alan, how would you assuage the concerns of maybe folks like Pauline who see Bitcoin in the hands of institutions as a negative thing?
Yeah, so maybe to give a little bit more context, what we were discussing was around, how should retail be looking at these Bitcoin treasury companies versus just holding the core asset, Bitcoin itself? And, here at Bitcoin for Corporations, we're hyper-focused on talking to these institutions, not so much retail. But if I were speaking to somebody at retail, it's like, hey, we do know that the best and hardest and most scarcest asset in the world is Bitcoin. You should hold Bitcoin. Don't prioritize some of these Bitcoin treasury companies. But if you have a risk appetite and you do want to diversify out, what financial tools you want to look at? Treasury bills, bonds, those are all junk. The S&P 500, other indices like gold, silver, Bitcoin's far outperformed that, right? So if you want to go forward with a, Bitcoin treasury company and you have some risk appetite, it's not the worst thing in the world. I think ultimately, I look at things in a very positive light. We have tons of now unlocked institutional capital, trillions of dollars, that have been waiting for, 4, 5, 6, 7 years to get into the game. I mean, Fidelity's been one of the pioneers.
Yeah, 2013, 14, yeah.
For a long time. And so now you see bigger players in the game like TD Securities, Cohen. You have Cantor Fitzgerald that are underwriting, 21, Nakamoto, and just some of these really large entities that want to do massive plays.
BSTR, we'll have Adam Back, CEO, later on the stage.
Which will be exciting because he's backing my friend over here, Alex.
I'll throw it over to Alex. So it sounds like Alan's saying buy Bitcoin, then buy Bitcoin treasury companies. As the director of Bitcoin strategy at the best performing stock in Europe, is that you agree?
Look, Bitcoin is the best asset on earth, and it makes sense for everyone to own it, including individuals, corporations, institutions. And at the end of the day, corporate adoption and institutional adoption is as well the same type of adoption as individuals, because corporations are made up of individuals, institutions are regrouping individuals. And at the end of the day, is more power to the Bitcoin network in all the ways. Corporate Bitcoin adoption is putting Bitcoin-type exposure into the hands of more people. More employees are being introduced to Bitcoin. More institutions are being introduced to Bitcoin. And at the end of the day, you have more Bitcoin custodians around the world. And that makes a better place for options for Bitcoiners themselves that now have thousands of options to custody Bitcoin, transfer Bitcoin, and that's at the end of the day more freedom for everyone. So all of this, in my view, is positive for the Bitcoin network. It's adoption at a higher level, and at the end of the day, if you doubt that this is positive, it's because you might be not bullish enough on Bitcoin, because Bitcoin is for your enemies. So if you don't like institutions, you would want them to adopt Bitcoin because that gives you also more power.
Pauline, corporations are people too, right? Yeah.
I mean, why don't we feel a little bad about corporations? Poor little meow meow corporations, right? So, look, I'm not going to say that, first of all, I'm bullish on Bitcoin. I'm not as bullish on institutional adoption because of, like, a variety of reasons. I do think that as somebody who works close with retail, I do think that corporations and institutions adopting Bitcoin is going to be increasing trust for the retail. It's going to legitimize Bitcoin as an asset investment class, right? And I don't think that it's necessarily bad. But at the same time, as somebody who I run strategy over Change Now, it's an instant crypto exchange, right? And we work with retail very closely. So like we're B2C and then we're B2B2C, right? And I would much rather prioritize educating people on stacking sats and avoiding Bitcoin custodians if at all possible. So right now crypto was meant to be as a way for people to achieve financial freedom. And that that has always meant, by Satoshi Nakamoto's vision, always meant disconnecting from banks, disconnecting from governance, disconnecting from big players. It was supposed to be banking the unbanked and unbanking the banked. And that was supposed to be like a very big consensus. And now the bigger investment firms, no shade to them, just for the record, right? They are buying in, they are stockpiling Bitcoin, they are in the short term, of course, making it seem like, again, legitimizing Bitcoin, increasing adoption, and that's okay. But if we look at the traditional finance market, if we look at the financial crisis of 2008, if we look at the current situation with BlackRock having bought up all of the real estate in, for example, Arizona and in a lot of places in the United States, you can see that people can, especially the younger generation, I'm a millennial, younger generation cannot buy themselves a home because BlackRock has bought them all and they're renting them out at a premium. And it's just the United States. If we look everywhere else in the world, especially in the countries with developing economies, countries with authoritarian government regimes, Bitcoin is oftentimes left as the only more or less reliable and pretty demonstrably valuable investment option for them. And I guess my message here for anybody listening, for younger people, is prioritize Bitcoin as your investment. Obviously, it's not financial advice, just for the record, right? Always do your own research. But I'm stacking sats, and so should everybody who is interested in building their own wealth, who has suffered from boomers not sharing any of their amassed accumulated wealth with them. And if institutions like you guys are going to help me as somebody who works with retail, are going to help me encourage more people to buy Bitcoin, encourage more people to stack sats, then I'm cool with you.
Okay. Alexander, maybe over for a quick rebuttal before our break. The doomsday scenario here: institutions buy up Bitcoin, drive up prices, retail gets priced out. You're not worried about that?
Look, the main function of Bitcoin is to preserve your purchasing power over time and to grow it. And the way to grow your purchasing power over time is both the fixed supply of Bitcoin and more demand for Bitcoin. And in this sense, when institutions can buy up real estate in some type of region in the world, well, you don't necessarily benefit yourself. But if institutions and corporations are buying up more Bitcoin, if you own Bitcoin, well, you benefit anywhere you are in the world. And that's extremely positive for Bitcoin. That's extremely positive for putting more economic power into the Bitcoin network. And that's extremely positive for everyday workers that have worked all of their lives and that can preserve the value of their time and the value of their work over time. And so that's extremely positive, and that shows that now Bitcoin is the only asset that individuals, corporations, institutions do not want to sell. And that is for a reason. It's because it's the best asset on earth. And at Capital B, we have, of course, decided to adopt a Bitcoin standard, and we look at Bitcoin as the standard of value, and we denominate all of our financial performance based on our capacity to increase Bitcoin per share. And we believe that by giving access to Bitcoin through an indirect exposure with a security on capital markets, we can also provide exposure to Bitcoin and to the preservation of value of the work of everyday people through a security that many people can access while they have difficulties to access Bitcoin itself. And at the same time, Bitcoin Treasury company provides the ability to keep buying Bitcoin for you over time, while you cannot necessarily. And so if you don't have more salary coming in, but a Bitcoin Treasury company is providing you with more sats per share over time, well, that's an additional value that goes with an additional risk. Of course, there is a risk into a financial institution, there is a risk into a security of a corporation, but look, no pain, no gain. And the pain is that you might endure a significant drawdown if the Bitcoin price goes down, and the Bitcoin treasury is a form of leverage play for an investor. But it might also go up much higher, and that's what we've done. We've done plus 1,000% over 1 year, while Bitcoin is up plus 100%. And so you would say, like, yes, there is risk. There was like a minus 50% drawdown over the last 3 months. But for investors that have a long-term time horizon, the Bitcoin treasury company is just the best risk-adjusted way to outperform Bitcoin. And yes, it's held through a traditional financial instrument, which is a security. But at the end of the day, everyday people own securities. And I would say that if they don't own securities, they might as well need to learn about securities, because that's exactly what people with huge financial power do. And if you want to go towards more power in society, you want to maybe take inspiration from people that have more power in the society.
Well, of course, debate alive and well here at Bitcoin Asia 2025. Stay tuned on X, Rumble, and YouTube. We'll be back after these messages.
I'm Simon Garovich, president of Metaplanet. The global financial system is broken. Where can you build long-term value when every system is stacked against you? A year ago, we were running a struggling hotel company in Japan. So we flipped the model. We made Bitcoin our core reserve asset. Everything we do flows into a single goal: increasing Bitcoin per share. Today, we've become Asia's leading Bitcoin treasury company and the top performing listed equity in the world. Now, most companies fear volatility, but we harness it. Very few companies globally are compounding value at this pace and at this scale, and we have no intention of taking our foot off the gas. We believe we can redefine the market from the ground up. And our goal is to become the most held stock in Japan.
I've got a dear friend. He spoke on the stage before, Simon from Metaplanet, and I asked him, what's the hardest problem? And he goes, honestly, we're running out of Bitcoin.
That's the Bitcoin effect, and this is just the beginning.
It's Bitcoin Bitcoin Asia 2025, day 2 close to wrapping up, but still so much more in store. You're going to hear from BSTR CEO and Hashcash inventor Adam Back, Matt Cole, CEO of Strive, and it all leads to Eric Trump, Executive Vice President of the Trump Organization. You just watched a debate about the institutionalization of Bitcoin. Here to continue it, we've got an all-star panel again. We've got Alexander Lazay, Director of Bitcoin Strategy at Capital B, Alan Helm, co-founder of Bitcoin for Corporations, and JP Richardson, CEO at Exodus. So, JP, you missed a pretty spirited debate. We had Pauline from Change Now here making the rallying cry that we shouldn't be going to retail and talking to them about Bitcoin treasury companies. They should be stacking sats and saving in this great technology without the risk associated with some of these securities. Where do you fall on the spectrum of this?
Look, I share the view as we build a self-custodial wallet, right? So that's our business, is to help consumers actually stack sats in an easy and convenient way. And so that's my general view, but I also understand that for some consumers out there, they may not want to actually go through the hassle of actually buying Bitcoin directly, and they may want to diversify or go buy these assets like the ETFs or treasury companies themselves through their brokerage, and I totally understand that.
Alex, over to you. We were talking behind the stage about incentives, right? Bitcoin is an incentive system. It's open source, open protocol powered by incentives. Largely we've eschewed alternative assets, right? This idea that other cryptocurrencies might compete with buying Bitcoin, and now we have new retail investors. They're looking at buying Bitcoin, and they have more choice. They could buy iBit, they could buy Bitcoin itself, or they could buy a share maybe of your company. So maybe take us into the thought process there. Do you disagree that the incentives here are changed?
In my view, we are so early in terms of Bitcoin adoption and in terms of institutional adoption of Bitcoin that we can have this internal debate about what is the best solution for people to get exposure to Bitcoin, but still 95% of the population is not still exposed to any of those options. And I would say that basically all of those options can be a best way to protect your financial freedom than any other options like real estate or gold or even worse, of course, fiat. So I think that overall the message is the same. It's just that when you are then in Bitcoin and you consider that Bitcoin is literally money and everything else is like a monopoly bill, then, well, yes, you have options. And yeah, you can start with Bitcoin and then you can look at different options that fit well and better your portfolio. And at the end of the day, when your standard is Bitcoin, then you look at ways to outperform Bitcoin. And the way to outperform Bitcoin, in our view, is the Bitcoin Treasury company. And more specifically, a Bitcoin Treasury company that is focused on accruing value to its shareholders with the increase of Bitcoin per share. And you have thousands of companies that have Bitcoin on the balance sheet, but very few have a dedicated strategy and a laser eyes focused on the integration of capital markets at scale. We have hundreds of trillions of dollars of capital in capital markets, and those are not exposed to Bitcoin at all. And those investors have literally a mandate to buy securities. And so there is not even a question about whether it's Bitcoin itself or a security. It is a security. 90% of capital in the world is a security. And so it's not even a debate. And so you have, for individuals, a different set of course, trade-offs. I would like to remind risks of Bitcoin treasury companies. If you invest in a Bitcoin treasury company, you cannot have a time horizon that is lower than Bitcoin. Or if you have, then maybe you are a professional trader and that's fine. And you might make amazing gains and beat the market and so on. But I would say that for 99% of people, it's kind of the same as Bitcoin. You just build your conviction and then you stack sats or you stack treasury stacks and you continue and you have conviction and you wait. And I think the last pullback that we've had in terms of treasury sector has been very healthy because it's testing the convictions of investors and it's differentiating companies that keep executing. And over time, people will make the difference between opportunists and fundamentalists that are convicted into the Bitcoin Treasury company pure playbook as a strategy, Metaplanet, and what we've done at Capital B.
Alan, over to you. There's something that Alex said I wanted to zone in on, this idea of Bitcoin per share, these new kind of exotic financial metrics that are being put forward. Can you explain Bitcoin per share and the companies that are trying to increase this metric and how it benefits investors?
Yeah, for sure. Well, let's first zoom out a little bit. So one thing I did want to comment on from the last conversation is that, like, hey, you know, Bitcoin holistically has been looked at as a grassroots movement, predominantly driven by retail. Retail's carried us from $0 per Bitcoin to $100,000 per Bitcoin, right? And with the new influx of interest on the institutional side, Bitcoin has transcended from being this grassroots movement to really being the black hole, right? I mean, we have JP here at Exodus, who has a retail-focused product. They're a publicly traded company. They have, what, $200 million worth of Bitcoin on the balance sheet, roughly, right? So they're really looking at all angles here. And if we're zooming out even further, right, I think the entire derivatives market is, what, $4 quadrillion? Bitcoin's at 2.5 trillion. Yeah, so there's, you know, humans are not very good at looking at scale in the long term, and there is tons of untapped capital that's going to come into the market. And ultimately, what we're looking at is this transition from, you know, Wall Street to Orange Street. Maybe that's not the best analogy to use, but it's not going to be this destructive implosion of the current financial order and the current financial system, because who really still has the power at the end of the day? It's the money printer and the governments, right? So I think what they're signaling is capitulation to realizing, like, hey, Bitcoin is the strongest asset. It's not going anywhere. It's not just this magic internet money. It's like, actually, hey, if we want to preserve our purchasing power, right, let's put Bitcoin on the balance sheet. So we come to Bitcoin per share, right? I think it's a new metric for shareholders to look at in terms of how to value the company, right? I mean, ultimately, what these companies are doing is they're tapping into the infinite money glitch by, you know, going into the ATM, the equities market, to issue new shares forward. And when you're diluting those shares, right, ultimately the main metric you want to look at is how much Bitcoin is represented per share that's out in the market, right? So it's this delicate balance that you want to keep in flux. And I mean, you guys, with Adam back and everything, have kind of mastered that metric altogether.
Well, JP, over to your thoughts on this metric. You're running a public company. Do you think about Bitcoin per share?
Not at all. No, we don't. We think about just stacking sats for the sake of stacking or protecting our wealth. That's how we think about it. Because we earn revenue in Bitcoin. We pay our salaries in Bitcoin. We live, breathe, and sleep Bitcoin every single day. And so for us, it's a tool to protect wealth. It was never intended to do something on behalf of shareholders. It was just a tool to protect wealth. And so no, we don't communicate it in terms of Bitcoin per share, and we don't actually think about it in that metric. Now, that's not to say, and we've never actually taken on debt to acquire Bitcoin. All of the Bitcoin we've acquired has been either through organic means.
Alex, your thoughts on this? We've got a public company CEO here in the U.S. saying he's not thinking about Bitcoin per share. His shareholders may be earning more Bitcoin through investing in the company.
Hey, look, it's a market and a free market, and everyone is here to do its own strategy. I do believe that if you believe in Bitcoin, then the only metric that counts for a company is Bitcoin per share. At the end of the day. But I do understand that different companies have different strategies. And at the end of the day, I mean, if you have $200 million of Bitcoin on the balance sheet, you are doing something good in some aspect. The only thing I would say is it's not because you have a successful P&L that you cannot have a successful balance sheet. And I would say that a successful balance sheet is the one with Bitcoin, which you have. But I would say that most successful balance sheet is the one that is optimized to, over time, different time horizons, of course, can be adjusted, but over time to increase this number of Bitcoin per share, because at the end of the day, if you are on a Bitcoin standard and you don't increase Bitcoin per share, it means that you are reducing Bitcoin per share, or maybe you are not tracking it, but that's ultimately the only metric for Bitcoiners to analyze if the stock has given them more accretion over time. And so I think it's just maybe a matter of steps. Maybe it's good to be on a Bitcoin standard first, and over time, when it makes sense, to see how to improve that Bitcoin per share. And maybe it's because you have certain investments to make on the business, and you expect that by doing this investment, you might even outperform some type of balance sheet strategy. We just think that independent of the P&L investments, it should have a look as a business towards the pure balance sheet strategy in terms of increasing that Bitcoin per share. And it can be external to the P&L strategy with a strategy in capital markets to raise capital aside from the P&L. And look, at the end of the day, if you do a capital market strategy on the balance sheet, you might as well raise more capital for your P&L. And so at the end of the day, increasing Bitcoin per share is not necessarily contradictory with growing a P&L.
Yeah, JP, if you don't mind me kind of digging in there, what I like of and what resonates with me with what Alex is saying is, if we're Bitcoiners, we're denominating Bitcoin, right? So if I'm investing in a stock, shouldn't I want to know that I benefited in Bitcoin terms?
Yeah, absolutely. Like, look, I think everything you said is valid. But again, the way that we think about it is that Bitcoin is a tool for us to protect the wealth of our balance sheet. That's just simply what it is. And so when investors look at Exodus, they shouldn't be looking at us at purely just a treasury company. We were never intended to be a treasury company. We've been stacking sats since 2015. We've been paying our salaries in Bitcoin since 2015. So if you are a Bitcoin investor and you want to, and you're looking at all of your options, the reason you would consider Exodus, because like this company, Exodus, believes in Bitcoin and lives in Bitcoin. Let me ask you this. I'm going to ask a provocative question. How many Bitcoin treasury companies are paying their salaries in Bitcoin? How many are actually...
Alex, Capital B, are you getting a salary in Bitcoin?
Look, the business of Capital B is to get more Bitcoin on the balance sheet. And so paying salaries in Bitcoin, I think it's more a technical question than a strategy question. And I think it would make sense over time to do that. It's just that you can use Bitcoin as a payment mean. But the financial infrastructure is built historically on fiat. And at the end of the day, if you pay salaries in fiat, you get potentially, at the end, more Bitcoin on your balance sheet. So maybe it makes sense as well to use just Bitcoin as a payment means. But in this case, then I would buy more Bitcoin just to pay the salary. But I would not use the Bitcoin that is there for the long-term balance sheet. And then, in my view, it's more a question of the banks integrating those tools for the businesses overall, to be able to just use Bitcoin as well as a payment means. It might be that for you it's a bit different because you are Bitcoin native business, and so in this way you have your internal tools to do it. I would say that, frankly, for any company it should be the standard. Bitcoin is money, and that includes the store of value, and that includes the means of payment. At some point in time, we just prioritize the store of value, and then it will make sense to pay employees in Bitcoin. But we have a traditional operational business, and people also expect some fiat payment because they have fiat bills as well. And so you need to adapt to your own situation, and I think it's absolutely great that you are doing that on a Bitcoin standard as well.
I was going to say, I'll tell you, one of the great things about it is when we pay salaries in Bitcoin, there's people, it separates the true believers from those that are not. So when we say to work at Exodus, you have to accept a salary in Bitcoin, we only get the true believers, and that's what's so great about it.
Only a few minutes winding down here. If you're enjoying the conversation on YouTube, X, or Rumble, feel free to hit that like, smash that subscribe button, or leave a comment. Want to zoom out here because while we're having some debates about how companies should run on a Bitcoin standard, of course, a majority of the business world, not paying attention and not allocating. So zooming out, Alan, bringing you into the conversation again. As you're looking towards the end of this year, what kind of milestones do you expect to see? We've talked about strategy, Michael Saylor, maybe even being included in the S&P 500, Bitcoin exposure in one of the largest indexes. What's the forecast that you see?
Yeah, it's a very interesting question. Maybe to tie in one more comment with Alexandre and JP here with their conversation. What's particularly interesting here to me is what you guys are talking about really is investor relations and public relations support. And that's really what Bitcoin for Corporations is trying to hone in on, right? It's the different flavors of corporate Bitcoin adoption. What works for Capital B is different than what works for Exodus. And even from a jurisdictional level, right? Like essentially you're working within the frameworks, rules, and laws of your area. So I think, zooming out and just looking at like, hey, where are things going to be, what, in a year time frame, 5
End
years,
of the year?
10 years?
Well, we might be entering the cycle soon,
Right. Well, I mean, let's look at everything that's just happened over the course of 2025, right? I mean, we've had 11, 12, 13 changes in rules and regulations that have allowed...
And Strategic Reserve Genius Act has come so fast, right? It's hard to keep track.
We've had MiCA come online in the EU. FCA in the UK has also started to pass some favorable legislation. We've got VASPs here in Hong Kong that will hopefully allow some of these entities to run the accretive playbook. But I think ultimately, I mean, the real signal here, right, is like, if you're a CFO, if you're a CEO, and you've got excess cash on the balance sheet, right, do you want to allocate that to Treasury bills, this melting fiat ice cube? Or do you want to take 1%, 2%, 3% and place some of that on the balance sheet, right? Not everybody needs to be a capital B in a Bitcoin accretive company. But I think what will happen at the end of the year, right, is we're going to continue to see an influx from the, 172 or 192 companies that hold Bitcoin on the Treasury balance sheet.
I think it's over 300 now.
Over 300 now, which is incredible, right? So, I mean, to have another 50 come on before the end of the year, I think that's...
So conservative. Where's the bullishness? JP, your forecast for the end of the year, I'm sure you're expecting some fireworks, right? This bull market's not over?
Oh, it's not over. I mean, look, I've been asked this question a lot. Like, are we in a super cycle? That's what I get to ask this question all the time. And look, I think, I don't know if we're in a super cycle or not, but the one thing I will say that's very different is that institutions and governments are here, right? And they are stacking sats. So I think, at least within the next 2 years, I think that we do see the United States stacking sats. So that's what's going to happen.
Alex, your quick thoughts before we go to the main stage.
In my view, it's not really necessary for governments to stack Bitcoin, for Bitcoin to succeed and to just have massive adoption. In fact, it might even be better that they stack later on so that we can have more Bitcoin. And overall, look, the US government, the only asset they don't want to sell, even if they don't acquire, is Bitcoin. And so that provides a massive signal for everyone, and that's extremely bullish, of course. And I think just want to remind that it's only still a very small proportion of corporations, of individuals that still have access to Bitcoin. And we have also a responsibility, I think, every time to remind of the core principles of Bitcoin and the long-term perspective of it. I see even in Bitcoin Treasury, it might be some type of criticism you would have is some short-termism that you could observe in terms of the investor base that is expecting like 1 month or 3 months profit. And I would say that it's a more long-term arbitrage play where you are getting access to capital markets and you enter the traditional finance and you are literally resetting the terms of what capital raising looks like. When you speak with institutions at the first stance, they talk about discounts and they talk about how to give better terms to investors, institutional investors. And then when you are in the Bitcoin Treasury world, you look at premiums and you look at how to create value for your retail base. And I think there is a new category of investors that is forming, which is like the ex-Bitcoin savvy investor that is literally doing the analysis and the work that is now on the table of major institutions now. And an observation is that now the reports I see that institutions are reading when it comes to creating roadshows for Bitcoin Treasury companies is literally analysis done on X by anonymous analysts. And that is just showing how early we are, because institutions are getting now the information that we had 9 months ago. And so it seems like this cycle of adoption is just beginning, and we have 5-10 years to go in terms of just getting 30 to 50% of adoption of Bitcoin at institutional scale.
Of course, so much more to come here. It's Bitcoin Asia 2025. Stay tuned. We're headed back to the main stage.
But really probably wasn't the best structure out there given the underlying collateral. So for some of these lenders, they were going high LTVs, let's say 80% LTV, but they were collateralizing an asset that can drop down in price in a very significant way very quickly. So we saw basically a 70% drawdown in ASIC prices over the year, and a lot of these lending books just blew up as a result. And so moving forward, I think it's crucial that we think a bit more about the cap structure, a bit collateral, about covenants, and really approach debt in a more sustainable way that has longevity to it.
100% agreed. I mean, we saw some of the studies done on these ASICs where people were paying north of $10,000 for an S19 when the actual cost of manufacturing it was around that time around $1,800. And this really, when you back something that is so despaired because of market conditions, you know, credit risk happens, and you can really end up in a situation where your entire credit is at risk. So
do miners want more infrastructure-backed lending or Bitcoin-backed lending? Obviously, you deal with this a lot in your...
Yeah, so at Alpha, we do actually both together because there is a very high correlation between the two assets. But in general, the market shifting more and more towards Bitcoin. Bitcoin in general is more liquid. But usually at the same time, securing Bitcoin with those miners is not sufficient to secure the whole exposure of the mining operations. So at Ant Alpha, we took a very different approach, which is more of a collaboration with the miner, where we take security over the machines, the Bitcoin, potentially the sites, and maybe other sites and assets, and we will basically keep the funding costs at minimum. The goal is for the miner to do well and to scale, and not be able, and not to force the miner to be selling Bitcoin over time, because it's really negative convexity game. And a lot of miners get caught with leverage and with those kind of exposures because they put all their assets, everything at stake, and then, as gentlemen mentioned, one market move, they wipe out the whole operation and the hard work. So in a nutshell, Bitcoin, of course, is more attractive because it's more liquid and there is more market depth. The ASIC machines it's a private market, it's not publicly traded, and only few miners deal with it, and it has even higher volatility than Bitcoin. So it's a combination, and you have to understand how to underwrite that risk.
Ethan, do you think that miners want to give their Bitcoin for collateral or their ASICs?
I think it depends what you're looking at. So if you go to one of these large public mining companies that have a lot of Bitcoin, for them it might be the best use of capital to deploy that BTC as a way to basically borrow at a much cheaper rate than they otherwise could. And so for them, maybe borrowing with Bitcoin as collateral makes sense. But really, there's this whole group of miners out there that don't have a big balance sheet in Bitcoin, and all they have is infrastructure, or even worse, a dream to buy infrastructure. So those clients, obviously, they're looking for infrastructure-backed loans, whether it's ASICs or some of the other electrical infrastructure on site. The always dynamic that we struggle with when we look at providing credit to miners is a lot of the miners that want debt are not the miners that you should be giving debt to. And so, like, how do you rationally think through that, help miners grow, and not necessarily bend because they just want debt?
And do you see the same thing?
I see this exact same thing. I mean, I think that using debt as a way to grow is very advantageous during a bull market, but then using equity when markets are depressed, you're giving up a lot of upside. And yeah, I agree with Ethan.
Outside of Ant Alpha, who are the groups that are funding miners right now?
Well, we see a lot more participants now, especially from typical companies where financing more like market makers and funds and higher net worth individuals are getting to the space. And you see actually even now more banks in the US and others are getting more comfortable to extend the credit to miners, but usually through intermediaries as well, not directly, because again, underwriting the risk of miners and sites are very, it's its own unique business. But at the same time, again, we're talking about very different market segments. The middle, like the small and the medium-sized miners still don't have easy access to capital in general. The large ones now have a spectrum of access to capital, whether it's equity or banks or other financing firms.
Yes, Ethan, when you think about the types of miners that are out there, what do you think are, or the financiers that are out there, what are some of the struggles that financiers have to think about, like, that are new to mining that don't exist in other markets? So for example, like, we have this metric of hash price, right? Like, and you have to be like, well, it's not just Bitcoin price. It's also this like weird hash rate thing that adjusts every 2 weeks. Like, why do you think that it's been difficult to get more people to finance miners?
Yeah, I think that there's a few components, but they can all be worked through. So we often say, okay, it's hard to forecast Bitcoin price, which is true, but it's also hard to forecast oil price, and yet there's markets there and there's debt providers there. So really these challenges can be solved. It's just a matter of like how long it takes to get there, hand-holding institutions and lenders through the process, educating them, explaining a difficulty adjustment to a lender is obviously a challenging topic, but one that you can eventually get through. But really, from our view, is that we need more tools to basically de-risk these lenders. And so things like hash rate derivatives in which a miner can lock in the revenue for what they're generating for a period of time, de-risk the revenue side of their P&L. And then energy derivative also can de-risk the operational side, and you can start to get a lot more visibility into what cash flows could look like. You still take on the operational risk. You know, a tornado could hit the facility or a down transformer, but you really kind of strip out the market risk, and that can make lenders like much more comfortable coming in and providing capital at a very attractive cost.
Do you think that there is do you think that there's more demand from the smaller and medium-sized miners, and like how can they get more like out of financiers? Like what can they do to help explain what their operations are?
The problem is that small and medium-sized miners don't have as much access. They don't have access to capital markets, and so large miners historically have been able to go to at the market and actually raise billions of dollars for expanding their mining operations. And that's just not something that's available for small miners that want to grow their fleets and potentially invest into more efficient miners and be able to expand to maybe sites that have lower cost per kilowatt hour, better energy, which is the 70% of your OPEX. And so I think you just don't have the same opportunities as large miners, and I believe this is why we're seeing this large consolidation within the Bitcoin mining industry, where I foresee in the next 5 years we're going to have probably 3 very large miners, and then we're going to have more nation states adopting and setting up Bitcoin mines for their own Bitcoin mining at home. That's my thought.
And just to add one point here, the flip side as well for the large miners now, they're becoming also big. They have a lot of cost and operations, and they have now, there is equity and they have debt, they have credit lines, they have very high costs, and underwriting them become much harder. So even for small and medium size, it's very straightforward when you know how to do it. You have the machines, you have the Bitcoin, the hash rate. But the big ones now are selling hash rates. They need insurance. They have a few hundred people. So even for company like Alpha, extending risk or credit to the large ones now, it's becoming also a lot more complex exercise.
And a lot of them are going into AI, right? So do you stick just with Bitcoin miners, or are you also thinking about infrastructure for AI?
No, actually, we are expanding our operations because Alpha is more supply chain underwriting risk management platform. So we are looking now into GPUs, into data centers, and beyond. And our goal, we only launch the products into mainstream when we have sufficient demand and supply and liquidity. And we are focused now on the underwriting process for those aspects, yeah.
Miners shift into AI, Ethan, good or bad?
Good for some, bad for most.
Why?
Well, you got to chase the market. So if the market's giving you high multiples on AI, like what we're seeing happen in the stock price of companies like TeraWulf and Core Scientific, like it's your responsibility to go chase those opportunities. And they naturally have expertise in building out power, which is the crucial component of building, large scale and dealing with hyperscalers or neoclouds. But the tail end is going to basically chase that without the expertise, because they're incentivized to go chase these multiples, but they don't have the expertise to really add value. I think they're going to get caught in kind of the no man's land area, end up maybe spending foolish money, and then really not making an impact in the sector. So I think miners should be thinking about it, but really only entering when they feel like they actually have value to add into the space.
on the backside of that, though, you do have a lot of large miners pivoting out of Bitcoin mining into HPC AI, and that's actually good for the remaining miners because we're going to see difficulty grow at a much slower pace, and a lot of the biggest push for actually getting more hash rate online is power. That's the main barrier. And you're seeing power becoming more and more difficult to acquire, at least in large sums in one specific location. And historically, a lot of people started off building Bitcoin mines, 5 megawatts, 10 megawatts here, and then you have a terrible mining operation when you're having to fix and repair ASICs and pull hash boards out. So I think it's a good thing that we're having this pivot into HPC AI. I mean, we're seeing the entire industry shift in that direction, and I think it's good for the rest of the miners that are going to continue to push and get hash rate online.
But not all of them will win that shift to HPC AI. So to your point, I sit on the board of TerraWolf, which is a Bitcoin mining company that also does AI, and their team and experience makes them super successful at it, right? So they have 25 plus years in the energy business. And there are things that happen as you're shifting from Bitcoin mining to HPC AI that you don't even think about. Like cybersecurity becomes even more of a risk. The build out is much more expensive. It requires very different things. And so I think a lot of the miners are used to this like really gritty setup, right? Like you do everything you can to get online as fast as you possibly can, because that's how you make money. The AI shift is a very different process, right? It's a little bit more thoughtful. It's a little bit more thoughtful on like the build, but people on the finance side feel more comfortable on backing the AI side. And so you see some of these larger deals happen for AI/mining companies. And so I think that's why you're seeing this shift happen. I'm excited to see which ones won't be able to make the shift, because I think it's much more difficult to do in practice than it is to talk about on an earnings call.
Yeah. Every business model is good on PowerPoint and Excel, right?
Every business model is good on PowerPoint and Excel.
Well, you have about $30 million per megawatt versus, in the United States, between $250,000 to $500,000 per megawatt. And you have miners chasing cheaper build-out costs all over the world, going to Ethiopia, going to Paraguay in order to get those costs lowered down to around $100,000 per megawatt. And you have tier 0 data centers that are being built by Bitcoin miners, because the Bitcoin network does not care if you have the most beautiful, sophisticated data center. It only cares about, how much hash rate you're pushing into the network. So developing a tier 1, tier 2, tier 3 data center is not in the expertise of a lot of these large Bitcoin miners, but they're doing the pivot.
Yeah, it really, really, really grinds my gears when people say it's an easy switch. Like, it is not an easy switch, and anyone that says that is like a huge red flag for me. Okay, shifting topics a little bit. So historically, many like hash rate tokenizations and like DeFi mining products have failed, right? So we saw these hash rate tokens on FTX. We see decentralized lending desk, but like these traditional structured products, like for example what NYDIG has built, TradeFi-like structures has really attracted miners. Why do you think centralized TradeFi structured products succeeded when on-chain DeFi products have not? Is it a regulatory comfort issue, or do miners are they preferring long-term partners over these, obviously no one would prefer SBF at this point, but like, over these, pseudonym pools of liquidity?
Yeah, I mean, just from our experience, miners at the end of the day, they want very stable expected costs and cash flow management. So that's why they come to CeFi, because they can have like longer term financing solutions. They understand basically their projections and cash flow, and easier. From what I have seen from DeFi, it's mostly about liquidity and pricing, and the uncertainty of those components that didn't allow the DeFi projects to scale. But we see a lot more efforts now in the space where I think DeFi still have hope actually to offer better solutions. But again, we see most of the demand is now and continue to be on the CeFi side.
For me, it's a function of just keeping it as simple as possible. I spent the past 3 years trying to onboard big pubcos onto hash rate derivatives, so I've been in a lot of these pitches. Like, you might only have 30 minutes with a stakeholder to present to them why they should use a derivative product, how they're going to use it. If you now need to introduce the concept of DeFi and smart contracts and understanding that to what is a traditional CFO, you're probably going to lose them in that 30 minutes. They then, if you get through that stage, they now need to present to their auditors, to their public shareholders eventually, and to various stakeholders. And so really, to me, getting miners involved in hash rate derivatives and otherwise really is just about simplicity and a good UX, right? Like, can you make the user experience good? They don't care whether it's settled on a blockchain and on L1 or, you know, on a paper contract. They just care that they can get low cost of capital for their financing and find a way to hedge. And really, every other consideration is secondary for them.
Couldn't agree more. I mean, we're facing some very large miners right now, and having somebody that is accountable, I think that's one of the biggest benefits to working with a company like Luxor, like Antalpha, like Omnis, is that you know who you're working and who you're facing, and it's not this anonymous kind of DeFi structure. I think the reason that a lot of these tokens have failed in the past, whether it was from Poolin, whether it was the FTX futures, is because it was primarily focused towards retail. And retail had, they weren't as sophisticated, and they didn't have the ability to actually verify the hash rate that was pegged to these tokens. And so what we're doing is we're actually creating these tokens for accredited investors and sophisticated investors that want exposure to Bitcoin mining, but don't want the headache of purchasing ASICs and having repairs, sending your miners from Finland to Dubai for repair because they shut down a repair site, and all of these other, whether it's infrastructure or PPAs, they just want the exposure to Bitcoin mining, and they want somebody that they can face, proper custody, you know, whether it's Anchorage or Fidelity, proper tax structuring, you know, working with Deloitte, proper lawyers, delivering a proper PPM, and creating a bank-grade product. Whereas in the past, it's really just been a very fling thing where you are pushing this product to market, you're advertising to retail, and you're trying to onboard as many people, and then you just print tokens that are supposed to be backed by real hash rate, but in theory they're not, and all of the token holders are left holding that bag.
No, I just want to add also, mining community are very innovative, and they deal with a lot of operational and treasury issues. So when you work with a counterparty, reputable one, like with Antalpha, we are constantly working with the miners. They might have operational issues, they might have to refinance, they might not be able to make payment this month because of XYZ. But when you have the right framework and you work very closely with them, they appreciate that, and they are very sticky clients, and they know you are there for them in bear market and up market, and this relationship is very valuable.
That's a really good point. As a lender, you have a little bit more flexibility around risk, right? And risk management from an operations standpoint. To the point that you made earlier, Ethan, there can be a transformer that blows up, right? Which then adjusts like the cash flow of that company and their ability to pay back. There could be something crazy that happens at, like, you know, a big storm that takes out a site and they don't have a backup site. When you're lending, you have a little bit more ownership around flexibility, right? But when you're building products on top of operations, things become a bit more difficult to manage risk. So Ethan, you've been doing this for a long time and you work with a bunch of different miners. How do you manage the risk on building something on top of operations across multiple counterparties?
Yeah, I think it is one of the hardest questions, which you have also been part of for the past few years. So it's a fun problem to solve, though.
This is the secret sauce. Don't tell her that.
So I guess maybe just rewinding a bit, like I've been trying to build hash rate derivatives since 2018. It took a long time to get there and still a long ways to go. But in kind of 2020, we started conceptualizing this idea of hash price. How do we think about the revenue that a Bitcoin miner generates? And we ultimately listed an index on hash rate index. And really that formed the basis of these derivative contracts where we could think about providing these solutions that maybe are not even physically delivered, right? We could cash settle the value of the compute. So when you look at traditional industries like oil, most of the oil futures and derivatives do not physically trade, right? Like nobody wants to take a barrel of oil into their garage or into their trading desk in Chicago. They want to just basically bet on the price of oil. And so a lot of when we think about these operational risks is really just kind of abstracting it to really what matters, which is the revenue that you're generating. And so from our product's perspective, if a miner is using our hash rate derivatives hedging their revenue, if their operations are down but the instrument's cash settled, they can continue to settle that in a cash way. If it's our physically delivered product, they can always top up based on the cash settlement. So I think that was a big unlock for us on how we get comfortable with the operational side.
And then how do you manage risk for your clients?
So Ethan, Luxor works with lots of different types of miners of all sizes. Pretty much anybody that is able to log in, create an account, and go through your KYB and create, I believe, what's the ID called?
So for our forward contracts, it's like qualified market participants. But yeah, for our pool, yeah, KYB, yes. AML.
So we do the exact same thing. However, we're actually working with the largest miners in order to actually reduce our risk. Large miners have north of 50 exahash, 40 exahash, 30 exahash, which is very different from when you're creating a financial product backed by Bitcoin hash rate. If you're working with a miner who has 500 petahash and they're trying to sell you 500 petahash, well, that's probably going to end up poorly. But when you're working with a miner that has a significant fleet and maybe they're scattered throughout different data centers, 100 megawatts, 100 megawatts, for them to sell you forward 3 exahash is significantly less risk. And then we're able to work with different partners and aggregate all of that hash rate, structure and distribute it to our financial products. And we're essentially able to reduce risk because we're assigning credit to every single miner, but we don't take the credit risk long term. So instead of like traditional forwards contracts where I believe you guys are paying out the entire term, you're paying the miner forward 6-12 months, we actually pay month to month. And some miners like this, some don't, but they know that they're going to earn a specific amount of Bitcoin over the course of 12 or 24 months rather than
What happens if hash rate skyrockets? I think one of the hardest things when you do hash rate derivatives or any type of hash rate future market is you're not only underwriting Bitcoin price, you're underwriting like the difficulty rate adjustment with hash rate. So with the difficulty adjustment at every 2 weeks, how do you get comfortable making those payments on like a 6-month basis?
Yeah, so we just work with long term. So on our platform, we have between 1, 2, 3, and 4-year contracts. For the financial products, they're 48-month terms. And so when we're actually purchasing hash rate from a large miner, we're deciding and are contracting a specific amount of hash rate for a specific amount of time. And it's a lot easier to do it over the course of a long period of time rather than short term. When you're doing 30-day contracts, you have 2 difficulty adjustments, and it becomes a lot more difficult. But over a long period of time, you're essentially working with the miner to determine what do you believe difficulty is going to increase by over the course of the next 12 months, and you essentially find a happy medium that you're willing to pay for and they're willing to sell at.
We found the opposite, so maybe we can debate this topic. Like, we definitely see more market interest in shorter duration. Similar to in Bitcoin derivatives, the further you go out, the smaller the book is, right? The liquidity is not that large outside of 12 months. And for us, like market participants have a hard time thinking about, okay, what's happening post-halving, right? Like, what do mining economics look like then? And so we've seen the vast majority of liquidity kind of in that 6-month range. I think the miners really want something that's closer to 12 months as a way to kind of de-risk their initial investment. But it's a function of finding that market liquidity and ultimately getting a price that they're comfortable with, engaging with for those longer duration contracts.
And at Ant Alpha, we are in a bit different market business of financing, but we take very different approach because we work with our strategic partners like Bitmean, and we like to underwrite the whole process. So we like to see the whole cycle from purchasing the machines to installing them to the sites. We underwrite the whole process from day 1 to day 2. We offer the financing in the life cycle of actually deploying the mining machines. We underwrite the legal compliance risk. We have our engineers go on the site to be sure the electricity, the supply, the cost. We underwrite all the contracts are live, the whole supply chain. And this is where then we go big on the financing and on the rates. So, but we like to underwrite that life cycle of the machines. And then we work with our miners to refinance those machines, to buy new machines, and to continue growing with them. But what gentlemen here working on is a lot more complex as well, because they are actually managing that complexity is difficult risk, but we are slightly in different market.
But your complexity is on the underwriting, right? So the team that you need to underwrite is so much bigger, right, than like a traditional market. I had the same experience. In my previous role, I underwrote about 400 million of minor finance. Luckily, had 0 defaults, which was a great thing during that time frame. But the reason why I believe we had 0 defaults was not, because like we saw something great that no one else did. It's because the diligence with the team that we had was so important. We had people on the operations side, we had people on traditional finance side, we had people on the mining side. It allowed us to really think about things from a holistic perspective, and something that one person saw, someone else didn't see, and you were able to like really mitigate the risk appropriately. I would say like we didn't write more things than we wrote, because there were so many things that popped up that we were like, hey, that actually doesn't feel right? Like you're going to get that wrong. And it felt really, really good when other people that we didn't underwrite ended up having issues, because it was like, oh, we saw that and, great, we won. But so it is a really hard business to underwrite. And it goes to like, the team that you have and how you can do things. I think, when we think about teams generally, right? Miners, on the other side, were run by generalist teams in the past, and it was a lot of finance, it was a lot of operations, and then we saw mining companies grow a little bit where energy became so important to have as part of your team. Going forward, do you think that every miner will need an in-house power desk, and will there be hash rate trading desks in-house, or do you think this will be outsourced?
I think we go back to a lot of things we mentioned earlier. I think it's going to depend on the size of the miner. There will be a lot of consolidation, as Emmanuel mentioned. I think the large miners, they are going to end up looking like more of a boutique energy hedge funds, because the main job for them is to source cheap electricity and put all the products around it to manage the risk. And this is the future of the mining firms. And whether you call it AI or mining or pivoting, it's going to be literally hedge fund energy companies. And the smaller ones, they're going to be even consolidated, or they manage to be, operating in their current capacity. But very hard for the small ones to expand the teams and be more complex.
I like that theme. Energy and hash price hedge funds. I'll add in. Yeah. I think it's the 2 most critical aspects to the mining operation from a P&L perspective. So yeah, absolutely. I think the large mining companies, they have the balance sheet to go and have that in-house, and they should, right? You should have that technicalities and those people with that expertise on your team. For the small teams that are, smaller scale mining, let's say something, south of 50 megawatts, justifying like a few $100,000 salary for this might not make sense at that scale. And so that might be where they work with like a trading desk that has a few specialized people on hash price and energy trading that can service dozens of companies at once, rather than necessarily like wearing that cost on your P&L.
Yeah, just taking a look back in history at where mining actually started and now where we're at, we had the industrialization of Bitcoin mining. We went from CPUs to GPUs to ASICs. And people had to get more sophisticated. You didn't need a finance background to mine Bitcoin in 2012. You just needed to...
You should have had it. You might have made some better decisions, but yes.
Yeah. So I think as Bitcoin mining has evolved, these entities that are growing substantially into these large Bitcoin mining companies have become a lot more sophisticated. They've added people from finance and trading desks, commodities, to their teams to actually be able to grow and manage risk as well. And I think we're going to continue to see that with the large miners, and then with the small miners to be able to use tools like Luxor offers. I think that's a great opportunity.
So the royalty and streaming model, right, is common around gold, silver, energy, but it really hasn't taken root in Bitcoin mining yet. All the attempts that have happened have never really scaled. Why hasn't hash rate streaming or royalty models caught on in Bitcoin mining?
Very, very similar, actually. You just talked earlier, but quickly, we have here more experts. But gold is more a 10, 20, 50-year kind of investment, and it comes with the mining operations of gold is a lot more quantifiable and tested, and basically it's easier to model it in general, considering especially the gold and the volatility of gold. But when it comes to crypto, You build your operations, your machines will be absolute in 2 years. The electricity costs and the electricity volatility and Bitcoin volatility make it extremely difficult to underwrite it and to basically expand the gold loyalty approach to Bitcoin. So they are very different products in duration and risk and volatility. That's why I think.
Yeah, you have a lot of hot takes today. I agree with most of them. So yeah, I think it's a function of like, yeah, market maturity. Like it's probably going to come. Maybe somebody in this room is going to build a royalty company after this talk. So hopefully we can inspire somebody. Yeah, the basic concept is like you're buying hash rate at a discount. You're basically asset-light business, right? Like what Franco-Nevada is. And you're helping miners finance their operations. And yeah, as a result, you're getting hash rate at hash price at a discount. So I think it's a function of time. Like as these markets mature and develop, we'll start to see some unique business models come out. And really, I think it's important to differentiate yourself in a crowded market. If you come at the mining market with the same story that a dozen other mining farms are already doing, then it's going to be hard to raise capital and stand out. If you come through with like a royalties type streaming, you know, you could fundraise off that and build into a good business. So I'm looking forward to seeing if that happens.
I think it's going to be a challenge and definitely something that's possible. But like you said, Derar, a gold mine versus an ASIC farm is a completely different type of business model. You know, we had the S21 come out with 200 terahash, which was a huge thing beginning of last year. And now we have ASICs that are 1.16 petahash. That's very, very difficult to actually create a business when you know that royalties are going to just go downwards. And what that looks like as a fair kind of distribution model to the investor is hard to model. So it's a challenge, but if somebody's up for it, I think it could be a good endeavor.
And quick last point about that, it really goes back to demand and supply. If with all those risks you have to discount the price too much, miners will not be interested. And if you are too close to the actual Bitcoin price, people don't want to do it. It's not incentive. So it's really demand and supply at the end as well.
Nobody wants to mine Bitcoin to end up mining less Bitcoin than just buying spot.
Okay, great. Well, that is it for us. We are out of time. Thank you guys so much for all of your insights. It was a fun panel.
Awesome. Thanks for hosting. Thanks everyone for coming out.
Thank you, everyone.
Day 2 at Bitcoin Asia 2025 is heating up here at the Bitcoin Magazine News Desk, presented by Metaplanet, and we've been having a thriving debate on this stage today about the future of Bitcoin adoption and the role of institutions. Joining us again is an all-star panel here to unpack all the specifics. We've got George McHale, Managing Director of Bitcoin for Corporations, Alan Helm, co-founder of Bitcoin for Corporations, and Andrew Webley, CEO at the Smarter Web Company. So we're talking a little bit backstage, Andrew, about just the nature of capital fundraising that these companies are conducting and how it relates to investors, right? So companies are now looking to exploit the collapse of fiat currencies and the rise of Bitcoin, but shareholders have an interesting place in this story. Maybe you can take us into that.
Yeah, sure. So when we IPO'd the Smarter Web Company 4 months ago, we involved retail investors from the start, and they're obviously absolutely critical to the whole process. So, you know, we're listed in the UK, and there's certain regulations that you have to comply with in terms of the amount that you can raise from UK investors, retail investors. So that's really, really important. But then I think the interesting thing when you think about Bitcoin treasury companies is, you know, we're very, very focused on Bitcoin yield in terms of, you know, how we grow the Bitcoin per share. But I think investors need to also look at how they achieve that yield in terms of the management ability to raise capital in a way that those investors agree with. You know, we've got a couple of tools in our toolbox. You know, we've got the placings and the subscriptions. You know, we've got an ATM style facility, and we've actually recently done a tiny amount of debt, but not debt as fiat would know it. Debt as in a Bitcoin denominated bond. And it's important that everyone knows that that is a tiny proportion of the overall treasury. You know, we've raised over £200 million in the last few months. So, so yeah, what I would say to anyone is if you're interested in Bitcoin treasury companies, focus on the yield. The yield is important. That's why you buy a Bitcoin treasury company, you know, alongside ancillary reasons, as opposed to Bitcoin. But then also you have to think about the future, and the future is about how that capital is generated, and in part, maybe from some operating business success as well.
George, obviously a lot of companies looking to navigate this, maybe hearing things that Andrew was saying for the first time. How do you kind of parse it down for the folks at home about what's happening here?
Yeah, so I mean, I think like Andrew said, right now we're in this period where it's all about raising capital. How do you get more capital in, especially for these, you know, so-called pure play treasury companies? I think where things are potentially heading is, what is your operating business? How are you going to make money on your own in order to, you know, use that revenue to buy Bitcoin? So we're starting to see more non-endemic companies approach us and want to be involved in Bitcoin for corporations, which is, I think, a really exciting development. Because every company, as the meme goes, every company will become a Bitcoin company. And so it's fun to be a part of that. Like, we're kind of on the bleeding edge where, you know, companies have nothing to do with the space. They have significant operating businesses, and they want to figure out how to add Bitcoin to their balance sheet in a way that creates that yield for investors. And so I think that's definitely something to watch as this trend continues to unfold.
Yeah, we've seen fashion companies in Japan. We've seen healthcare startups. Alan, how do you break down this capital fundraising that's happening? Is there good strategies that companies are deploying? Is it all experimentation at this point?
I mean, it's uncharted territories for sure. I mean, we've been tracking this, now for 16 months, George? And, you know, we've got Andrew here, Smarter Webco, member of Bitcoin for Corporations. You know, there was a time and place maybe 4 months ago where just announcing that you were running a Bitcoin treasury strategy was enough to bring forth some of that capital. But now we're in an era where it's like, hey, how is the leadership team, the financial team executing said strategy? It's not enough to just announce like, hey, we're putting Bitcoin on the balance sheet. And we were talking earlier, for anybody just tuning in, you know, one of the debates we were having is like, hey, as like a retail person, people should just buy and hold Bitcoin. Why would they look at any of these treasury companies? And Andrew identified something pretty novel in the UK market as it pertained to your guys' version of like a 401k. But maybe for the audience at home, walk us through like what is Smarter Webco doing for them?
Well, if you look at the UK as a capital market in terms of the retail investors, a lot of the money is tied up in retirement accounts and another product that we have called ISAs. There's a significant amount of money in those wrappers, and you are only allowed to invest in certain things, equities and funds. And
well, Andrew, unfortunately, we have to stop you there. We've got a big main stage speaker coming on, one of the largest companies in the world. We've got the founder of Binance, Changpeng Zhao. Keep it here.
Good to see you guys. Good to see you guys. Hello.
Well, my name is Tyler Evans. I'm the CIO of Kindly MD and Nakamoto. And CZ, I don't know if you probably don't remember this at all, but you were actually one of the very first people in Bitcoin I ever met. And this was back in your blockchain.com days. I was just a college kid trying to build a Bitcoin wallet app right when Apple had banned Bitcoin wallets from the App Store. You were one of the first people I ever met online talking about Bitcoin. So we're very glad to be back on stage with you. And I wanted to start just by you know, hearing kind of your perspective. You've been in the industry for so long and seen all these evolutions in Bitcoin and the growth of the ecosystem. So how do you see the, you know, what's your kind of current perspective on the state of the industry and really the adoption path that Bitcoin has taken over the last decade you've been working on it?
Sure. Thanks for the introduction. I remember that was in early 2014. Apple App Store listed the last Bitcoin wallet, blockchain.com's wallet. Back then it was called blockchain.info. And people were taking their iPhones and to the shooting ranges and shooting guns at it. Right? So, and there were viral videos on YouTube. So I think we've come a long way since 2014, 2013. That's kind of the time when I started getting involved in the industry. So I think between 2013 to before 2017, the industry is more of what we call the Bitcoin industry. We don't really call it the blockchain or Web3. We don't use those words back then. I think in 2017, Ethereum kind of became popular, became the ERC20 tokens ICO industry. And 2021 kind of was the DeFi summer now. And then now we're seeing like traditional finance, institutional adoption, Bitcoin ETFs, etc. And Bitcoin is becoming really the global reserve cryptocurrency. But in the future, I do believe that Bitcoin will become the global reserve currency. So yeah, so I think we've seen this evolution, and it's great to see that now both traditional financial industries and nations and countries adopting Bitcoin, plus other cryptocurrencies. So I think we've come really a long way. Yeah.
A really a long way over the past decade. I guess how has your view for the opportunity for Bitcoin evolved as you've had a front row seat to this evolution?
Sure. So I think Bitcoin has some limitations as well. So it's grown a lot, but because of the block size and the decentralization aspect of it, so Ethereum became the compute blockchain. Other blockchains have become the meme blockchain. Other blockchains are the liquidity providing blockchain, etc. So there are different blockchains for different purposes right now, and there's a lot of other innovations that are happening. We've tried to bring a lot of the innovations back onto Bitcoin. Some were successful, some were not. But Bitcoin still is by far the largest market cap coin, and is the standard sort of the gold kind of in this industry. So yeah, so I think right now we're kind of in a stage where there's a lot of innovation, and I personally hope to see many of those innovations being brought back to Bitcoin. Yeah.
Yeah, in terms of those innovations kind of coming back to Bitcoin, what are the biggest limitations you see today in terms of scaling Bitcoin as a technology for billions of people, or what's missing really from the infrastructure?
I think it's mainly it's capacity, right? So right now Bitcoin is still 7 transactions per second. There are different solutions to get around that, layer 2s, etc. But layer 2s itself, you have to rely on you have to trust a third party. So which kind of increases centralization. If we're going to do that, we might as well have a bit more centralized, a bit more infrastructure on Bitcoin network itself. So, but I think really the capacity is the limit. So we need to find ways to continue to increase capacity. This is one of the limitations for decentralization. Upgrade is like very slow. And upgrade is also very painful. In 2017, there was a block size war leading to many different Bitcoin forks. I hate Bitcoin forks, just simply because operationally for industry service providers to be able to provide that service, you have to deal with so many different forks, so many different wallets. It's just a lot of work. So at the same time, while I want to see Bitcoin continue to evolve really quickly, I'm hoping to evolve to avoid too many forks.
Very, very much, and I think the industry still has some of that scar tissue from those block size wars, the scaling days.
Yeah.
I guess one of the biggest changes we've seen, particularly in the last 12, 18 months, is really the institutionalization of Bitcoin. How do you think this, new adoption by institutional investors and allocators, even nation states, how do you think that will change Bitcoin?
I think it's great for Bitcoin. I think, so there are a small portion of like crypto diehards that says, well, okay, we don't want nation states and all the centralized players coming to crypto. But we got to understand that in a decentralized world, anyone can participate. You can be a single person, a group, a nation, a company. Anybody should be able to participate. And the more they participate, the better. So why wouldn't we want them to be in this industry? They bring more capital, more money, more validation, more credibility, more use cases. And so in my view, the more the merrier. And they also, once countries start to think about national crypto reserves, they will also have to think about regulations. So they will make the rules more clear. Even though in the decentralized world, you can say, look, everything's software, you don't need a lot of extra rules. But having some guardrails will make industry players' job a lot easier on what they can and cannot do. So I think all of this is extremely good. And we've seen the price action reflect that. Bitcoin is near all-time high. So Bitcoin, like 9 months ago, was what, 50, 60,000? Now it's, no, even though it's dropped a little bit today, or like in the last week or so, but it's still within like 5–10% of the all-time high. We've seen other cryptocurrencies like Ethereum, BNB near all-time highs as well. So, so this clearly the price action also shows that this institutional adoption is good. Yeah, so I think it's great. Yeah.
Yeah, and we've really seen the U.S. be a leader in that institutional adoption with the spot ETFs and now a very friendly regulatory administration and clear guidance about the legalization of Bitcoin. How do you see other countries, regions, particularly the Middle East and Asia following suit?
Yeah, absolutely. So I think it was actually quite surprising to me that U.S. was able to adopt so many things so quickly. So I think kudos to the Trump administration. They moved really, really quickly. And I think they also, yeah. So I think the industry, they also have good support from the industry. So I think Bitcoin Magazine, you guys have been helping a lot there. And then many other crypto players also help. So I think before, like say even 9 months ago, many other countries were leading, including like UAE especially. Like they're very forward thinking. But now I think U.S. is really setting the pace for like openness, forward-leaning regulations. And even yesterday, right? So this morning, CFTC announced now they may be looking at allowing U.S. citizens to trade on international platforms.
Huge.
That's huge, right? So I think. Like based on my limited conversations with different people just this morning, it seems that that rule is an old rule. They're just bringing back more into the foreground. So all of these things are extremely positive, and U.S. is so impactful, so influential in the global market, on the globe. So now every other government have to think about, well, we can't be left too far behind. So I know for a fact that UAE is trying to push it even more forward to be more crypto-friendly, to be more innovative. We've seen Hong Kong being really opening up as well. The rest of, I was in Tokyo 3 days ago. They are trying to embrace crypto in a strong way. So I think now US is basically leading every regulator, every country leader in the world to think about crypto blockchain. This is fantastic for our industry. Yeah.
Fantastic. And yeah, I don't think this regulatory news that broke this morning, I don't think it can really be understated in terms of a framework for international exchanges, crypto companies to be able to onboard U.S. users and register as foreign trade organizations. So what do you think the opportunity set that creates now?
So again, I'm not a lawyer, so I don't know the legal background around that, and at this moment, I don't believe I fully understand the implications of what's allowed or what's not. But just based on the limited conversations I had this morning and reading about it, this is great. I mean, historically, it's very tricky. Well, I got into a lot of trouble with the U.S. government by having U.S. users on our platform in the early days and not having a proper registration, etc. So that was the issue that I went through. Now seeing that now U.S. is allowing that, that's really good. I mean, that's I personally think that I would like the whole world to be a free economy, meaning that anybody should be able to transact with anybody else. Anybody should be able to invest and fundraise from anywhere in the world, ideally. There will be some limitations, and there are some laws, with sanctioned countries, limits, and etc. But the less of those things are there, the more the world economy is better. I think basically, so I'm more of the sort of global economy kind of advocate because I'm a business guy. I'm not a politician. I'm not I don't draw turfs. So I think we should, as much as possible, have an open economy. And I think right now, and blockchain is a technology that can easily enable that. We just need the regulations to allow that. And we also need to, I strongly believe that we need to evolve the old regulations to catch up to a much more globalized world. I know every country needs to protect their economies, that they want to grow their own economies. No, we have borders, we have country borders for that. And there are rules that can be put in place, but the more every citizen on the planet can transact with each other, the more resources we'll have and the better economy we'll have. And the better economy we'll have, we can do much better things. We can go to Mars, we can go to beyond Mars, we can cure cancer, we can do a lot of stuff, yeah.
Well, yeah, give it up for a connected global economy. I want to maybe change course a little bit and talk about what's really been one of the hottest themes discussed over the last couple of days here, and get your take on, what do you think about this new trend of companies adopting Bitcoin as a treasury asset?
Sure, the DATs, right?
Yeah.
So digital asset treasury companies. I think it's great. Again, I think it's number one, fantastic for crypto, or it's fantastic for Bitcoin, and what's good for Bitcoin is good for crypto. And in addition to Bitcoin, we're seeing many other cryptocurrencies doing the same thing, copying like the MicroStrategy, right? So DAT companies for BNB, for Ethereum, for other cryptocurrencies, etc. So the traditional equity markets are so much bigger than crypto, right? So, and also, especially in the US, I believe 95% of the money is in institution money. They're all managed by institutions. In other countries, the percentage is less. But so basically, in the world's largest economy, most of this money is in institutions. So far, those guys have not been able to participate in crypto in a large way until the ETFs. But now, the public treasury companies offer more choices and more variety. The ETFs are more like an index and basket, etc. And the fees, then you also have to pay a fee. The DAT companies now offer many people who couldn't buy crypto before, but now they can get exposure to crypto by buying public company shares. So we're now basically bringing the equity markets to have access to crypto, or bring crypto to them, depending how you look at it. At the same time, we're trying to we're kind of bring crypto into the equity markets, which is a huge market. And this is not happening only in US now. This is happening in Hong Kong, in Japan, in every place that have an equity, in every country that has an equity market, we can do this now. So this opens a small asset class into a much bigger audience, which is fantastic. The other direction is also happening, the tokenization of assets, so the RWAs. So now we bring stable coins, treasury bills, and commodities, and buildings, real estate, anything you can imagine, even people, you can tokenize everything. So we're now bringing the assets we're into crypto. So we're going both ways, which is fantastic. These concepts are not new, but now they're being really executed in a real way. And we're seeing DAT markets are really hot. So they're raising like hundreds of millions and billions of dollars that we're just bringing that into crypto, and there's more and more of that happening. So I think this overall is fantastic. There are some risks. Some people will want to use the DAT company and say, look, it's a public company, but they're just going to do a big crypto treasury, Bitcoin treasury to pump up their stock price. Well, that's obviously not too good. And many of them don't have good management around how to handle cryptocurrencies. And some of them have more complex structures where they hold a basket of cryptocurrencies. Now, who's going to maintain the basket? Who's going to maintain the balance of it? Some of them even do additional stuff like investing the funds raised in crypto companies, etc. Now, that's a different type of business. Nothing against them, but you got to evaluate each different one as they are. Those different businesses require different skills. We will also see some failures in this space, so in this sector. So be mindful that not every DAT is going to go multiple X, etc. Lastly, right now we're in bull market. The market does go in cycles. Eventually, there will be a winter. There will be a bear market, and at those times, the stock price may drop. The price will have volatility. So most DAT companies will at least have to go through one winter to be able to cost average in the future, so that they always have a lower average cost. MicroStrategy went through that. It was quite painful for their first cycle, but now they're good because now their average price is low. So in a few years, sooner or later, there will be a market winter. We'll go through cycles. So just be mindful of that and understand the risks.
I think that's a good overview of some of the risks. What do you think about the risk in terms of, will these Bitcoin DATs, these other DATs, you think they'll bring stability to the asset class over time, or is it going to swing too far and will we see over-financialization and kind of lose the grassroots ethos of blockchains?
I think it can work both ways, so it's hard to say. Number one is more money coming into an asset generally increases stability, decreases volatility. Basically, the larger the market cap, the larger the market capitalization, the total asset value of the class, the more stable it is. Basically, look, if you have a $100 million asset or token or a public company, if somebody wants to buy $10 million worth of shares, the price is going to pump, right? Whereas if you buy $10 million of NVIDIA, which is a $3-4 trillion thing now, it's not going to move, right? So the larger the asset, so basically the larger the market cap, the less volatility you will have. That's just physics, really. It's like a larger ship, right? Larger ships are more stable. So more money coming in will help stabilize for sure. But at the same time, the money coming in is coming from equity markets, which are also like, there's a lot of speculative traders there. So it's a very liquid market, which is good for getting in and out. But at the same time, it's a trading market. So people can pump, price may fluctuate even more in the short term. But long term, I think definitely it's good. Yeah. But so yeah, I think it could go both ways. But by and large, you should stabilize more.
And then, you know, we've seen really since Michael Saylor and Strategy, the explosion of these DAT companies, even beyond Bitcoin, and more recently, even a BNB Treasury company launched. What do you think are the opportunities or the risks of running this strategy with maybe less liquid, more volatile assets?
Yeah, so I think for some of the smaller assets, it is much higher risk. Well, I think fundamentally, you need to look at whatever that token represents or what the basket of tokens represent, are the underlying ecosystems really developing? So are the utility of utility value of the underlying token, is it really increasing? If it's of course, the newer something is, the more risk there are. So the more mature the ecosystem is, and the larger it is, the less risk. But also the speed of improvement may also be slower, depending how you look at it. So yeah, so some of the newer ones may have higher risk, higher returns, but the older ones, the more established ones will probably be safer bets. So yeah, it's a different mix. Yeah.
Well, we're running up on time here, but I know before we wrap, the audience is eager to hear, you know, from your perspective. Like you mentioned, we're in a strong bull market here. We've seen a lot of positives, institutional, regulatory developments. What are the other trends, maybe outside of DATs, that you're most excited about in the industry today?
So I think RWAs are very interesting. So bringing us assets on chain, we're seeing that happening. It's not done in a very, it's still early. So it's not, there's some issues, there are many issues we're seeing. But it's good that it's happening so that we can fix, we can address those issues. I also think AI will help crypto a lot. I think most people don't realize how much transactions AI is going to generate. And AI is going to generate those transactions in a programmable way. They have to have a programmable money. And the fiat money that we have today, either is US dollars, Hong Kong dollars, Chinese RMB, those are not programmable dollars. Those are not programmable money. So AI is going to use cryptocurrencies, and AI is going to create so much transactions that people don't realize yet. So I think that's going to be really good for us as well. So yeah.
Fantastic. Well, CZ, thank you so much for joining us today.
Thank you so much. Yeah, thank you for having me here. Yeah.
The global financial.
You just heard from Binance founder Changpeng Zhao, Asia's richest man. His message, Bitcoin is becoming the reserve currency of crypto and the global reserve currency. He talked about how blockchains are evolving and the financialization of Bitcoin, talking about the different risks with different assets being put into these treasury wrappers. Here to unpack, we've got a packed panel with George McHale, Managing Director for Bitcoin for Corporations, and Andrew Weebly, CEO of Smarter Web Company. So let's unpack CZ, obviously someone we should be listening to, has had a lot of success in this space. Let's start with this idea of digital asset treasury companies, right? This is an expansion of the Bitcoin treasury company model pioneered by Michael Saylor. Now we have the altcoiners, the different coins trying to take advantage of this model. Andrew, what's your take on digital asset treasury companies?
So I only believe in Bitcoin personally, but I believe that everyone should have choice and freedom. One of the underlying principles of Bitcoin. And so if people want to invest in any type of digital asset treasury on the assumption that they understand the risks properly, no problem.
Well, let's talk about those risks, George. I mean, obviously you're getting a lot of companies coming to you. They're talking about adopting Bitcoin, maybe have questions about these other currencies.
Yeah, we haven't heard too many of those. I think it is definitely a trend that, CZ spoke to. In the same breath, though, he said the risks are basically who's going to manage all the basket of assets. It just creates a level of complication. I'm like you. I'm kind of a Bitcoin purist. That I don't know if it's the risk reward is there, but we'll see.
Well, we've also seen that historically cryptocurrencies outside of Bitcoin perform poorly against Bitcoin. No, Andrew?
Yeah. So the $1 million question here is, what are you doing? What's the point of a treasury? The point of a treasury is to preserve value or fund future business growth. So, if you are buying a company that's, say, in an Ethereum treasury, let's say, then you've got to believe that Ethereum is the best store of value over the long term. And that's why I only believe in Bitcoin as that store of value. I think perhaps, and it might be a bit controversial, maybe some of the companies that are doing that in the UK, I can't talk about any other markets, are maybe sort of seeing the success of the Bitcoin treasury companies and thinking, what else could they do? But, it's like any investment. It doesn't have to be a digital asset treasury company. You just need to look at everything about it. Who's running it? What are they trying to achieve? What's the execution historically? What the execution may be in the future? What's the market? All of those things. And so investors need to be aware, and that's why, we put a lot of effort into communicating as much as we can with investors.
Well, we know that Bitcoin is a commodity, of course, mined by a global network of computers, other cryptocurrencies different. How do you expect this to play out, George? You would imagine that these companies would underperform compared to a Bitcoin treasury company, no?
Yeah, no, that's definitely what I expect. I mean, look, I think there's probably money to be made. Just like that's why I tell people who want to invest in other coins. It's like I'm not gonna prevent you. You do have your choice. There is probably money to be made, but at the end of the day, like, what is the long-term implications of this? I think the headline really coming out of that conversation is that this is the hot topic in our space right now. This is what everyone wants to talk about. We're certainly seeing that. It seems like it's heating up. He did have a couple bearish comments about, the risks. CZ does not think this time is different.
Oh, really?
Yeah, he said there's going to be a bear market and we got to be ready for it. So maybe there's some wisdom in that.
All right, well, so much more in store, and of course, it all leads to Eric Trump later on stage with CEO of Nakamoto, David Bailey. We're sending it back to the main stage now for some more content. We'll be right back after these messages.
Macro and micro forces accelerating institutional Bitcoin adoption. So before we dive into the topic, let's begin with an introduction. Let's go with you, Q.
Thanks. I'm Q. I'm from DDC Enterprise. I'm their chief of staff. Prior to joining DDC Enterprise, I was an advisor to the company, and before that, I was running my own crypto venture fund. And before that, I've always been in the investment space, in hedge funds and private equity firms. DDC Enterprise, we're a Bitcoin treasury company. Our underlying business is a food platform under which we own different portfolios of food brands.
Let's go with you, Alessio.
Hi, everybody. Alessio Quaglini. I'm the CEO and co-founder of HexTrust. For those who don't know HexTrust, we are a financial service provider. We've been in the space operating since 2018. We provide custody, staking, OTC services to institutional investors. And we operate out of Hong Kong, Singapore, UAE, and Europe, where we have licenses to operate these businesses. Myself, I've been in the crypto space since basically 2014, before my prior life. Used to be a banker, and funnily enough, before being a banker, I used to work for the securities regulator, regulating market abuse and insider trading.
I'm also an ex-banker. Hi, everyone. I'm Khushbu Khullar, the venture partner at Lightning Ventures. So Lightning Ventures is a VC firm primarily focused on Bitcoin companies. We have till now invested in 40 plus Bitcoin companies. We also have a syndicate, and we also have a crowdfunding platform called Thunder Funder. Okay, let's start the session. Let's begin with discussing macro forces first. And I would like to pose the question first to Alessio. So you as the CEO of Hex Trust, you have seen how regulatory clarity like the US Genius Act or the Hong Kong spot Bitcoin ETF approvals has opened doors for institutions. So my question is, how do you see global macroeconomic trends such as devaluation, fiat devaluation, or rising US M2 money supply, or geopolitical tensions shaping institutional demand for Bitcoin as a hedge or reserve asset?
Yeah, so I think you touched upon two important points, right? The devaluation of fiat currency and actually the geopolitical tensions. And I think these are actually the two reasons that are really sustaining and supporting the whole industry and the adoption of Bitcoin. So if you think about the devaluation of fiat currencies, I mean, this is something that's been going on. We spoke about it several times. It's been going on forever. And unfortunately, it's only, or fortunately for us, it's only accelerating, right? So we're seeing governments that they need to finance deficits, they need to finance, unfortunately, new wars, and they need to spend money, and they don't have the money, so they need to print the money. And until today, to be honest, investors, especially at the retail level, they didn't have options to actually hedge against this devaluation of fiat currency. So the only option was basically to buy some maybe gold ETFs. But I mean, it's really, but the gold ETF is not something fungible. It's not something that you can exchange. It's not something that you can bring with you. It's not something that you can easily collateralize to actually get operating capital if you're a company. Now, with Bitcoin, the things are really changing, right? So we have one asset, and I mean, we can speak about the other assets and the other cryptos, but in the case of Bitcoin, is the use case is very clear, right? So we have one option that everybody has right now, which is basically the hedge against the devaluation of fiat currency. So this is only going to increase, and as we see, especially the economies right now in the U.S. slowing down, and we're seeing interest rates coming off, right? And the amount of fiat currency that will be printed, we'll see more and more adoption. I'm not sure if actually it's Bitcoin that is actually appreciating, or if it's actually fiat currencies that are depreciating. Maybe this is more a philosophical question. The other one that you mentioned, the geopolitical tension, it's actually another very interesting concept around Bitcoin. Bitcoin is actually one of the few investable assets that are borderless, so they don't really reside anywhere. Even gold, if you think about it, it always resides in the vaults of some countries, right? So when you buy an ETF, the ETF is still linked to the gold that is in the vaults connected to some kind of country, right? Well, Bitcoin is borderless, but more importantly than borderless, it's also geopolitically neutral, right? We're seeing today in the world currencies and tariffs being used as weapons, right, to really impose a certain kind of view of the world to other countries, right? This is very negative. Currencies should just be a medium of exchange. There should not be weapons to control other countries, but this is happening, and Bitcoin as a currency is actually the only thing that is neutral and is kind of doesn't have any connotation of geopolitical or political stance.
Okay. What's your opinion, Q? Do you agree or differ? And also the fact that the recent acquisition of 79 BTC that DDC Enterprise did in, I guess, May 2025.
So we've been buying Bitcoin since May. We're up to over 1,000 Bitcoins today, and we publicly announced that our goal is to get to 10,000 Bitcoins by the end of the year. But stepping back on your question around macro, right? I'll give you a really real example of what a company goes through. So think about it. Pandemic starts in 2020, right? Our supply chains get shut off, right? We are looking at a world printing a ton of money. So suddenly, money supply goes up dramatically in 2020 and 2021. Effectively, the government's taking away money from your pockets. So if you look at inflation numbers, so since 2020, we're talking about 30% increase in the money supply. So effectively, you could be doing everything you can within your power as a company to increase value for shareholders, but at the same time, the government's taking money out of your pocket. So effectively, you have to run so hard to make sure that you're just standing still, to not lose out. And that's really, really difficult. So for a company, when we think about how we create shareholder value, we started thinking about what are the possibilities that we can have on our balance sheet that allows us to protect our shareholders' value. So Bitcoin became a really good solution because one, it serves as a reserve. As Alessio mentioned, it's a hedge against fiat money, right? In case of hyperinflation, in case of just irresponsible government spending. And secondly, it's to us a capital. So obviously we take a very positive long-term view on Bitcoin over the coming years. So to us, it's an appreciating asset. Then furthermore, because it's programmable and over time more and more ability for us to actually use Bitcoin as collateral easily. So if we actually choose to use that asset as a collateral, we can. And then obviously finally, it's the idea that we will be able to generate yield on Bitcoin. Now obviously we hear a lot about other tokens that have staking rewards and so forth, but over the last, I would say, months, we've been seeing more and more companies offering us Bitcoin yield products. So it's just a matter of time as this whole ecosystem on Bitcoin-backed products come in play. So where to us, it's a really, really good asset to have for our company. And moreover, Bitcoin is culture to us. If you think about our consumer base, majority of them is actually Gen Z. So they actually do welcome the idea that we're adopting a new technology. So we have over 18 million customers, 80 million app users on our platform. And so that kind of engagement when we have with them, telling them that we have started adopting Bitcoin as part of our strategy, has been very welcoming.
Okay, so there's a follow-up question. Since we have discussed macro, I would like to focus now on micro. And you mentioned about the recent BTC acquisition on your treasury. But how can you walk us through how DDC does in decision making, and how do you challenge the internal factors like volatility, or how do you do that?
So we've been fortunate because our board of directors have been very supportive. I think one of them is a crypto OG, so he's been very familiar with what's happening. In fact, he was the one that suggested to our CEO to dig into this area. So from that perspective, it wasn't too difficult. But where the details come in would be how we actually get to execute this strategy. So on surface, when you hear about digital assets, treasuries, companies just raising cash, buying Bitcoin, it's very simplistic. But underneath all that, there's a lot going on. So I spent, in the past, I spent part of my career working at one of the largest pension funds in the world, managing investments for them. And literally, when we started this strategy, we have to think through what are the right risk management protocols, how we should be running governance around the treasury assets and so forth. So the details matter a lot, and how we actually go around raising capital in a responsible way, applying a disciplined leverage to our balance sheet, how we actually execute these trades. There are a lot of details around it. Obviously, buying and accumulating it's a mix of spot purchases as well as some structured transactions. So we're trying to balance all that out, and we're thankful that we have sort of built a pretty deep network of counterparties around us to help us through this journey. Hex Trust being one of them, obviously.
Yeah, okay, so Alessio, Hex Trust has been pivotal in providing institutional grade custody, staking, and trading execution for clients like DDC. So what specific operational or technological advancements like partnerships with traditional financial institutions are lowering barriers for institutions to adopt Bitcoin? What's your take on this?
Yeah, I think when it comes to institutions, maybe I can divide the question into two parts, right? So there is kind of a number of requirements that institutional investors actually do not compromise on. And then there's a number of services the institutional investors actually need. Obviously, I would say on the requirements, there are certain things that in today's world, companies like us need to have and need to provide, right? So there's a certain degree, obviously, of security. Maybe usually retail investors are less aware of how important it is to run proper security operations for companies, for custodians or companies that hold assets in custody. But it's not only about that. It's about governance. So complex companies like DDC, they have complex authorization matrices and different kind of user rights, etc. Who decides to buy, who approves, who does the transfers, the operational matrices, etc. So all these kind of processes and flows, they need to be implemented at the custodian or at the financial service provider's level in a proper way to enable the governance processes of our clients. Then you have all the compliance, right? I mean, this conference is basically about the institutional adoption of Bitcoin, right? So if we want institutional adoption, we also need to be aligned with the compliance requirements. Otherwise, we cannot tap into the public markets, we cannot tap into the banking rails, etc. So we need to make sure that transactions are properly monitored, that we can understand the risk and where the Bitcoins are coming from and where they're coming to. So these are kind of the basic requirements that companies like us need to have, and if we don't have it, it's almost impossible today to pass the due diligence of institutional investors working with us. On the other end, you have services. So in the past, it was really just about, okay, give me a wallet and buy Bitcoin for me, right? That's just the beginning, but you see what Q mentioned before. So institutional investors today, companies like DDC, they don't just buy Bitcoin. For example, they need to get a yield out of the Bitcoins that they have with a financial service provider. Where does the yield come from? Well, the yield comes from either borrowing or volatility that is implied, or it comes from other services, for example, staking. You might be aware that right now you can basically stake Bitcoin and put it at risk to earn yield on other networks. So Core Network or Babylon, they're, for example, examples of this. And this is something that obviously companies that hold a lot of Bitcoins to finance their operations, they would need this kind of services. So it's a whole lot of things. And you mentioned leverage, right? So what if somebody wants to borrow against the Bitcoins that are held with a financial institution? So we also need to provide services such as collateral management, three-party agreements, third-party agreements, etc., escrow, to make sure the lenders and borrowers can meet and lend against the Bitcoins that they hold with the financial institutions. So it's really a complex set of services and requirements that happen behind the scene. And it's not just as simple as accumulating Bitcoins by issuing debt in the market.
Okay, before we move on to the next question, I have a follow-up question for Q. Q, you mentioned like for you, the board of advisor and everything, I mean the decision-making process, it went smooth. But people sitting out here who's looking for integrating Bitcoin into its treasury, what do you have to suggest, or what's your 2 cents on it?
If you are running a corporation, a company today, and you're thinking about this, I think, first of all, you have to study the history of money. So all of us, I'm assuming the fact that you're at this conference, have a pretty positive view on Bitcoin or crypto in general. And I would encourage anyone that's running a corporation to first study history of money. Understand how we got to where we got to today in terms of the fiat system. I mean, fiat system has been around for a long time. We're talking about 10th century Song Dynasty, right? But then we had evolutions of how we decided as a society on monetary systems. It was at some point backed by silver and then gold. Obviously, that didn't really work out because governments needed to spend money on their favorite projects, and this was when during World War I, if you remember, where we started getting into situations where if your currency is gold-backed, then you couldn't increase your war expenditures. And obviously, Great Depression came through. A lot of governments tried really hard to stick with the gold standard after devaluing their currency. And then they kind of gave up in 1971, right? So where are we today, 50 years later? So we're in a situation in which people start wondering, should we really trust the government to be doing all this and making sure they're responsible? So Bitcoin has a space from that perspective. So when you think about your own company and think about how do I make sure that my shareholders are retaining and increasing value, and that's how we can start thinking about whether Bitcoin should have a place in your treasury. And granted that not every treasury company will do the same thing in the same way, because you have a huge mix. You have people that are basically still very much focused on their core business 90% of the time, and then they decided to add Bitcoin into their treasury. Obviously, there are other companies in which all their attention is on Bitcoin, and that's the only thing they do, right? So there's no one-size-fits-all for this, but I would say, just understand why Bitcoin even has a place in your treasury.
Yeah, thank you. Okay, let's move 5 years ahead. Alicia, the question is for you. So looking forward in, say, 2030, how do you envision the role of Hex Trust in a world where Bitcoin is now potentially a standard reserve asset for institutions?
I think the next 5 years are going to be transformational, right? So the whole trajectory of crypto adoption, let's not just talk about Bitcoin, maybe just the crypto and blockchain in general. The whole trajectory of blockchain adoption has really just started, right? So until a few years ago, these conferences were basically only for a few people that really believed in this kind of story, etc. Now we're really, the doors have been opened, everybody's coming in, all the financial institutions. But if you think about it, as of today, actually the state of adoption is not as developed yet. If you think about it, especially on the distribution side, banks, private banks, advisors, or pension funds, they haven't really adopted Bitcoin or other cryptos as a potential investable asset. And if you go to the bank, I think nobody has been offered yet to buy some kind of investment products denominated in Bitcoin. So the trajectory is going to be really a hockey stick from now on. But I think there's a couple of other developments that are extremely important. One is really blockchain as an infrastructure, right? In today's world, we all know it. Still, if you need to transfer money from one side of the world to the other side of the world, first of all, it takes a long time. But secondly, you don't know how long it will take, right? If I transfer money to my family in Italy, still, I don't know if it will take 1 day, 2 days, 3 days. It doesn't work over the weekend. And on top of that, I don't even know how much fees I'm going to pay for this settlement. So this whole kind of blockchain infrastructure for payments, cross-border settlements and everything, and stablecoins is actually really, it's not just a buzzword, it's going to be revolutionary because it's going to replace the whole kind of SWIFT and banking rails that we currently have today. And then, CZ, for those who were here while CZ was speaking, CZ mentioned AI, or he was asked to talk about AI. So AI is going to be, obviously, it's going to be revolutionary, but it's going to be revolutionary also for crypto. Using Michael Saylor's words, he spoke about AI as digital intelligence, and Bitcoin, obviously, he speaks about Bitcoin as digital capital. AI is going to create a lot of wealth. You will have companies with 10, 20 people valued at trillions of dollars just because they can outsource all the labor to basically AI. And AI is not going to use banknotes, it's not going to use PayMe, it's not going to use WeChat Pay to transfer value across different AI agents. It's going to use crypto, it's going to use Bitcoin, and it's going to use all these stable coin rails. And think about what CZ said. The amount of transactions that AI will do and the amount of wealth that AI will generate is going to be huge. So if crypto is going to be the rails, if crypto is going to be the currency for AI to transact, then the trajectory is even going to be more exponential than we can ever imagine. So the future is bright.
Okay. So for Q, I'll stick to Bitcoin only. So the question would be like, while you are building your, continue building your treasury, how do you vision companies or corporations globally? How would they use Bitcoin? What's your thought on that?
So it's interesting if you see all the attention that's being placed on digital asset treasury companies, DATs. It feels like it's been overdone. But let's step back here, right? Probably 175 publicly listed companies have sort of announced plans to do this. 175 sounds like a lot, but it's not that much if you look at the number of listed companies out there. We're talking about 0.3%, right? I'm not saying that every single publicly listed company should adopt Bitcoin or should be all about Bitcoin treasury, but it just gives you a sense of how early we are. Now, what's more interesting is that when we actually start moving on to the later stage of this development, then you are going to have a much clearer view of what each of these companies have in mind. What are they actually going to do with the Bitcoin, Bitcoin holdings that they have? Because I think every company will have a slightly different direction. So to give you an example, for us, we already have an underlying business, right? We don't talk about it too much in terms of how we're going to integrate both together, because at this point in time, our focus is still trying to accumulate as much as we can. But there's a lot you can do when you get to a point in which Bitcoin payment rails are all set up, in which you can actually integrate Bitcoin into your underlying core business. So that's where the real fun comes. But in the meantime, it's literally, from my perspective, is we're trying to accumulate as much as we can, as quickly as we can. And to give you some perspective, right, just that there isn't enough to go around. I'll just put it this way, 21 million Bitcoins out there. There's a study that says there are 80 million millionaires in the world, right? If every financial advisor tells their client to buy 1 Bitcoin, there's not enough to go around. So what about the rest of us? What about the retailers? What about the corporates? What about the governments? Pension funds haven't really even started coming into the space yet. So the message is we're very early from that perspective. So going back to your question, like how would it look 5 years from now? I would think that we'll go from that 0.3% of companies having Bitcoin to a higher number. Now, I don't know what that number is, but there's a long way to go before we get there.
Okay, so a rapid fire question. What do you think would be the biggest catalyst for institutional Bitcoin adoption in the next, say, 5 years?
So I used to sit in a institutional firm that was investing $500 billion in assets. I'll tell you that when it comes to adoption, it's always about what people's comfort level around regulations, around compliance, around whether there's proper governance. So all that stuff that Alessio said matters, even though it can sound boring to some retail investors. But if the systems are set up properly, if there are high-grade institutional, say, custody service or trading firms, counterparties that are licensed, all that's going to help accelerate adoption. So to me, if there's better regulations, clearer licensing regimes, it's going to help us.
Alicia, do you agree, differ, or do you want to add something?
No, I agree 100%. I mean, maybe the only thing really in terms of trigger, we spoke about AI, we spoke about the institutions and everything, but I think to really, if we're talking about Bitcoin, the thing that really would make a difference is when we will see the first major real central bank or sovereign wealth fund really announcing the purchase and the setup of a specific fund to hold Bitcoins, or the first huge pension funds or pension systems really put in Bitcoins as one of the assets for people that are actually investing in their pension to actually not lose value against the depreciation of fiat. When we see these things happen together with AI, I mean, the trajectory is going to be very surprising for everybody.
Okay. So before we wrap up, any closing remark from you, Q?
Like I said, we're early. We're very early.
Yes.
And the process takes time. institutional adoption takes time. So by the time pension funds, sovereign wealth funds starts instituting this, you will probably get a sense of the fact that Bitcoin will be at a much higher price from where it is today. But in the meantime, you can see that a lot of people are trying to solve for it, right? The fact that we have ETFs is a way for people to do it. Like to you, maybe it doesn't make sense. Why would people buy ETFs and not Bitcoin? Well, because a lot of these investment managers out there don't have the mandate to buy Bitcoin. They don't even have wallets that are set up, right? Similarly for DATs, like why would they be good exposure for other people? Because there are investment managers out there that can only buy equities. So that actually works really well. So again, we are very early in this process.
Alicio. Okay, that's all. So that's a wrap. It has been a very fascinating discussion, and as Q mentioned, it's a game of demand and supply. So yeah, so go ahead for it. And the corporations who are looking for adopting Bitcoin and who's looking for Treasury can reach out to DDC, can reach out to Q, and people can reach out to HexTrust. Alicio, they'll be here. Okay, guys, that's a wrap. Thank you for joining us.
Day 2 of Bitcoin Asia 2025 is heating up. We've still got so much more in store. We've got Adam Back, CEO of BSTR, Matt Cole, CEO of Strive, and it all leads to Eric Trump, Executive Vice President of the Trump Organization, here to unpack all you're about to see and what's still to come. We've got a packed panel. George McHale, Managing Director of Bitcoin for Corporations, and joined now by Tracy Hoyos Lopez, Chief of Staff at Kraken. So taking the people at home into the conversation. If you're watching on X, Rumble, and YouTube, we appreciate it. Like, subscribe. Institutional adoption, it's happening. The investor base of Bitcoin is changing. Tracy, what are you seeing on the ground, and what can people expect?
I'm seeing more companies become a lot more bullish about Bitcoin, where we weren't about a couple of years ago, right? Everybody was afraid about Bitcoin. Everybody was afraid about the regulations. And today what we're finding is we have a president who loves Bitcoin, has embraced Bitcoin, and as a result, we have a trickle-down effect. Everybody wants to get in on Bitcoin. Everybody wants to get in on the Treasury play. The question is, which Treasuries will survive?
A provocative question. George, I know you're working closely with these companies. Proliferating now, over 300 globally. Consolidation, expansion, what do you see?
I mean, I think definitely expansion. We're going to see every company become a Bitcoin company. Companies that are coming out of the woodwork right now have nothing to do with the space, and they're like, this looks like something we should investigate. And so more and more companies are going to add Bitcoin to their balance sheet. Some are going to survive, some aren't, like Tracy said. But I think at the end of this, Bitcoiners should be bullish because the entire world is getting repriced in Bitcoin, essentially. This is the very start of it.
Well, CZ on stage talking about how Bitcoin will become the global reserve currency. Obviously interesting given the context we're here in Asia and the changing power dynamics. Globally, the race to issue stablecoins is on. Tracy, your thoughts on just how this will shake up global finance?
I mean, stablecoins are going to be part of the future. I think that it's a way of accomplishing the proliferation of the US dollar, as the president has stated. But you know what I'm really, really looking forward to? The day we can peg stablecoins to Bitcoin.
Okay. A Bitcoin-backed stablecoin may be coming in the future. So, George, your thoughts? Global reserve currency. I mean, today it's the United States dollar. Tomorrow, Bitcoin. What does it mean for folks in Asia and around the world who are listening?
Yeah, no, I think one of the things CZ pointed out was that the U.S. is setting the pace. President Trump, the administration has deregulated a lot of what previous administrations have put in place, and I think other countries are going to follow suit. It's pretty typical for that to happen in the geopolitical environment that we're in. But I don't know how far we are away from Bitcoin being the global reserve currency. I want to be bullish on that idea. I hope it happens in our lifetime, honestly. But I think we got a few more phases of this that need to play out first.
But we're definitely headed in the right direction.
We are. We're on our way.
Well, if you're listening at home, you're still early. We're sending it back to the main stage. Still more to come. It's Bitcoin Asia 2025.
IPO in UK history and over 425 years of British capital markets, correct?
That's correct.
Ah, wonderful. And Capital B currently has the most Bitcoin of any European listed company, correct?
Correct, and we were the first one.
Very nice. So everybody's super high on their own supply right now, and the coin is pumped, and we got a lot of coin, and it's excellent. But we want to talk about what is the how this all might end up, you know, at the end of this cycle, at the end of next cycle, at the end of the next decade, and maybe even beyond. So I think the most basic question to start with that is, what do you see from an investor's perspective as the biggest risk when you're investing in Bitcoin treasury companies? Of course, when you're investing in Bitcoin treasury companies, there's a lot of angles of order, but for the most part, especially people in this audience, they're trying to get, you know, more Bitcoin, right? You could buy Bitcoin and put it in your shoebox or under your mattress or whatever, but you invest in the treasury company so you can have more Bitcoin, right? Because you guys and the Bitcoin treasury companies, they have cheaper cost of capital, they have more access to more financial tools. I mean, companies in almost every single regulatory jurisdiction on earth have advantageous positioning to individuals for accessing capital and financial instruments, correct? So that's why the bull case, I suppose, of why an investor would want to invest in a Bitcoin treasury company, in addition to, maybe not in lieu of completely, in addition to their personal Bitcoin stash. But what should investors be looking for to watch out for from, as these, you know, every single day we see what half dozen new announcements, new entrants into the market?
Hey, look, yesterday I met an investor and he told me, you, on panels, you always talk about the bullish case for Bitcoin and Bitcoin treasury companies. And he asked me to potentially address some of the concerns of investors and what are the risks. So I would say in terms of what investors are expecting, they are expecting a management of risk as well, and the perspective on the long-term perspective of Bitcoin treasury companies. And I would like to say first that the riskiest option for investors is to not get enough Bitcoin exposure. The riskiest option and the risk that investors look at is how to get rid of fiat that is getting completely debased. And then they look at different options that they have to do so, and they have Bitcoin itself for a very specific portion of investors because it's a commodity, and 90% of capital in the world is going to be allocated to securities. And the goal of a Bitcoin treasury company is to securitize Bitcoin and to provide a form of Bitcoin exposure that is accessible into traditional brokerage accounts and for credit markets and for traditional institutions that are looking for equity. And so then the risk of Bitcoin treasury company is to have, of course, a form of higher volatility than Bitcoin itself. But if you know Bitcoin, you understand that volatility is vitality and volatility is also opportunity. And so if a Bitcoin treasury company is more volatile than Bitcoin, but is purely based on Bitcoin and Bitcoin accumulation, and it's forming a Bitcoin accumulation machine on capital markets, then yes, there might be more downside risk as an investor, but yes, there can also be more upside potential if you have a sufficiently long time horizon. And I think that both Smarter Web and Capital B, we are providing this type of options to investors with different type of risk appetite and different type of financial instruments that can provide access to Bitcoin in a way that can outperform Bitcoin over time with more volatility in the short term.
Yeah, I think the biggest risk for investors is execution. And so, you know, if you're investing in a Bitcoin treasury company, you're typically paying a premium upfront versus the Bitcoin exposure that you're acquiring with that investment. And what you're investing in is the expectation of a continuation of Bitcoin yield into the future, of adding Bitcoin per share going forward into the future. And that's the flywheel. That's the Bitcoin treasury company flywheel that you're hoping is going to continue into the future. And that execution risk is the biggest risk there of perhaps the flywheel never getting started at all. Or perhaps the flywheel losing steam and stopping, and you don't return the investment, the premium that you've paid up front for that. So that's why I think that we don't talk enough about how there's, now there's 200 Bitcoin treasury companies in the world, and a lot of them will never get the flywheel going. A lot of them will struggle to get off the ground and perhaps never really deliver that value back to investors. So I think that it's helpful to think about what's the track record of execution, and is this company de-risked enough to justify paying a premium up front, because you can have some reasonable expectation of a continuation of the same activities to generate Bitcoin yield into the future.
And so in the in the ICO wave, 2017, there's how many scams? Infinite scams. So many scams. I can't even remember all the scams, but thousands. And in the last cycle, we had FTX, we had BlockFi, and Celsius, and 3 Arrows, and a lot of other scams. What's his name? Terra Luna, a whole bunch of garbage that imploded, and in hindsight, you could say, oh, we could see it coming because of XYZ or whatever. What are people going to say in hindsight? What is the big scam implosion going to be in this space? And then what are people going to say afterwards to seem smart, where they say, oh, I saw it all along. I did this and this. I never even invested in that company. They came to me super early. I never invested because I knew.
Yeah, because this is the Bitcoin conference, I will go out on a limb here and say that in hindsight, it will be very obvious that treasury companies not built on Bitcoin were a mistake. I think that they will get into trouble just because you're building your foundation on sand, on quicksand, instead of on the bedrock of Bitcoin and the very real economics there. I think the other thing where people will get into trouble is debt and getting over leveraged, and in any drawdown, those companies can get into trouble pretty quickly. So people who get out over their skis in terms of how they're raising capital with debt could get into trouble. And then there's also other companies whose approach to growing their Bitcoin treasury involves taking shortcuts, or raising capital at deep discounts to institutional investors, and not really treating the flywheel with respect, I think. And those flywheels may stall out as a result of approaches to raising capital. So there's a lot of ways where you can do it wrong. And I think, we have a lot of respect for Capital B and how they've approached their Bitcoin treasury flywheel. And I think that, investors should take care to pay attention to.
And from the investor perspective, for taking care, what's the biggest red flag, or what's the warning sign? The number 1, 2, and 3 warning signs that retail investors should be looking for?
Look, if you want 3 flags, I would say that you can put 3 filters to separate the noise from the signal. And the first one, as Jesse mentioned, is this company focused on Bitcoin? Because Bitcoin is the only asset on Earth that has absolute scarcity, that is protected by the most decentralized and secure network in the world, bounded by real-world energy, the equivalent of 21 nuclear reactors around the world, protecting the value of your time and work over time and space. That's quite unique, and it's the first time in humanity that you have this unique information that this asset is working for you over time. And this network is powering you, your family, your corporation, your institution. And so if you are focusing on any other asset than Bitcoin for your treasury, then your company is going to zero. And it's going to zero against Bitcoin, and you are not going to be able to keep up against the other companies that have realized that they need Bitcoin on the balance sheet. It's like having a competition between the dollar and the Zimbabwe dollar.
well, you would want to, if you had the option between those two currencies, you would put everything on the dollar. But now you have the option with Bitcoin, and Bitcoin has a fixed supply, while the dollar has an unlimited supply. So where do you want to store your energy? Where do you want to store the value of your treasury? You want to store it in Bitcoin. So if you have not a focus on Bitcoin as a treasury, you are going to lose, and you are going to do a disservice to your shareholder base. So anything other than Bitcoin, any type of diversification, is losing value against a Bitcoin treasury company. The second filter is the focus on the long-term accumulation of Bitcoin, and specifically all in on the long-term accumulation of Bitcoin. Is the company fully committed on a Bitcoin standard to putting all of its long-term capital to Bitcoin on its balance sheet? That's the case for Smarter Web, that's the case for Capital B, that is the playbook of Strategy that has initiated the playbook, and Metaplanet, of course, and we have continued this with Capital B and Smarter Web. And I would say that this is the second principle, and it's extremely important because it guides from an ethical perspective what will be the role of the Bitcoin treasury company in capital markets. Because when you raise capital, you need to be a Bitcoin maximalist to negotiate terms with financial institutions that protect your retail investment base and that are extremely accretive over time, not to make a quick buck, not to make a quick pump and dump scheme and then lose the capital over time of your shareholder base. So I think that's an extremely important component. And the third filter is whether or not the company is completely committed to have a Bitcoin treasury company strategy, like Metaplanet, Capital B, Smarter Web, by being completely focused on maximizing the number of Bitcoin per share. And if you own a business and this business is not increasing the number of Bitcoin per share over time, this business is going to zero against the business that is maximizing the number of Bitcoin per share over time. That is my only role in the company. It is to raise capital, to maximize the number of Bitcoin per share by accumulating Bitcoin in a consistent manner, and to do the capital raise in an accretive way that is at premiums to the Bitcoin we have on the balance sheet, to be able to maximize that potential return over time for investors that believe in Bitcoin. And if you apply those three filters, you really end up with a hand of companies in the world today. And that provides a lot of clarity and a lot of peace of mind. And at the end of the day, when we talk to major investors, what we are able to do as a completely focused Bitcoin treasury company is to provide peace of mind for investors that know that they have a team that is dedicated to buying more Bitcoin for them over time, and that is extremely powerful to take advantage of capital market, the elasticity of capital market, to acquire the most inelastic asset on earth, which is Bitcoin.
Yeah, I would add that on your third point there, that there's kind of an obvious thing that we don't talk enough about there are some companies that are Bitcoin treasury companies focused on Bitcoin yield, and then there's other companies who are saying they're Bitcoin treasury companies who are really just adding Bitcoin to their treasury, and they're not committing to the Bitcoin yield side of this, the shareholder mandate of focusing your time and energy and all your capital on increasing Bitcoin per share. For example, like Tesla has Bitcoin on its balance sheet. That's just part of their Bitcoin of their treasury strategy in general, but they're not a Bitcoin treasury company. I think the vast majority of corporate adopters will end up being companies that have Bitcoin in their treasury, but they're not focused on increasing Bitcoin per share. So there really there's a handful of companies in the world that are Bitcoin treasury companies focused on increasing Bitcoin per share, who have a track record of doing that and have generated Bitcoin yield over time and have the infrastructure and everything that you'd expect in place to continue that into the future.
but that line's like not solid line, and it's going to be increasingly more blurry, no? I mean, so like right now, we're in this like initial mania phase of like Bitcoinizing the capital markets, and so we've raised like a lot, like my firm personally, we raised a lot of money this year for these plays, and so thus far, right now, people almost don't want like actual business. It's like, oh, even if you have a business that's generating revenue, they say, oh, I'm not in this to, or I mean, the mindset is like, oh, I'm not in this to fund XYZ business. I'm not here to fund a printing company, or I'm not here to, we want to buy Bitcoin. And, but if Bitcoin's like the money now, is going to be, the economy is going to be Bitcoinized, we're going to hyper-Bitcoinize the world or whatever, then in due time, every company that will survive is going to become a Bitcoin company. And that desire to have no business instead of a business, you know, it's like a big business is almost is disadvantaged. You prefer a smaller business if you're going to like, as of, you know, the time before today. We'll see what happens in the following months. And no business is even better than a small business, but clearly that cannot be sustainable, right? So how does it come to pass that the entire global economy is Bitcoinized and every single company that survives is a Bitcoin company by the nature of them having to use Bitcoin in their accounting because Bitcoin is the money? And right now we have this scenario where it's almost like the smaller the better, and like you were just mentioning that a Bitcoin treasury company is different from a company with a Bitcoin treasury, but clearly there's going to be some point in the future where having more revenue to acquire more Bitcoin is advantageous to being an empty shell. So especially, and everybody here, we have a lot of respect for Jesse because he's been one of the first and proper managerial consultant, educated class analysts for Bitcoin treasury companies. So if you haven't seen his analysis, it was very inspirational even to Michael Saylor. They say, I don't know fully, but people have said that Michael Saylor was heavily influenced by Jesse here. So that's why having you on the stage here is such a pleasure to hear the alpha of where we're going. How do we make even more Bitcoin, please?
Thank you. That's too kind, too kind. Yeah, I think you're right that ultimately it matters if you're an operating business, but that's at the end of this S-curve of Bitcoin monetizing and becoming the money for the world. And I think we're at the very early stages of that process. And Bitcoin treasury companies right now are the conduits by which we will accelerate the flow of capital from analog store of value buckets like equities, fixed income, the money market, even real estate, and flow that value into Bitcoin. So Bitcoin treasury companies become the piping for hyper-Bitcoinization, the plumbing for hyper-Bitcoinization. And we've seen that with strategy. They've created these products to go meet capital where it's at, in the fixed income market, in the equities market, in the money market now with Stretch. And they are accelerating the flow of capital from these traditional buckets into Bitcoin. They're pumping capital into Bitcoin. And we're going to see that in every capital market in the world. And that's going to be the story of Bitcoin treasury companies becoming the conduits to help accelerate the flow of capital into Bitcoin. And we're at the very beginning of that process because in the global asset landscape, Bitcoin is currently 0.2% of global asset value. There's $1,000 trillion, a quadrillion dollars of value in the world, and Bitcoin is just 2 trillion of that. And so, you know, Saylor has said that 20 years from now, Bitcoin will grow from where we're at today to $13 million per coin, and it won't be done then. It'll keep monetizing from there. And I think that Bitcoin treasury companies will be a big part of that story over the next 2 decades. So I think the highest and best use of a corporate structure at this point in time is to accumulate Bitcoin in a way that's accretive to shareholders. And eventually it starts to matter if you're if you're generating profits because we've already fully monetized Bitcoin and there's no longer an opportunity to help capital flow into Bitcoin. But until we reach, you know, the latter half of that S-curve, the most valuable companies in the world and the most undervalued companies in the world right now, in my opinion, are Bitcoin treasury companies because of the opportunity in front of them.
And so we had what was it called? Oh yeah, Microsoft. You heard of that one. They had a shareholder vote, and it was like 99% voted against even allowing the option of having any Bitcoin on the balance sheet, correct? So let's say like in the future they vote 99% for it. What does capital B, what does the future for capital B and Smarter Web and companies like that look like at that point? What is the end game for them when or even the mid caps, you know, even whatever, I don't know, General Electric or some failing, you know, legacy business like that finds that they need to adopt this strategy for a chance of survival?
You know, you asked a question that is commonly asked questions among investors. And this question is, you have a balance sheet strategy, and what will be the next thing and the end game for a Bitcoin treasury company? What is the P&L? You know, in traditional business, a business is made to make money. What is the best form of money? It's Bitcoin. And what is a Bitcoin treasury company doing? It's making more Bitcoin. And so the business of a Bitcoin treasury company is the business of making money. And the best way to make money and to make Bitcoin is literally today to acquire Bitcoin through the capital markets. And so in some ways, during decades, the best way to make money was through a P&L. And today, the balance sheet is the way to make the most money, and the balance sheet is in some way becoming a P&L. It's just that when the business makes money and acquire Bitcoin, accumulates Bitcoin, it's not fitting that well into the traditional markets and the traditional reporting, but that's why we have new metrics for investors to analyze that way that Bitcoin treasury companies are making more Bitcoin, and that is called BTC yield, that is called BTC gain. And BTC gain is just how much Bitcoin have you added to your balance sheet adjusted for dilution. That's literally making money. You are strengthening your balance sheet, and that's the end game for any company. So what is the mean doesn't matter as much as what is the end. And if the end is that you become the company that has the most Bitcoin on your region, and you have a dominance on the issuance of securities that allow you to grow your Bitcoin balance sheet better than other companies, then that's what you should do as a rational player in the market. And look, if Microsoft goes in and buys Bitcoin, that's good for us, because we would have been the first together with Smarter Web and the others to acquire Bitcoin, and they would literally increase potentially the Bitcoin price in fiat. So traditional investors would value the companies that are doing it the best, because it's not only about the size of the balance sheet, it's about the execution, as Jesse mentioned. We are a team of financial engineers in Bitcoin capital markets. We have a shareholder base composed of Adam Back, the only person mentioned in the Bitcoin white paper, and a major financial engineer as well. We have Fulgor Ventures, GTXO Management, Tobam, a major asset manager. And our board is composed of coupled like 60 years of capital market experience, banking experience, Bitcoin experience. And in that way, well, you create the best conditions to increase your Bitcoin balance sheet. And that's how you make money. That is the business model, and that is literally the business model of a central bank, is to issue securities and build a major balance sheet. And that's what the Bank of France and the Bank of England have done with gold during centuries, and that's what we are doing. And we are literally the central bank of our own security, that we have the monopoly to issue on our own capital markets, and we have the capacity with Smarter Web to accrue billions and billions of dollars of value of Bitcoin. And at some point, the value of dollars will not matter anymore, and what will matter is the number of Bitcoin on our balance sheet. For us, it's already the case, but there are hundreds of trillions of units of capitals in the world, and those are going to be transferred to Bitcoin, and the Bitcoin treasury companies will be the ones that will then partner with PNL, BTC generating companies that will want to have access to the securities of the Bitcoin treasury companies to get an outsized performance for their own PNL. And so the balance sheet is the PNL actually for a Bitcoin treasury company.
Yeah, I think this comes back to like, what is the identity of a Bitcoin treasury company? And, you know, what does Bitcoin not do for you? It doesn't generate yield, right? Like there's no way to make more Bitcoin by holding Bitcoin. And so the identity of a Bitcoin treasury company is finding ways to generate Bitcoin yield. And right now and for the next 2 to 4 decades, that's going to be using capital market tools to help facilitate the flow of TradFi capital and trapped pools of capital into Bitcoin and add Bitcoin per share in a very rapid pace that way. And in the process, these businesses are going to become the best capitalized businesses in the world. And you know, we're already seeing that with strategy. And as Bitcoin continues to grow in value, these are going to become the pristine balance sheets of people's dreams. And they will become the Bitcoin banks of the future, I think, in the sense that they will eventually shift from generating yield by arbitraging TradFi capital into Bitcoin. And you know, when we reach that future state of there's no more capital left to flow into Bitcoin because we've saturated all store of value in the world. At that point in time, then it shifts to operating businesses and finding Bitcoin yield by generating profits by becoming the financial institutions, the lenders of the future in decades from now.
4 decades.
Yeah, 2 to 4 decades, I'd say.
Wow.
And so that's the identity of what these Bitcoin treasury companies are. They are in the business of generating Bitcoin yield, growing your Bitcoin ownership over time. That means taking risk. And in the near term, the tremendous opportunity in front of this nascent industry is to help flow capital from the TradFi world into Bitcoin and grow Bitcoin per share.
All right, there it is, guys. The alpha is definitely worth the price of admission, was it not? We get here that we're in the beginning of a 4-decade-long bull market in Bitcoin treasury companies. And so I don't know about you, but me, I'm max bid. I'm ready to go. I'm a buyer. Some high IQ stuff here. All right, we're gone. Thank you very much. You're doing great.
Thank you.
We're headed to the conclusion of Day 2 of Bitcoin Asia 2025. This is the Bitcoin Magazine News Desk presented by Metaplanet. Still to come, Adam Back, Hashcash inventor, Matt Cole, CEO of Strive, and Eric Trump, Executive Vice President of the Trump Organization, here to break down the topic of the day, the changing global attitudes towards Bitcoin adoption and how this is happening globally. We have Frank Corvus, Senior White House Correspondent for Bitcoin Magazine, and Tracy Hoyos Lopez, Chief of Staff at Kraken. Tracy, we'll start with you. Obviously, what's happened in the U.S. is reverberating now globally. What happened with the election and how progressive the administration has been about being open to this industry. Can you speak about that and what you've seen in the context of Bitcoin Asia?
Well, what we are seeing is that regulators are opening their doors to having more conversations with us around the world, not only in Asia, but obviously in other parts of the world. our own regulators in the United States are willing to have more conversations. Obviously, in the US, we're seeing that we're working towards market structure. And I mean, the conversation around Bitcoin has evolved so much. I mean, Pete, did you ever think that we'd be in Asia discussing Treasury companies 2 years ago?
It's wild times in this industry.
Exactly. It's been super wild. Here we are. The conversation is happening. The question is, where do we go from here?
Well, Frank, we know that you're behind the scenes. You're talking to the administration. Do they have a sense of how their actions are having an impact on conversations here?
Yeah, no question. Not only administration, regulators as well. I've spoken with members of the CFTC, the SEC about this kind of stuff. And when they think about crafting policy for the United States, obviously it's a U.S. first perspective, but they understand that it will have ripple effects globally, that what we do in the United States essentially gets copied and pasted around the world. And I think that that's something that a lot of people are paying attention to. I mentioned this a little bit earlier. I was recently asking a question in the press room around something that President Trump had mentioned about de minimis exemptions for spending some Bitcoin. And a clip went viral of myself and Carolyn Levitt speaking, and the amount of messages I got from not only within the United States, but from around the world, people saying our government needs to see this conversation happening in the United States. They need to see this sort of thing for them to start taking action in our country. So yeah, we're sending a message loud and clear.
Well, the message reverberating. We're headed back to the main stage. More to come, day 2. It's Bitcoin Asia 2025.
And that debate is Bitcoin purely money, or is it more? So I'd like to just start there. What do you think, Yat?
Well, I mean, I guess to kick off, I mean, Bitcoin is much more than money. From my perspective, if you look at the network effects that Bitcoin has built, it may have started as a construct of a savings account almost, in the sense of its core mission of, I guess, the ultimate store of digital value. But it's become much more than that, right? You can see people who have Bitcoin, maybe they're part of a club, maybe they're invited. Like, my personal thesis as to why Bitcoin will be $1 million isn't because of the implied scarcity. It's because it's going to be a club, right? You know, take ordinals aside, which is another element of that. It's going to be the fact that someone who has one full Bitcoin is going to be a member of that new digital elite class, so to speak. And there's only so many that go around. If you think about the number of people who are millionaires in the world, there's more than 21 million, right? So there's certainly more demand for that. So that's kind of how I see that. And assets and ownership have always been proxies for who we are, right? I mean, clothes we wear, the things we do, the places we live in, the identity, even our nationality, which are all forms of properties that we have, form some of who we are. So if you go out and say, I own Bitcoin, you're not just saying, I have money. You're saying you're part of a culture, be it decentralization, be it sort of QE, whatever it is. You stand for something, and that's true for all sorts of assets. It could be a Gucci bag, it could be a Bored Ape, it could be land and sandbox. They all represent that, and they all form our identity. So I think it's much more than just money.
Yeah, I think, Bitcoin is first and foremost a ledger, right? And so, when you run a Bitcoin full node or you mine Bitcoin, you download Bitcoin in its entirety from the first Genesis block mined by Satoshi in January 2009. And so obviously there's the economic store of value narrative, which we've been talking about a lot throughout the last 2 days. But now with inscriptions and ordinals, it's also a ledger of cultural data, because you can put whatever you want onto Bitcoin, and anyone who runs Bitcoin or mines Bitcoin is storing that data on their node. And so effectively, Bitcoin is also the best, most robust digital data archive in existence. And yeah, I think that's an interesting cultural angle to have on it as well.
You just described history.
Exactly.
Well, without repeating, yes, for me, Bitcoin is much more than a store of value. It's definitely a store of culture, but it's also, it's a philosophical moment. It's a movement. It's a democratic movement. It's a technology advancement that pushes an industry. It's been the main ambassador for the adoption of the whole blockchain technology that sparked a whole industry and a whole sector behind. And without Bitcoin, I think we wouldn't see any trails behind of Ethereum or the blockchain, the whole industry and culture that's been pushed onto it. I think Bitcoin stands for now for probably the most censorship resistant and technological resistant as well store of information, and that information and data can represent anything we like. So I think we can consider it's probably our future. Bitcoin will probably outlast any of us. That's the wish we have.
So
Yeah, I've heard you describe this unique ability with Bitcoin to own a piece of the network. So can you share more about what you mean by that and like what that might look like in the future?
So when I say own a piece of the network, it's the property ownership that you have in something that has a network effect. And you know, we own things in a network in a way when we're a citizen of a place, or we're a member of a company, or have a membership in something. It's implied that we are kind of owning it in a sense, but we could never really benefit from that ownership in a direct way. So I guess in a very simple example with Bitcoin, if I own Bitcoin and you own Bitcoin, there's a kind of interesting kinship, which is interesting, right? It's not just, oh, okay, you have money. And this is not how people react with, you know, dollar. Maybe it would have been different before, you know, pre-QE, when it was actually during the gold era, store of value. But we treat Bitcoin as a community. And so that means when you own one, or you own basically sats, you're basically a member of that. And so you're part of that club. And from that come benefits. Why do I want to be a member of that club? Because there's business opportunities, because there's relationships, and because it is transactional and there's value involved, that's actually how relationships begin. This is much more prevalent in Asia. I grew up in Europe, so I see the contrast. In Asia, it's very normal to make friendships through money, right? You do business, you have a transaction, and then from that, you build a relationship. And you know, not every relationship through money develops into friendship, but many do. Right? It's the way that it's the first grease, as it were, to make the connection. It's the icebreaker. It's the commercial icebreaker of any relationship, shall we say. And there's many other ways you can take it further. I mean, you could even argue that certain other relationships are also transactional. Anyway, I won't go there. But the point is that that's actually how you build that bond. And from that, you develop from that. I mean, Bitcoin in the beginning was really just that. And then it evolved into something much deeper and much greater. And that's being part of a network. And by the way, I think of this as every form of tokenization. It expands the network effect of that ecosystem. So even, you know, if you look at a stable coin, the irony of a stable coin is that despite the fact that because of QE, it's worth less than it ever was before, its impact, its network effect, its influence, its power is greater than ever before. Because now you can use that stable coin in Nigeria, in Tanzania, in South America, in places you could never do before. So it's more powerful, more influential than ever before because of that network. It's a new asset. It's a network asset. And by owning it, you own the stores of that network effect, which is implied but was never able to value. I think a lot of people struggle with this virtual value aspect. But you know, the biggest growth we've had in the last sort of decades has been in intellectual property, trade secrets, and patents. And that's entirely virtual as well. So this is just another way of representing that virtual value.
So, Sebastian, you are the co-founder of the Sandbox, which actually doesn't have a direct connection to Bitcoin specifically. But in this network, people can earn, play games to earn this token. Like, what does this look like for a player?
Well, I think really, Sandbox is a decentralized virtual world where people can create content, can own the asset that they create, but they can also own the currencies that support the world with the Sand token, and they can own the virtual real estate, which is like the digital space where those experiences and games are being played and published. And you have many ways to actually be part of the Sandbox or to own the network that Sandbox represents. You can own a land, you can own an avatar, which is your digital identity, you can own Sand, which is a currency. You don't necessarily need to be a player only and just try to play for the rewards. That's just actually a fraction of what it is. And what we realize is, like, as we've been empowering hundreds of thousands, even millions of users to become creators for the first time, to earn crypto, we onboarded 8 million users to Web3 with Sandbox, which is quite sizable, right? We want as well those creators, those players, those landowners and sandholders to benefit from the value they created. And that means that we need to expand Sandbox beyond what it is now. It shouldn't be seen just as a game platform. It should be seen as a digital nation where every participant is contributing in a way to the value. And that's why I think it's essential to really evolve the vision here, and that's what we're working on.
So you alluded to this, but today ownership really is renting everything. So that could be the music that we listen to, that could be the books that you purchase on your Kindle. really you are just renting a license to use something. So how does Bitcoin, how can Bitcoin change that? Aaron, let's go to you.
It's kind of interesting because in a way, Bitcoin is a new model of property ownership, right? Like, or maybe it's not new. I was actually just talking to Robert, I think Ellis was his name, the artist in the art gallery who has those really beautiful like Bitcoin block. I don't know, it's over there. You'll see what I'm talking about if you go over there. But he was explaining how the design of them was based off of something that was kind of like a proto-ledger, like what we have with Bitcoin, where there were these big rocks that couldn't be moved easily, and you would basically say, that's mine, and everyone would agree, like, yeah, that one's yours. And then you'd be like, okay, I'm going to sell that one to this guy. And does everyone approve and see that that's happening? And everyone's like, yeah. So it's still in the same place. That rock is not moving. It's a huge mega rock. But now the ownership has transferred via social consensus. And that's how Bitcoin works too, right? You don't actually physically have the Bitcoins in your wallet. You have proof that you can access those Bitcoins and move those Bitcoins. And so it's kind of a different model of property ownership than something like owning a house, where you physically live in the house, or you own a house and you trust that the state will enact violence on someone if they try to take that house from you. Bitcoin doesn't work like that. And so I don't know, I think I'm still sort of like trying to noodle on this idea, but I feel like we have this new or maybe rediscovered model of property ownership that Bitcoin is playing out through like consensus rather than enforcement of violence as a way of showing property ownership.
And so with Bitcoin that has this new sense of property ownership, or a new way of modeling this in the digital world, if we already have this neutral, permissionless money, like why is there a need to launch other tokens? So this is a question for both of you, Yat, Seb. Like, why not just build this on Bitcoin?
Okay, so first of all, thanks for the question. It's interesting because we're in Bitcoin Asia, and now, as some Bitcoiners would say, why are we talking about shitcoins here, right? Like, what's the story here? So let me first sort of talk about the construct of economics in my lens here, which is Bitcoin is the ultimate store of value, and it stands from a culture standpoint for something. But again, when you look at ordinals, remember, the people who bought ordinals weren't the people who had a lot of Bitcoin. It was basically people from the Ethereum ecosystem, from the altcoin space, who moved over to Bitcoin to buy that because they were excited about that, not the Bitcoiners.
Was it the ancient Bitcoin whales?
No, well, many of the Bitcoiners didn't like it because they felt it was dilutive to the principle of what they believed Bitcoin should be, right? They didn't like that. They think, BRC20s and so on, these are all things that we shouldn't be touching because it was another form of that, right? It's arguably dilutive, even though the mining rates could become arguably more sustainable because BRC and ordinals were actually taking essentially mining power from that. But let me go quickly on the altcoins. Bitcoin as a store of value can be viewed as kind of digital gold in a way, and there is value for it being finite. But to me, the idea of finite is unnatural. The universe is not finite, as in it keeps expanding. We keep growing. We're expanding. So if you have something that is finite, then it means this structure can be a store of value, but it can't expand into the reach of human potential because we're limiting ourselves by saying this is the only resource that's out there. It's kind of like saying, hey, we can only ever build houses with bricks. Okay, that means every other resource is not possible to build something because we're restricting that. That's unnatural. It limits innovation, creativity. We have to be grateful for Bitcoin for what it has done to lay the foundation that we can have the altcoin industry. But the altcoin industry is the expression, in my view, of the innovation that's possible from the ledger, from the blockchain, to then express it in other areas of innovation, whether it be DeFi, Web3 gaming, new launches. How do I bring billions of people into the world of tokens when it becomes too expensive? Even if a SAT becomes too expensive, right? But I can do this through inflation. You could call it inflation. But if we didn't have inflation in our money system, then we actually wouldn't have any growth. and most of us would live in poverty when you look at it economically. So I think altcoins have an incredibly important role to play, but we recognize that Bitcoin is king, and Bitcoin is the granddaddy of it all, but it is important to expand the space. That's how I think of it.
If I can jump on that one. First of all, like, everyone has done such a great job at pushing the idea that Bitcoin is a store of value and is going to grow in price. That if I ask the audience, like, who has Bitcoin, please raise your hand. Don't be shy, raise your hand if you have got Bitcoins. And like, who's ready to spend it now? Like, or just you want to keep and hold for it? Very few, actually. And so, well, you're pretty rare. And so, like, you need to have the ability to spend the currencies to be able to like consume and grow. And I want to look at like also the history of Bitcoin. Bitcoin wasn't really that programmable money as much as we wanted at the beginning. Like, we had to come with Ethereum and smart contract to be able to implement logic and be able to develop like the ability for application to grow their network, to grow as single state or digital nation, to attract their own users, distribute again, and have maybe other technological property like faster transfer, cheaper gas fees, and all the requirements that we have. And that has evolved into the need for L2s and sometimes L3s, and that also pushed back into the Bitcoin history. Now we have like L2s on Bitcoin. Sometimes people are trying to apply a smart contract now to it. It's quite important. I also think that the way that Bitcoin is being used doesn't allow you to grow a community, to share the value with a network, to bootstrap user acquisition through airdrop and tokenomics at the beginning, because like, we don't really know who is the creator of Bitcoin. We don't have access to distribute it easily unless you are a big whale that were really one of the OG in the space. So there are many limitations to provide adoption of a network if you were to rely only on Bitcoin.
I just want to add also one thing, which is that when people make money on the altcoin space, they put it in their savings account, which is Bitcoin. So the altcoin space isn't actually sort of what some people accuse Bitcoin to be in terms of taking away value. It actually generates that value. You create wealth through NFTs or through other token ecosystems, and then you end up buying a lot of Bitcoin as part of that. It's part of that economic engine that grows it. There's a reason why when Ethereum grows, the altcoin and the general token ecosystem grows faster, because people who earn Ethereum spend it more readily. That's a culture, right? Partially because it's inflationary, right? If I sit on Ethereum, I spend it. If I sit on Bitcoin, most people don't spend it. You don't create an economic flywheel when people don't spend. But when they make money, then they want to save some, and that's the role of Bitcoin as the ultimate store of value, which is really the mission. And so I think it's very aligned, in fact.
So, Aaron, one of the things that you do is you're the host of the Hell Money podcast. And you know, we've talked a little bit about content ownership. Do you see Bitcoin supporting your monetization of the content that you create?
So it's interesting. I mean, so for information, I feel like the nature of information inherently is free. And when I say that, I mean, like, you know, my podcast is out there, it's CC0, you can do whatever you want with it. And I think that fighting against that is sort of like fighting against the tide, you know? It's just, yeah, information wants to be free, and we are in an age where information is flowing so rapidly that I think to try to put limits on that doesn't make sense. So I would bring that up just to say, like, ideologically, I make content and I put stuff out there for the purpose of people to freely consume it. The nice thing about being a Bitcoin podcaster and doing stuff in the Bitcoin niche is that everyone that watches you gets richer over time. And so they want to voluntarily support you and have the means to voluntarily support you. And I think that that's kind of the nice thing about once you go down the rabbit hole and you get orange pilled is, at least for me, before I was into Bitcoin, it felt like the future for my generation was very dark. You brought up earlier, like, no one owns their houses anymore. You rent everything. There's no ownership. That is not the way that Bitcoiners feel. Bitcoiners are very optimistic about their future and the future of the people around them. And I think that that also helped me to be more freely giving with, like, putting my thoughts out there and my content out there and just trusting that you know, the wave that I'm riding is the right wave to be on. And so, I don't know, it gets into a whole thing about like scarcity versus abundance, and Bitcoin is kind of this scarce thing that creates abundance for the people that are into it. So, you know, at the bottom of every podcast episode, I have a Bitcoin address you can send a donation to, but I don't think that kind of paywalling or trying to monetize every aspect of content creation is the future. I think the more that you can get information freely out there, the more that you're riding the wave of what's happening right now.
Yeah, I love that paradox that the actual scarcity of Bitcoin creates abundance. So for closing thoughts, let's imagine that it's 2035. Bitcoin's the world's reserve currency. What does, you know, content creation, Web3, tokenomics, all of these types of things, what does that look like? Is it built on Bitcoin?
I can jump in. I don't think it will be built on Bitcoin, but it will be built with blockchain principle on it. So imagine a world where the creator economy is like fully in place. You push content online on a platform, you get instant stream payments to you as like there's like advertising revenue, sponsored content, you're selling product. You no longer have to wait those 30, 60, 90 days to collect payment through the traditional payment system. You can also monetize the social graph, your network as a content creator in a way, totally different ways, like your community, your audience, your social token on-chain that is, and you can grow value with your fans and creator. And I think as well, like your fans can become your investors. So as they contribute to grow your reputation, they can also earn something back from that. That's really where I think we should be all heading.
You know, I think when you ask about something like 2035, there's also this whole question about AI, right? That's what first comes to mind is like, we're entering a really weird period of history where it's going to become very difficult to figure out what's real, what's true. I mean, for example, like my podcast, right? Someone could just train a model on my podcast and probably create 1,000 episodes on it, and it might be pretty convincing. I'm a little formulaic in my talking points, so you could probably just get the same beats over and over again and just have it on different topics. And so I think in a world like that, having something that has this consensus truth to it that Bitcoin has is extremely valuable. It's hard for me to say exactly how that will play out in terms of like Bitcoin's integration into that very weird future that I think we're headed into. But to me, it just feels obvious that something that has such solid, don't trust, verify level of truth to it is indispensably important in a world where you don't know what's real and what's true.
So I guess maybe just quickly to build on that, fully agree on a future in 2035, everything is going to be AI driven, but it's going to be very different because it's going to be agentic AIs as well. And, you know, something like $50 billion worth of airdrops were given by generally platforms, Web3 games, blockchains over the last 4 years. And what's the difference between a L1 and L2 versus an AI agent? When you have the ability to generate your own token. When you have the ability to generate your own token, you have the ability to generate value, and that's basically what blockchain does. It creates, it delivers and creates value at the speed of the internet. And as a result, we will find many millions of people in the world, maybe much more than that, ultimately also working for AI agents. Because when an AI agent has the ability to trade for money or make money or create money, they have power for the first time. Right now, AI is sort of capsuled to do things we want it to do. But they don't have bank accounts. And AI doesn't need a bank account. It can do everything on-chain. It can transact everything in this way. So what is the natural hedge for most people to have, in my view? It's crypto. It's Bitcoin. It's digital assets. Because that is the real estate, the scarce asset of the AI agents. They're going to be trading 24/7 while we're asleep, doing stuff. You're not going to have one AI agent. You're going to have 10, 20, 30. They're all going to be doing stuff, and they're going to be doing it with the digital assets, crypto, Bitcoin. And if you're not able to invest in big data centers or energy companies or, the next open AIs in the world, then how do you participate and not get left out? And I think that's owning crypto.
Well, I love to hear these thoughts, personally think that things will be built on Bitcoin. I feel like that's the only asset that has real intrinsic value based on all the scarce principles of it. But I appreciate all of your time, and we can agree to disagree and have a positive conversation about it.
Thank you so much.
Thank you.
Thanks.
Thank you.
Welcome back to the Bitcoin Magazine News Desk, powered by Metaplanet. We're here at Bitcoin Asia 2025, getting to the height of the day. We heard from CZ, CEO of Binance, earlier. Adam Back will be taking the stage soon, and it all leads to Eric Trump by the end of the evening. To my left, I have an all-star panel. Nolin Sumba, Director for Kenya for Machankura, which we'll talk more about in just a moment. Q, the Chief of Staff for DDC Enterprises, and Aaron Von Weirdum, a man who needs no introduction, the former Chief of Staff of Bitcoin Magazine, now Globetrotter.
Editor-in-Chief.
Editor-in-Chief. Chief of Staff, Editor-in-Chief. Lots of chiefs on this desk. My apologies, Aaron. Nolin, I want to go to you first. You do very important work in Kenya for a company called Machankura. Could you explain what Machankura is and the service that it provides?
Thank you so much for having me today, Frank. And I'm here on behalf of Machankura, and I can say just a bit of Africa as well.
Let's go.
And I'd love to put it out there that Africa is not just adopting Bitcoin, it's also building Bitcoin. And one of the products it's building is Machankura Wallet, which I work with. And with Machankura Wallet, you can be able to send and receive Bitcoin without the use of internet.
Okay.
So with or without internet connectivity, you can now send and receive Bitcoin. And
can you tell us how? So use a feature phone, right? Like the old Nokia phones, you can use something like that to actually transfer Bitcoin value.
Absolutely. Okay. So we have leveraged Lightning for this. So with a feature phone, you can be able to just, at this point, even buy Bitcoin.
Is that right?
Transfer it, yes, to anybody else in Kenya and even outside Kenya.
Absolutely
in
amazing.
African countries as well.
The Bitcoin space knows no end to the ingenuity. Amazing work. Q, I want to go over to you. I believe the work that you do, is it centered around Korea? What's happened, or broader Asia?
That's right. We are a Bitcoin treasury company. We're listed in the U.S. on New York Stock Exchange, but our home base is actually here right in Hong Kong.
Okay.
Our CEO started the business about 12, 13 years ago, and it was we started literally content creation even before that word came around. And then we started sort of introducing a lot of Asian food recipes to the world, and then we sort of transformed into a food platform where we started owning a portfolio of different food brands. But earlier this year, we decided to add a strategy to our portfolio, which is Bitcoin Treasury. So that's why we're here.
Okay.
And I've been with the company the last couple of months, and we've been busy buying and accumulating Bitcoin.
Okay, cool. So the company itself, cash flow positive business,
Absolutely.
and you're just saying, hey, let's turn this fiat into Bitcoin and hold that on the balance sheet.
Right. Underlying business, we're generating sales that's growing at 30+% a year, so no issues. We're cash flow positive. So this particular piece here is very exciting and new for us.
Love that. One of the many strategies for Bitcoin treasury companies. I'm going to come back to that. Aaron, I want to go over to you. Bitcoin, we're talking about Bitcoin through a global lens here. A lot of what we covered at Bitcoin Magazine, we had to touch on all things Bitcoin, whether that's mining in some part of Africa or whether that's the financialization of Bitcoin, what's happening across the globe with treasury companies. What was it like to manage all of that, to really try to send a message regarding all of these topics that Bitcoin touches?
I mean, I don't know about you, but when I got involved in Bitcoin at first, I was thinking to myself, I hope that one day I can invest in a publicly traded company that holds Bitcoin on the balance sheet that I have no claim on. That got me up in the morning.
There's no end to the sarcasm with that, Aaron Von Weirdum, so that got him up in the morning.
But on a serious note then, the Africa project, that in general, I think that, like, if there's one continent where Bitcoin can really show its real value,
its use case as P2P money.
Absolutely.
Yeah, I think Africa is just built for that almost. I really hope, for example, like we're seeing more mining happening in Africa, right? Like places where they have excess energy where you can mine Bitcoin.
Absolutely.
Like if from these places you could see circular economies sort of emerge where it makes sense because they have the Bitcoin. It's maybe not that easy to get fiat for the Bitcoin even. If they can just sort of spend the Bitcoin from the mining proceeds, there is a real potential that that you get the sort of real ground up innovation and adoption of Bitcoin, that that would be truly inspiring, other than the publicly traded companies.
He's into that too. He's into everything, that Aaron Van Verdim. I want to go back to you, Nolene. I was actually in Kenya with you late last year. I ended up in a Bitcoin circular economy there. I think it was AfriBit, Kibera.
Yeah, AfriBit Kibra, doing amazing work.
Absolutely incredible work. So this is an informal settlement, a very large informal settlement within Nairobi, in the capital. The BBC just did a special on this, and it was like pro-Bitcoin BBC. I think my brain sort of melted a little bit when I saw this. Can you tell us a little bit about like what it looks like, you know, beyond Machankora, but just general Bitcoin adoption on the ground? Who is using it in Africa or in Kenya?
Okay, so it must be noted that Africa's median age is 19. And with this age group, we have lots of unemployment. And if it's not unemployment, we have low wages as well. So this is a population that is in need of a way out, especially since we have currency instability, we have inflation eating away at our savings, and also the fact that we cannot just be able to get opportunities in Africa to cater for this growing population that is now almost a ticking time bomb. So what can be done, for example, in areas such as Kibra, which is an informal settlement? I've known Kibra for a very long time, since I was a very young child, and it has people coming in claiming to help the society, and they're bringing fiat money, and NGOs, I don't want to go, NGOs, exactly. I don't want to go deep into details with that. We know what happens. But as a result, we don't see the populations really changing. Their livelihood doesn't change as much. And so with projects like AfriBit, they are coming in and they're teaching people about money. They're informing them about how they can be able to save, how they can be able to
plan for their future.
Plan for their future. And in Africa, whereby savings isn't really a culture, with Bitcoin, once we're able to grasp Bitcoin, you find that the culture changes, and now these people want to save Bitcoin and they want to acquire as much Bitcoin as possible. Even the work culture changes in these areas. So I've visited AfriBit Kibra as well, and Ronnie and the team have been doing amazing in terms of trying to get the word out, and we're looking forward to seeing it just change the place, and finally we can have a different story when it comes to Kibra.
Yeah, it brought me to tears while I was there. Absolutely amazing work. Shout out to Ronnie and the AfriBit team. I want to go over back to you, Q. You're based here in Hong Kong. We have this is, I think, the largest Bitcoin conference ever outside of the United States. Is this so emblematic or symbolic of Bitcoin culture in Hong Kong directly? What is it like here in Hong Kong?
It's fantastic. It's absolutely fantastic to see more interest growing in Hong Kong. It's for us, in terms of thinking about adoption, right, you need everyone to be involved, right? You need every part of the world to be involved in Bitcoin in order for this to actually truly become what it is supposed to be. And it evolves over time, right? Many years ago, this is very fringe, right? Anti-establishment fringe. But in the last couple of years, it's changed. It's changed to a point where we're seeing mainstream starting to talk about it, adopting it, and I think in this particular cycle itself, it's been very evident that that has happened, right? The fact that we have Eric Trump as a keynote speaker at this conference tells you where we are in that journey, and it's good for everyone in a sense that we are going to keep going on this journey. And good or bad is going to be more and more institutionalized, but hopefully that also means that people get more comfortable in using it, and maybe hopefully regulations move in a way that gives someone who may not know so much about Bitcoin more comfort that their store of value is safe. Right. So overall, it's fantastic, and you guys are doing a wonderful job here.
Well, I appreciate it. We hope that the trend continues here in Hong Kong, because from what I'm told, we're coming back next year, and we're giving away free tickets for that. So
wonderful.
Hopefully things continue in this direction. Aaron, I want to go to you. Asia, a lot of Bitcoin activity happened in Asia earlier on. You've been covering this space now for 11 years. What was it like? What was Bitcoin like here? I think it was a huge mining hub, if I'm not mistaken. China. What is it like to see things sort of transform in this region?
I mean, yeah, most of the mining happened in China, of course, until they banned it, and then unbanned it, and banned it, and then unbanned it.
It's happened a few times.
And then unbanned it, and then banned it, and then unbanned it. I don't know what the status is anymore.
Yeah.
I think it's officially banned, but there's still some mining going on. I've heard estimates of 8%, which seem reliable to me. But yeah, now we wait until they unban it again, and
we see what happens. Yeah, we see what happens. Well, ladies and gentlemen, like I said, all-star cast here. We're talking about Bitcoin as a global phenomenon, and we're talking about that live from here at Bitcoin Asia 2025. We're going to cut over to commercial, but stick with us. We'll be right back after this.
I'm Simon Gerevich, president of Metaplanet. The global financial system is broken. Where can you build long-term value when every system is stacked against you? A year ago, we were running a struggling hotel company in Japan. So we flipped the model. We made Bitcoin our core reserve asset. Everything we do flows into a single goal, increasing Bitcoin per share. Today, we've become Asia's leading Bitcoin treasury company and the top performing listed equity in the world. Now, most companies fear volatility, but we harness it. Very few companies globally are compounding value at this pace and at this scale, and we have no intention of taking our foot off the gas. We believe we can redefine the market from the ground up. And our goal is to become the most held stock in Japan.
I've got a dear friend. He spoke on the stage before, Simon from Metaplan, and I asked him, what's the hardest problem? And he goes, honestly, we're running out of Bitcoin.
That's the Bitcoin effect, and this is just the beginning.
Welcome back to the Bitcoin Magazine News Desk presented by MetaPlanet. We're here at Bitcoin Asia 2025. The day is culminating. We're going to have Adam back on the stage soon. We're going to have Eric Trump giving his keynote presentation. But first, ladies and gentlemen, I have an all-star panel with me here. To my left, we have Q, Chief of Staff at DDC Enterprises, Nolan, host at Roxham TV, and Austin Alexander from 10X Capital. And I am Frank Korver, the political and White House correspondent for Bitcoin Magazine. Crazy times, right? I'm introducing myself as the White House correspondent for Bitcoin Magazine. Nolan, you've been in this space for quite some time. Did you ever think you'd hear something like this?
I actually did, to be honest.
Let's go.
I had, you know, from the very beginning, I knew that Trump offered this kind of existential change for the American system. And, you know, America sort of oscillates between what we sort of two binaries, right? It's a revolutionary force and it's an imperial power. And it's both of these things. And Bitcoin allows America to make that turn in history. It goes from being an imperial power like this to a revolutionary force.
Okay.
And so when I saw Trump come in 2015, I said, something's up here. This is not politics as usual. This is a completely new way of doing American politics.
Okay.
And I had a thought that one day Trump would embrace Bitcoin, and here we are.
Is that right?
So I sure did.
You felt that, your intuition. I trust that intuition, Nolan, and I love that intuition. Austin, over to you. What's some takeaways from the conference? Some takeaways from Nolan? What's on your mind here?
Takeaways from Nolan, it's heavy, man. You start talking to this guy, and he starts explaining about how the fixed income markets are going to work in 47 years.
He's good like that.
On a Bitcoin standard. And this is not like a recent thing. This guy's talking like this 10 years ago.
Out of the womb, just talking like this.
So he's definitely one of the most insightful on the whole that I've ever met in the entire industry.
Yeah, quite a character though. But some takeaways from the conference. I know you were just on the main stage panel talking a little bit about Treasury companies, the importance of them.
They're bullish, I suppose. Yeah. So if we're gonna, if Bitcoin is like if we're gonna Bitcoinize the entire economy, and Bitcoin will be the reference unit for human economic activity, the unit of measure for human economic activity, then we're gonna have a lot of shuffling as the capital finds its way into Bitcoin, and I think that's what this current moment is in the Bitcoin Treasury company space.
Okay.
It's going to seem inevitable in hindsight because you have these markets, you have capital markets that have so much money in them. Like a lot of the money's trapped in there. It's like
we got to liberate it.
Mandates and structures that make it just add a lot more friction for that money to find its way into Bitcoin.
Yeah.
And so this is, I guess, an inevitability. And if we're in this price discovery phase, that's, I think, how you get these valuations, you know, like multiples on the NAV for these companies, is because these companies are the first that are situating themselves to act as conduits for capital to flow into Bitcoin through these structures. Obviously, in the long term, it's not going to happen. It's like if we're going where we think we're going, then they're all going to be Bitcoin treasury companies because Bitcoin is going to be the money.
Yeah, appreciate that. Actually, on that note, I want to come back to you, Q. You just seem to you touched on this a little bit earlier in the previous segment, but you just said, hey, we have this business, it's doing well, and it would probably be better if we were holding some Bitcoin on the balance sheet versus all this fiat. How hard was that to maybe get across to the board or the people involved?
Well, we got lucky. Our board of directors are very friendly towards crypto. We had one guy on our board that is a crypto OG.
Okay.
So it wasn't that big of a push, but what was difficult was just around helping them understand what's the risk management that we're going to build around this, right?
Okay.
So it's easy to talk about, oh, I'm going to raise capital, buy Bitcoin.
Yeah.
But there's so much details that go behind it where we have to make sure that we're a listed company where we have responsibilities that we need to take care of our shareholders to make sure that everything is done the right way. This is not one guy with a cold wallet, right, trying to buy Bitcoin.
Yeah,
exactly.
Bitcoin, yeah.
So it's been institutionalized in that sense, right?
Yeah.
And so we see Bitcoin as a good asset to have from a reserve standpoint, from a capital standpoint. If we want to, we can use it as a collateral, and we can make yield out of it. Right?
Okay. Yeah.
So it keeps evolving over time.
Yeah.
And I know there are a lot of talks about is this like overdone? Is this just like a short-term trend? But look, 175 listed companies have done this.
Yep.
Varying degrees.
Yep.
what's that, like 0.3% of all the publicly listed companies out there? What's the right number? I don't know, but 0.3% sounds kind of low to me.
I think we should get closer to 100 in my
Yeah,
opinion.
and maybe in the future we don't call ourselves Bitcoin treasury companies anymore. We're just companies, right?
Yeah, successful companies.
Exactly.
Yeah, that'll be a good way to do it. Nolan, we have the psychology around holding Bitcoin on the balance sheet changing. We have human psychology as a whole changing as a result of Bitcoin. So I want to bounce that one over to you there. What's happening in the world today?
Yeah, I mean, I think of this, you know, I've always used human capital migrations into Bitcoin as a predictive lens. So, you know, the cryptographers were sort of the first people to leave behind whatever career they had when they were on the Satoshi mailing list, and suddenly they realized they didn't have to be some ignored executive on security or privacy. These people now with cryptographic skills could be leaders of companies. Then you saw, of course, you know, where Austin came from, the Ron Paul 2012 refugees that really brought human capital from the political sphere immediately into Bitcoin. Then you started to see in around 2013, 2014, the Wall Street folks, individuals come, people who wanted to trade, people who really wanted to risk, right? You know, they kind of made with the bailouts Wall Street into kind of masturbation, right? Because it wasn't real anymore, because there was no risk. Some people they want to bang for real
risk.
You know what I mean?
Right. That's right.
They want the real thing, anything else won't do. So it attracted real people from Wall Street. What I find interesting about what's going on with treasuries right now is in a legal context, you know, before Bitcoin, I was, you know, trained as a lawyer. I never worked as a lawyer, but I come from that world.
Yeah.
And, you know, companies are moral people, right? And to see companies now become peers in the network is kind of what we're dealing with. It's a P2P information economic electronic cash network. And now we've got these companies that are joining the network as peers with their own needs and wants, and it's just a whole new way to package human effort, ingenuity, economic activity. So it's a very natural part of the cycle, and we can welcome them into the fold as peers in our network. They're moral corporate people, corporate entities. They have digital signatures. Their signature means something.
Nolan, I apologize. I could actually listen to this, you know, from now until the end of eternity. I always appreciate your musings. We are moving back to the live stage, though, and I apologize for cutting you off. Again, an all-star panel with us here, but we have to head back to see Jeff Walton on the Nakamoto stage. Stick with us here at Bitcoin Asia 2025.
Our entire species. So, you know, when I came in off the airplane here at Hong Kong, I was just totally inspired by all of the beautiful buildings, the bridges, and as I was coming in on the airplane, I even saw an underground bridge, which blew me away. And these buildings, these bridges, they were all built by risk takers. And these were not, you know, careless risk takers. These were very calculated and structured risk takers. So I want to walk through the story of like how did we even get here in the risk world. So I'm going to start with the dawn of risk. So pre-1000 AD. The ancient view of risk was that fate and luck determined our entire world. So if there were hurricanes, disasters, rain, drought, fate and luck was what, you know, ruled the world. That was driven by superstition, oracles, and divine intervention. Now, that evolved drastically in a period from 1200 to 1700 AD as a result of humanity's obsession with gambling. On the bottom left-hand side, you'll see here, these are original dice. These are actually ankle bones from a sheep, which was the foundation of gambling, dice and cards. And with gambling came mathematics, and mathematics to determine how to win and have a better probability of winning any sort of gambling scenario. So Fermat and Pascal adopted probability theory, the adoption of numbers, law of large numbers became a thing. And patterns began to emerge from what used to be chaos. And this started to completely change our entire species and technology. So this brought us to a period of enlightenment and measurement from 1700 to 1900 AD and the Industrial Revolution. So what used to be gambling and fate began to turn into superstition, went from superstition to data and observations. what used to be fate turned into data. And that led to the Industrial Revolution, the advancement of probability framework, Lloyd's of London, which is the very first insurance marketplace on the planet, and insurance began to plan for uncertainty and plan for risk. So again, my insurance background, got a unique perspective here. So as technology advanced, the risks were challenges that were to be managed and not feared. And that was foundational in how our societies continued to evolve. So fast forward to 1900 and 1970 AD, we experienced a massive rise in an acceleration of all forms of technology. We got the airplane, we've got the telephone, the radio, the car, the spaceship, and all of these technological innovations created an entirely new risk surface. As you can imagine, people crashed cars, people crashed airplanes, spaceships blew up, data and information flew incredibly quickly across the globe. So that changed our view of risk. So this rapid innovation was a result of technological innovations like transportation, communication, medicine and vaccines and plastics. And it also led to significant financial innovations like credit cards, FHA mortgages, Social Security, mortgage-backed securities, etc. Now, with those technological and financial innovations, that also led to risk management innovations. And the risk management innovations were the Federal Reserve, another reason why many people are here today, the FDIC, liability insurance, modern portfolio theory, capital asset pricing model, Black-Scholes. All of these things helped us put and wrap our hands and our minds around risk and what risk could be. And that brings us to where we are today, right? 1970 to today. I've got two screenshots here where risk went from the physical form into the digital form. And these two screenshots are from two very popular finance movies here, where you've got somebody on the phone communicating risk, and you got somebody behind a computer looking at risk and communicating risk, or digital assets or securities. And this is a result of computer advancement and the advancement in technology. So there was a significant increase in derivatives. There was increased data and liquidity. Speed of information moved incredibly quickly. Algorithms and computer models expanded very fast. Monte Carlo simulations were developed. Catastrophe models were developed. Now you've got AI and you've got cryptocurrencies. And ultimately, what this is showing is that we got incredibly good at math as a result of computers. Now, as you can imagine, with computers, that also created an entirely new risk spectrum and a new risk profile. So with computer advancement, there was increased speed and information, but that's also a risk. There's cyber attacks, digital information vulnerabilities. You've got assumptions and coding that goes into a risk landscape. And you've got custody risk and all sorts of new risks that came out of the advancements with computers. So that brings us to this story of where we're at today, and why I'm here on the stage is to talk about Bitcoin-backed risk and Michael Saylor in a pool of Bitcoin. So Bitcoin-backed risk, what is Bitcoin-backed risk? Bitcoin is an incredibly volatile asset, and people have been adopting the asset as a Treasury reserve asset and finding opportunities to transform this risk into different types of securities for different pools of capital. And this is where the story gets incredibly exciting. So from 2020 to where we are today and into infinity. So let's talk about what this risk is and what this company's strategy is doing to transform this risk. So this image that you see on the screen, this is Strategy's capital stack. And what this effectively is they've got a very large pool of Bitcoin sitting on their balance sheet. And what they've done is transformed that capital sitting on their balance sheet into different layers of risk. And these are layers of liquidation risk. So in the event, and this is corporate finance. In the event of a liquidation or a bankruptcy from a corporation, debtors get paid out first, and equity shareholders get paid out last if there's any assets that are left. So what they've done here is they've effectively monetized the capital stack into different layers of risk-return metrics that are attractive to different capital pools. So as you can see, the convertible bonds are the highest priority. Then you've got Strife, Stretch, Strike, and Stride in that order, and the lowest priority being the common stock down on the bottom. So what does this risk landscape look like? So on the x-axis here, you've got volatility. On the y-axis, you've got seniority. And you can start to see that these different instruments have different volatility characteristics and different seniority characteristics. So that lends itself to different investors that want a different level of volatility, a different level of risk, a different level of seniority, and are interested in Bitcoin-like exposure in a slightly transformed or a different form. So this slide is outlining the tapering of that specific risk. And what Strategy has effectively done is they've taken this incredibly volatile commodity and transformed it into these different instruments of different volatility. So you've got, MSTR options, which are at the very top, the highest volatility asset that could be held, a Bitcoin-backed security. And then you've got all the way down the capital stack down to STRC being the lowest volatility instrument. This is very similar to John D. Rockefeller in how he took oil and transformed it into different structures and sold it to the market. He's taking this incredibly volatile commodity and turning it into a different form to be used in different ways. So that brings us to the next part, which is quantifying this specific risk. And this risk is brand new, right? Just as, the creation of the car and the creation of the airplane and the creation of all of these other technologies and, boats going across the Atlantic, very similar. But this is digital risk. And so how do you quantify the risk of these different instruments? You've got to think about, okay, what is the volatility of Bitcoin? What does Bitcoin look like down the road every 4 years? What's the 4-year compound annual growth rate? How much capital do I have relative to the debt I have outstanding? And I'm going to draw your attention to the middle here. And all of this is available on strategy.com. You can go look at the risk profile of all of these different instruments. And I'll draw your attention here to the BTC rating in the middle. And what this effectively does is outline the amount of collateral, the Bitcoin collateral, that is backing each one of these individual instruments. So you can start to understand, how likely is it that Strategy would not be able to pay back this debt or this preferred instrument into perpetuity or into the future. And what you can see here is if you look down at the very bottom of the screen, you can look at STRD, which is the most junior in the capital stack, the most risky Bitcoin-backed security, and it has a 5.1x BTC rating. That means that they have 5 times the amount of Bitcoin backing the notional liability of that liability on the balance sheet. Okay, why is that important? That's important because effectively the price of Bitcoin could fall 85% and they would still be able to pay off that liability into the future. So when you start to think about how risky are these things, when you actually start to run the math, they start to look incredibly attractive because they've got a significant pile of capital that is backing each one of these individual instruments. So the purpose of showing this is to show that we're evolving. Our species is evolving. We're seeing this new risk, and we're creating a new risk framework so we can start to understand it. This is going to continue throughout time. So this next slide is really important. So this is looking at the performance of these specific instruments over history, since they've been launched in the last 6 months. And over on the y-axis, you see a bunch of little gray dots. The y-axis is yield, the x-axis is the 30-day average trading volume. And each one of those individual small dots is the traditional fixed income market. And all of the colored dots, strategy securities here, are in colors and at a different point in this axis. So the significance of this graph is that everything else in the traditional fixed income market is significantly less liquid than the strategy securities. And the yields are relatively similar. So the reason for this liquidity is because the risk of these individual instruments can be calculated 24/7, 365. This is an innovation that has never existed before. Like physical risk and other fixed income instruments, you have to wait for quarterly updates of the company, right? You have to see what is the performance of the company, how much debt am I taking on, and they're very illiquid instruments. So this market has evolved drastically, and these instruments have performed incredibly well. They're very liquid, and they have high yield. So this is arguably the most important slide in the entire presentation, sizing the market. And this is from Jesse Myers. I love this chart. He continues to put this out and update it. And so you've got Bitcoin in the upper left-hand corner at a $2 trillion asset. Gold is a $22 trillion asset. Equity is $135 trillion. But you've got real estate at $370 trillion and fixed income at $318 trillion. These instruments that Strategy has created are providing product market fit for the fixed income market and the real estate market. These are the two biggest capital pools in the entire planet. This is the biggest story in all of finance, right here. This is the math. I'm telling you and I'm showing you this is the biggest story in all of finance because there's no other cryptocurrency that has a security that is attracting the fixed income market or the real estate market. That's it. And the reason this is important, right, is you think about how does Bitcoin go from a $2 trillion asset to a $22 trillion asset like gold or a $27 trillion asset like the art bucket there. And it's not necessarily just, you know, retail adoption. It's getting these enormous pools of capital and siphoning that capital into the Bitcoin market. And that's what the creation of these securities has started to do. And all of these Bitcoin treasury companies that exist in the market are doing the exact same thing. They're designing and creating these securities that these pools of capital can buy. They're in wrappers that are very familiar, and they fit within the portfolio because they are the same, you know, like in kind. So that brings me to the end of my presentation here. So risk is constantly evolving, and this concept of risk that we know of today is really only about 400 years old. So if you think about, you know, the geography, you know, the landscape of time, risk isn't that old. And risk is really your friend. If you think about the advancement of humanity, the advancement of technology, the advancement of society, everything has been built by risk takers, people that took calculated and structured risk. So, you know, harnessing and managing that risk is what's led to, you know, all of these great innovations in the entire world. So as technology advances, risks evolve, and humanity continues to adapt. And I will leave you with this. In the words of the great Peter Thiel, courage is in far shorter supply than genius, and I encourage everybody to embrace the risk. Thank you.
Welcome back to the Bitcoin Magazine News Desk presented by Metaplanet. We're here at Bitcoin Asia. 2 more main stage speakers to go. We will have Adam back on the stage right after this, followed by David Bailey speaking with Eric Trump. Super exciting times ahead. To my left here, we have a panel first. We have Abdullah from Abraj. We're going to talk a bit about that in just a second. Nolan, host at Roxham, and Austin Alexander from 10X Capital. I want to talk a little bit about this hat you have on here. Abraj, what is Abraj?
Abraj is a 40-year-old business based in the Kingdom of Bahrain. We went public in December of 24. We adopted a Bitcoin Treasury strategy in May of this year. So
Okay.
the first publicly traded company in the Middle East to adopt a Bitcoin strategy. We are absolutely bullish about Bitcoin and are going to be actively pursuing this strategy moving forward. I think the Middle East and the GCC specifically has long powered the physical world with oil and resources and energy. It's only natural that we lead the way and we execute on a digital energy.
Money that's backed by energy, absolutely.
Exactly. So that's our focus, and we're going to pursue it for our company.
Amazing.
Let's not forget about the sandwiches.
Yeah, of course.
Yeah.
It's a 40. We have 15 brands, 40 locations.
Okay.
It's a group of restaurants that we have in Bahrain.
I know.
Very well-known brand.
I can tell you as a patron, it's a very high-quality restaurant.
I'm ready to go.
Yeah, a lot of restaurants. And we accept Bitcoin as well in all our branches at the moment.
Go.
So yeah, we're full
and
on.
Abdullah is no Johnny-come-lately. This guy, this guy put his entire family office into Bitcoin a decade ago.
Okay.
No, we're active in the space, and we've been around, and we're super excited.
Amazing stuff. Well, I appreciate that, Nolan. Just one last thought from here before we go over to Adam back. We just had Jeff Walton from Strive speaking about the builders in this space now, paralleling them to the Rockefellers, these sorts of types. Is that what's going on in the Bitcoin space?
I think so. You know, part of what we're seeing in the world right now with Bitcoin is the dissolution of this World War II consensus, this system of bureaucracy and institutions that really won World War II, but entropy has set in, and we're seeing these institutions actually produce a lot of bad things in the world. I see Nakamoto consensus as the logical successor to that. And
what's happening? Nolan, I don't mean to cut you there. I just heard that Adam Back is going to be coming on a little bit earlier, so my apologies.
Speaking of great men of history.
Great men of history. Make sure to join Nolan on Roxham TV, I think 5 days a week. Anyway, ladies and gentlemen, let's cut back to the Nakamoto stage. Adam Back, the legendary Adam Back, cited in the Bitcoin white paper, about to take the stage. We'll be right back after this.
Exciting. Very exciting.
Technical contributions to Bitcoin. What kind of piqued your interest in the financialization and the Treasury company theme?
Yeah, I mean, I was actually an active trader in the mid-90s, kind of a day trader, then a value investor, and certainly interested in macroeconomics and trading and the concept of trying to preserve your savings against inflation. And so, you know, I sort of put trading aside while I was focusing on my career in kind of cryptography and startup environment. So then started Blockstream, got involved with Bitcoin. In 2014, Blockstream was started. And then, of course, Michael Saylor started his Treasury play. And so I thought that was an interesting and valuable undertaking because he was sort of leading by example and then started a conference series to try and show other public market companies how you do it, because, you know, looking at it from the outside, you think, well, just buy Bitcoin and cold store it. But for a public company, it's not quite that simple, because you have to, you know, you have an auditor, you have to explain the account, you have to figure out the accounting, maybe you have to use an independent custodian because the auditor requires it and your shareholders expect it. So there are a number of things they had to go through to actually get it done, and he was interested to sort of promote that concept to other public companies. And so, you know, at some point in there, I bought some of his shares because I thought, you know, I wanted to support what he's doing, and if a lot of Bitcoiners bought a little bit of his shares, you know, his market cap was a lot smaller than Bitcoin, so it wouldn't take that many Bitcoiners, there are lots of Bitcoiners, if they bought a little bit of his shares, you provide some kind of financial support that if Wall Street didn't like his strategy, the Bitcoiners would buy the shares off them, right?
Sure.
So that was the concept, but now, of course, he famously, you know, was a sort of relentless buyer. You know, he would buy Bitcoin and you think, oh, he's got to be out of firepower, and then he'd do it again and again and again and again. So he's really explored the full spectrum of different ways that public companies can access capital, and I think that's been useful. It surprised me a little bit how long it took before any other public companies joined. Now, of course, today, that's turned around, and there are a lot of public companies in a very fast pace of new entrants coming to the market.
And, you know, I guess from your entire history in Bitcoin and all the developments you've seen, were you expecting the, I guess, commercial, corporate, institutional adoption to happen in this way?
Yeah, I mean, I think effectively, you know, everybody who's investing in Bitcoin, you know, they're looking at it from various perspectives, but effectively you're participating in an arbitrage between the mispricing of Bitcoin today and its, you know, its potential value in the future. And so, you know, effectively, Bitcoin is the hurdle rate, meaning that, you know, if you're doing saving in some other asset or, you know, via a professional fund manager, if they're not keeping up with Bitcoin's performance over the long term, you should probably stop that and buy Bitcoin instead, right? And so
it's a lot less work.
Say again?
It's a lot less work.
Yeah, and so I mean, it's proven to be extremely difficult to outperform Bitcoin over the last decade. You know, most people who invested in startups, even Bitcoin startups, or did any other kind of investing, they've typically realized afterwards they should have just bought Bitcoin and held it, right? And so with that backdrop, the question is, how should people operate a company? And so, you know, Michael Saylor started that journey just as a defensive method to protect the spending power of their cash reserves. But actually, if you think about it, the only way for generally a company to, you know, match Bitcoin or even potentially outperform Bitcoin is to buy Bitcoin and use the capital markets to try and increase the Bitcoin per share, you know, operate their core business, take some of the profit, use that to buy Bitcoin, use some of the profit to expand their core business, their products, their services. So, you know, from that point of view, I think eventually, probably all companies will be Bitcoin treasury companies, eventually.
Well, I think that's the title of our discussion today. How do you see that playing out over the next, you know, I guess Saylor's 5 years into the strategy? Where do you see this trend really going over the next 5 years?
Yeah, I mean, I think, you know, one question I've heard from different kind of professional investors who are, you know, just getting to grips with the treasury company playbook is they want to ask the question about how scalable the treasury company strategy is. And by that, they mean if there are more, you know, if there are twice as many companies, will it become less effective? Will it saturate the market or something? And it, you know, the scalability of a trade, at least in arbitrage, is a real phenomena because, you know, if there's a mispricing, let's say the kimchi premium is an example, right? So in one country, Bitcoin is priced a bit more expensively because of some capital controls or other factors, and somebody will try to arbitrage it. And, you know, if they put enough money into it, the opportunity will disappear, and they will have made the market more efficient. So they're effectively asking a question like that, but I think the point is here, the mispricing is rather severe, and it's an extremely large addressable market. So, of course, nobody knows today, you know, exactly what the Bitcoin addressable market is going to be ultimately, but you can certainly see there's a lot of monetary premium in some extremely large asset classes like the fixed income world, real estate, and even, you know, the stock markets. You can see the US stock market is highly correlated to M2 monetary expansion. If you take that factor out of it, it's approximately flat, in fact, right? So effectively, probably what you're looking at is people just trying to protect their spending power by buying stocks. And, you know, if Bitcoin is able to replace that, that's actually a better thing for everybody, in fact, right? You get more accurate pricing, you get better enjoyment from real estate because it's not overpriced by being an investment asset,
sure,
and you get a better return on fixed income. So I think effectively my answer to the scalability is it's extremely scalable and could absorb, you know, a lot of the free cash of some very cash-rich companies like Berkshire Hathaway, Apple, Microsoft. The size of that arbitrage could swallow that for breakfast and keep going and take a few decades to close the gap. So from that point of view, I think it's very scalable, and maybe there is some sort of positive reinforcement as well that the market is still trying to understand the treasury companies, trying to understand Bitcoin. So if things become widespread and common spread, that is sometimes what it takes for people to start to feel comfortable, to understand it, to have confidence, because they see other people adopting, other people investing. So, you know, there are, of course, you know, for people from a Bitcoin perspective, they're looking at Bitcoin, the asset class, electronic cash, self-sovereign money, and they wonder, you know, what is this thing with public companies buying Bitcoin? But ultimately, you know, the capital markets and the ability to organize economic activity in the form of a company is a big part of the world economy. You know, it basically took human productivity to where it is today. So it's really a basic part of you know, modern society and the ability to develop products. So I think it's quite natural that companies are going to want to participate there, and so it's just another part of Bitcoin adoption. It's a new vector of adoption. And you can see that the treasury companies collectively are a good part of the, you know, purchasing, you know, the inflow of new buying within the market. And of course, the ETFs are also absorbing a lot of Bitcoin quite quickly nowadays.
Well, they certainly have been a strong, sustained bidder in the Bitcoin market, which benefits the whole community of holders. But at the same time, there has been, you know, some pushback from the community that, you know, this kind of corporatism of Bitcoin is maybe antithetical to the grassroots, community-driven, the cypherpunk ethos of Bitcoin, if you will. What's your kind of perspective on that?
Well, I mean, you know, I was involved with the cypherpunks a lot of, you know, decade plus before Bitcoin, and so I do understand this perspective. And you know, the electronic cash kind of interest within the cypherpunks that predates Bitcoin was about a similar concept to what's evolved in Bitcoin, which is, you know, it's self-sovereignty, your asset can't be seized. Now, of course, the eCash systems of that time were effectively what we would call a stable coin today, so they didn't really have an investment aspect. So Bitcoin has an additional adoption driver, which is apart from the kind of permissionless innovation, unseizable asset, bearer cash, you have also an asset class, which is another driver because some people will buy or participate as an investment, but typically people who get involved with Bitcoin, it sort of changes them, changes their, you know, their time preference for longer, and makes, you know, sort of they learn things, they get interested to learn about inflation, about monetary theory, and so on. So I think ultimately, you know, groups of humans are organized as companies. Now, of course, there are private companies, which are, you know, a family business or a dental practice, and then you have, you know, small cap companies on the stock market and big public companies that are doing something much more ambitious, like, you know, a company like Intel, which is making CPUs, or AMD, and so on. So I think it's just a natural phenomena as Bitcoin continues to be adopted. I think, you know, the other sort of surprising thing in a positive sense is that the incentives that make Bitcoin work, originally, you know, people mining, the fact that the sort of mining activity is interacting with the market for Bitcoin, that, you know, the incentives are what's holding it together, right? And it's interesting to see how scalable the incentives have proven to be, which is, as, you know, the early stages of nation-state adoption, institutional adoption, you know, now effectively Bitcoin, whether people expected it or not, has BlackRock and Larry Fink rooting for Bitcoin,
evangelizing
right?
it.
Yeah.
Well, we heard a little bit about your kind of discovery and supportive strategy, but since then you've become, I think, one of the most prolific, highest profile investors into Bitcoin treasury companies around the world. kind of when did you make that jump, and what do you see really being the international opportunity?
I mean, I think it's been an interesting ride. So, you know, I described how I first got involved with treasury companies by trying to sort of philosophically support the mission that MicroStrategy was taking. And then, you know, because I have a bit of a trading background, got involved in trading that. And I think when they first started, the MNAV concept wasn't really talked about, but, you know, you can look at it, you can create those metrics on past data. So, you know, I think then I invested in Metaplanet was the next one, and then more recently in some of the other European ones like Capital B and H100. So it's quite interesting because different markets have different opportunities. There's usually something specific where a domestic company is maybe more attractive to the local investors or the local Bitcoin investors. And I think that could be for a few reasons. One is, you know, perhaps the local community knows the management team and they trust them, or there's some cultural aspect to it. But also, there are typically tax differences. So different countries have different tax rules. And so, you know, sometimes there is a tax arbitrage in the treasury company where, you know, the market doesn't have Bitcoin ETFs, let's say, and the tax treatment on Bitcoin is still out of date. And so you see that in Japan with Metaplanet. In France also with Capital B, there is some difference where you can hold shares that are French stocks in some kind of tax advantaged account, which you can't do with Bitcoin. Other countries have similar situations going on, so that kind of is effectively a kind of arbitrage, and, you know, may eventually lead to improved tax treatment in the country. And of course, there are now more countries contemplating or working on approving ETFs. So I think in Hong Kong, for example, last year there were 3 ETFs introduced, which is fairly new. Right, and I think Japan is also considering ETFs now. I mean, not in market yet, and maybe there's still some work to do. But it's interesting to sort of participate in that, and at least for me, I've tended to invest in companies where I know the management team, or, you know, have confidence that the management team are Bitcoiners, they're going to stay on the Bitcoin mission, and they're going to use the capital they raised to buy Bitcoin, and not like lose focus or not invest the Bitcoin. So really, you want to, I mean, from my perspective, because it's a Bitcoin related investment, I want to have confidence that they're going to stay on the mission, stay focused, and also, I guess, you know, have the capability to raise money, because it is partly a capital raising process that is enabling the companies to increase their Bitcoin per share. So if the team has some capital raising experience and capability between the team or their advisors or you know, banking partners or things like that. So yeah, and I think there also have been a range of investment types. So MicroStrategy being the first has explored initially, well, firstly they use the cash reserves. Then they took out corporate bonds. Then they moved on to convertible notes, which are a little bit more beneficial because they were selling convertible notes at 50% conversion premium. So they could raise 150 million, buy Bitcoin with that, you know, immediately. And if the conversion premium is reached, then they would only suffer $100 million worth of conversion. So you could see immediately that even if they started with a 1x MNAV, that would still increase Bitcoin per share, right? Which you wouldn't be able to do with an ATM. And then, you know, once the companies do have an MNAV premium, of course, they can do ATMs or ATM-like strategies and increase Bitcoin per share that way. And Metaplanet has been using moving strike warrants. Capital B has been using ATMs or something like it in France. And I think, of course, the last phenomena has been pioneered by MicroStrategy, or Strategy as it's called today, again, with the lineup of different preferred stocks they put in the market. they had 3 initially with kind of middling levels of capital market appetite, but the last one, STRC or Stretch, actually they sold a quite large amount, like over 2 billion in the first out of the gate, which is quite impressive. The other thing which I don't know if people are aware is that as well as the ATM on common stock, where they're able to work with a banking partner to sell new shares into the market, is because the preferred shares are also listed instruments, they're able to apply for and get approval for an ATM on the preferred shares.
Right.
So I think that may not have taken full force yet, but once the market values and builds an appetite, if it does, for STRC, and I think they already have ATM approval on it, they can perhaps more efficiently and repeatably raise capital by selling more STRC into an ATM market, where without that they otherwise have to engage bankers and find underwriters or large investment firms who will buy big tranches of it.
And I think we've seen some weeks where strategies run 4 or 5 ATMs concurrently, where they're selling across the entire universe of listed products. Well, Adam, we're almost out of time, but I wanted you to leave our audience with a little bit. You touched on kind of the qualitative framework for evaluating these companies, but you've done a lot of work on the quantitative side and the valuation methodologies, and I believe you're the creator of the months to cover metric. So could you explain a little bit from a quantitative perspective how you invest or how you think about valuing these companies?
Yeah, I mean, the point with the months to cover metric was that if you're investing in treasury companies in different markets with different MNAVs, generally speaking, a higher MNAV is going to feel more risky because there's a prospect that the MNAV decays, and if it's 10, it's got a lot further to fall than if it's 2.
Right.
And so, the question is, how risky is that? And so one way to sort of risk adjust is to look at the months to cover. So what that's saying is how many, if you buy a treasury company at 5 times MNAV and they are increasing the Bitcoin per share, how long do you have to hold it for their historic rate of increase in Bitcoin per share to pay for that premium? And surprisingly, at the point I was doing this, MicroStrategy was, I think their MNAV was around 2 or 2.5, and their months to cover was about 18 months. And at that time, Metaplanet was 5, which felt riskier, but actually the months to cover were only 5 or 6 months. Right. And so you can see that if you kind of adjust for that, it gives you a different perspective on how to think about the MNAV, because I think if you are able to buy a treasury company and stay in market long enough so that you reach par, which is to say that for every Bitcoin worth of money that you use to buy the shares, you have shares that contain a Bitcoin worth of Bitcoin, then you're at a kind of 1 times MNAV configuration, even if the company is carrying a higher MNAV. And the interesting point is, you don't have to be an active trader. At that point, you can hold the company, and their ability to increase Bitcoin per share is actually working for you in a passive way, where you are more insulated against the MNAV compression. So, of course, you never know if the rate of increasing Bitcoin per share slows down, and there's an interplay between the MNAV and their ability to increase Bitcoin per share. So if the MNAV is lower, generally the capital market structures are not quite as effective at adding Bitcoin to the balance sheet.
Well, that's all we have time for, but thank you very much, Adam.
Thank you.
Garovich, president of Metaplanet.
You just saw Adam Back, CEO of BSTR, the 4th largest Bitcoin treasury company in the world, in conversation with Tyler Evans. We're here to break it down now with an all-star panel. We've got Frank Corva, senior White House correspondent at Bitcoin Magazine, and Nolan Bowerly of Roxham TV. Before we get into it, there'll be a QR code dropping at the bottom of your screen. Claim your free GA tickets for Bitcoin Asia 2026. That's right, we're coming back next year. Grab those tickets now. And now back to the conversation. So Frank, Nolan, we were talking about the legendary Adam Back. This is a person who contributed to cryptography, really the foundation cited in the Bitcoin white paper, now interested in the financialization of Bitcoin. This has been a big sign, I think, for a lot of people that the Bitcoin Treasury company strategy has legs. No, Nolan?
I think so. I mean, we were talking earlier in the last session about this, little working model that I've been toying with a bit. We talked about when we went for a hike in Hong Kong the other day. This idea of of Bitcoin and the Nakamoto consensus and markets recalibrating in this new world built in a Bitcoin center, where it really does offer this opportunity for the great men of history to rise again, right? We saw with institutions that were built to win World War II, sort of running systems through credentialism, institutions really designed to not really allow individuals to rise like that. That was really one of the designs behind the French bureaucracy, for example. Charles de Gaulle knew that the weakness of the French bureaucrat was what allowed Hitler to reign. So a lot of the logic and a lot of the worldview, but that's like an anomaly in history, right? And so when you see someone like Adam Back, who, one of the original people to be involved in Bitcoin, he's been around for a long time. He developed one of the most interesting and innovative companies in Blockstream. They developed all kinds of cryptographic innovations. But to see him now going for this new, attack on Wall Street, this speculative attack, we're seeing his, blazing his name into the stars with this. It's one thing to be in the white paper, but to go and lead the charge there, I think we're going in the model. It's what gave me the idea for this model is when I saw the newspapers in England call Peter McCormack Batman. He was the Bitcoin Batman. And, we see how Elon Musk is operating. Trump will be up in a little while, of course. Trump, if you remember his original NFT collection, he was a superhero. He had the Trump T.
Well, not that Trump. That Trump won't be up in a little. Don't get the people.
Sure, hey, exactly, but it's the same.
Before we get back to the programming, Frank, your quick take on Adam Back becoming one of the most prolific Bitcoin Treasury investors.
I'm a big fan of it. I want to give a shout out to the Bitcoin Bugle, who likes to refer to Adam Back as now a trader. Just brilliant technologist, this doctor who contributed, some of his work cited in the white paper. But I think there's he I think adds a legitimacy to it, right? Adam Back is widely respected. He has an immense credibility. So him saying, yeah, these are real financial products. He has a financial mind as well as this technical mind. And I think his stamp of approval on it is a big thing.
Well, you're about to hear more about evaluating Bitcoin Treasury companies. It's all happening now, building the conclusion on day 2 of Bitcoin Asia 2025.
Up here, joined here by Strive, Kraken, and the Smarter Web Co. These guys are the pioneers shaping the corporate Bitcoin Treasury adoption playbook, and I'm very happy to have this discussion today with them. But I'm going to let these gentlemen introduce themselves. Andrew, why don't we start with you?
My name's Andrew Webley. I'm the CEO of the Smarter Web Company, and we're the UK's largest public company holding Bitcoin on the balance sheet.
Hi, my name is Gurpreet Oberoi. I'm the head of Kraken Institutional.
Matt Cole, CEO of Strive. We are completing our reverse merger right now. If anyone happens to own shares of ASST, vote yes.
That is a great call to action, Matt. Why don't we give a little bit more context behind what the Smarter Web Co. is doing in the UK, Andrew, and then Gurpreet from Kraken Institutional side, how you guys are supporting these companies, and then Matt, of course, from the US angle. Andrew, let's start with you.
Yeah, thank you. So I started my career in 1999, which was the early days of the internet. I worked at a small company that became a very big company, one of the biggest companies in the UK. Then I set up my own small technology business. I found Bitcoin about just under 10 years ago, and after seeing what Michael Saylor did with strategy, I felt that the UK should have its own version of strategy. So I listed my business on the stock market. We IPO'd in April this year, approximately 4 months ago. We've become a fairly large company now after raising approximately £200 million of capital. And in line with my personal beliefs, we hold our assets in Bitcoin. and we hold it with the idea that we grow it by increasing the Bitcoin yield that we can achieve.
Yeah, Kraken has been very instrumental in the digital asset treasury strategies. We help custody, provide trading solutions, and also credit. I think a differentiator is, if somebody custodies with Kraken and say they want to borrow 10, 20, 30 million against their custody assets, we can structure bespoke solutions to the treasury solutions, and we can also help think through ways to help differentiate themselves amongst others.
Yeah, so for me, my background's fixed income. I used to run a $70 billion bond portfolio at the largest pension in America called CalPERS, and I had a direct line of access to the Federal Reserve, the US Treasury, and I saw them gaslight me in trying to tell me that they weren't printing money. And it's this simple, that the only reason that technically what they said was true is that the Treasury would create new bonds, they would sell them to Goldman Sachs, and then Goldman Sachs would sell them to the Fed. If you take Goldman Sachs out of the equation, it was direct monetization of debt. And it was so obvious. And this was before I was a Bitcoiner, but it led me to put pretty much my entire net worth into Bitcoin late 2016, early 2017. And when I joined Strive in 2022, which was co-founded by Vivek Ramaswamy, principled on financial freedom, it was obvious for us to go into Bitcoin. And talking to Michael Saylor, initially it was not as a Bitcoin treasury company, and Michael Saylor was pretty blunt and just said, why aren't you just a Bitcoin treasury company? And it's like, yeah, that makes sense. Bitcoin's the hurdle rate. And so we adopted Bitcoin as the hurdle rate, which means that if we are going to put money to work, when we're putting that money to work, we don't think it's going to beat the future return of Bitcoin, 30%, 40%, 50% a year, then why aren't you just buying Bitcoin? And so for us as a Bitcoin treasury company, we are looking for ways to grow Bitcoin per share, the amount of Bitcoin each share of our company owns, which is like other Bitcoin treasury companies. And we're all approaching it from a little bit different angles. But just to give you a sense, I mean, I don't even think we've scratched the surface of the innovation that can happen in this space, and I don't think people understand the risks, and the risks are substantially less when you actually dig a little bit deeper in the debt that these companies are taking in the future returns. I think Strategy is literally a AAA rated issuer of debt, but yet they can't even get rated. That's how early we are.
So we're all Bitcoiners up here. Matt, I think you brought up a lot of great points that we're at the very beginning. I mean, there's about, what, 300 companies that hold Bitcoin on the balance sheet, and maybe, what, 20 of them are running the Bitcoin accretive play. And it's very fascinating to see how everyone's coming to this realization that, like, hey, traditional instruments like treasury bonds are just not the place to park your excess cash reserves. And so we get into the main topic of our panel today is how do you actually value these Bitcoin treasury companies, right? And I think there's two main buckets to look at. First is the tangible, so the Bitcoin per share metric that you talked about. And you also hear people bring up MNAV, BTC Torque, BTC Yield, and some of these other things. And it's another language maybe to the retail side of stuff. But even for traditional financial professionals coming in, you know, I think it's important to set the baseline for what these KPIs are. So Andrew, I want to throw it to you. When you look at Bitcoin treasury companies, what are the core KPIs investors should focus on? Is it Bitcoin per share? Is it MNAV? Is it BTC Yield? And what do your investors and shareholders seem to care about the most at the end of the day?
So this could be a very long answer, but I'll try and keep it fairly brief. You can get as complicated as you wish, but what I would do is I would recommend that somebody looks at three things. So the first one is the MNAV, really easy to work out. You can find it online. Most Bitcoin treasury companies have an analytics dashboard that you can see. What the MNAV means is very, very simply, it's the value of the Bitcoin versus the market cap. You know, maybe below 2 is pretty low, below 3 is relatively low, maybe above 5, 6, getting expensive, not financial advice. So you've got your MNAV. Then the second thing that you've got is the BTC yield. So this is really important. So a company like my company will issue equity, which increases the shares in issue. In return for doing that, it will generate capital, which in our case gets deployed into Bitcoin. So we issue shares and we buy Bitcoin. So the growth in that Bitcoin held is the BTC yield. So you're calculating the growth in the BTC versus the dilution caused by issuing the equity, which is, in very, very simple terms, made possible when the NNAV is greater than 1. Then the third thing that is something that not a lot of people talk about is the size of the company. And very, very simply, the model is ever so slightly easier the smaller the company. So if you look at, say, the market cap of the company, one of the components of your MNAV calculation, you'll be able to see the size, with the theory there being, which isn't, 100% true, that the larger you are, the harder it is to raise additional capital to make that much difference to your BTC yield and therefore MNAV.
Andrew, you and I were talking kind of earlier, and Matt, I'd like to get your perspective as well here too as the CEO of Strive. We're talking about what's valuable to shareholders, but does that necessarily align with what's valuable to you as the CEO? Like, what are you guys looking at ultimately at the end of the day to value your own companies?
Yeah, so for us, we are on a mission to outperform Bitcoin over time. Because if you aren't doing that, there's no reason to do the strategy. You should just buy a Bitcoin ETF. And so for us, it was, how do we deploy our resources? We have a very talented team. There's a lot of talented teams in this space, right? But each team, like sports teams, have different strengths, different weaknesses. And we're an asset manager. And so as an asset manager, we're used to looking for alpha strategies, meaning, can you outperform Bitcoin without even taking Bitcoin-specific risk? So that's the alpha side. But then on the beta side, I think the debt markets are evolving so quickly where when we announced our reverse merger in May, convertible notes were still the in way for people to get leverage, and now it's shifted to perpetual preferred equity instruments. And so we've kind of found ourselves in a position, I think, as probably the only Bitcoin treasury company that's doing a reverse merger, so as a SPAC, no debt, raised $750 million of capital. So that's become a very interesting opportunity for us to consider as we complete our merger. But that's how fast this space goes. When we were at Strategy World or the Bitcoin conference in America, that was not a thing. And so for us, it's just being nimble, having fun, putting our brains together to make the best decision. And that'll be different for us versus Andrew versus Nakamoto. But ultimately, I think we're in the early days of figuring out different ways to increase the amount of Bitcoin per share.
Gurpreet, as Kraken Institutional is at the front lines here with a lot of these companies who are running the Bitcoin Treasury playbook, you get to be beholden to a lot of these conversations. What's your take on all of this, and how is Kraken supporting these companies?
I think Kraken is a service provider, so we try to, even playing field. We offer custody solutions, trading solutions, and lending solutions. What I've seen that's working is traditionally, like when you buy a stock in public markets, retail, institutional, hedge funds buy a stock so the price can go up, right? So they can sell at a higher price. So I think the winners who I see in the treasury companies today are guys that have really strong marketing strategies and hit velocity. They hit velocity very early on so they can hit the ATM and keep the flywheel going. So where Kraken helps is we provide customized lending solutions where we can lend them against their, if somebody raises $750 million for Bitcoin, they can borrow from us for 1 week before they hit the ATM and increase their NAV. So Kraken as a service provider can really provide to treasury companies differentiated access to increase NAV and also like touch on tokenized stocks, MicroStrategy, NVIDIA. They can trade, they have global distribution from Kraken's X stocks. So I think from a service provider lens, I think we, all these areas each play a role in having a successful treasury company.
So I want to start getting, we talked about a lot of the tangible aspects here. I want to start getting into the intangible, right? It's been very fascinating to see over the course of the last 16 months the rise in the Bitcoin treasury company narrative. And early on, you could say, hey, we're putting Bitcoin on the balance sheet, and it would do multiples of wonder for your stock performance. But I think, general sentiment has moved past that. Savvy investors are really looking at the leadership teams that are executing this playbook. And Matt, like you mentioned, you know, Bitcoin is the hurdle rate. So you guys are looking at some of the financial engineering aspects to see how you can outperform Bitcoin as a whole to bring more value back in. So when you're looking at financing moves like convertibles, like ATMs, or even debt, you know, how does that ultimately impact shareholder value? When are they accretive? When are they destructive?
Yeah, so first off, on the debt side, if you have perpetual preferred equity instruments, so let's say you had 30% leverage ratio and you have that embedded for your company forever, you never have to pay back the principal. If Bitcoin grows at 30% CAGR every single year on average, and your cost of capital is 10%, that just works. It doesn't matter if your MNAV is 1, it doesn't matter if it's 0.9. As long as you can meet your interest obligations, you're good. And this kind of gets into where I think the industry is going to go, is that in traditional fixed income markets, you evaluate risk typically by interest coverage ratios. How can you take your profits and cover the interest, and how many times can you do that? And when you actually put into a risk model the returns of Bitcoin and you look at leverage ratios, you see it's pretty hard to break these companies. It's possible. You can break anything, but it's pretty hard, and I think that's, you know, one of the places where I think we have a pretty strong team, just given my fixed income background. Our CFO has, you know, investment banking background. We have Jeff Walton, who has a reinsurance background. Traditional finance is a really strong place for us, and then you look at other companies. You look at Nakamoto, who's innovated in every single international market. That is unique and distinctive for them. It's super interesting. You look at, you know, Metaplanet, what they've done in the ARBs in Japan. It's just like different teams have found different niches to provide value, and ultimately, like, one of the things that Michael Saylor told us when we got into the space was the hardest thing for the new Bitcoin treasury companies is going to be, can you get to $1 billion? Because when you can get to $1 billion, you can finance great teams, and it's not a large cost relative to the amount of capital that you have. You're open to do things like IPOing perpetual preferred equity instruments, and so it really is a race, at least in the U.S. markets, to get to scale. And we have a handful of companies that have done that, and then once you're there, then there's the, you know, differentiation comes in.
Andrew, from the UK side, would like to get your take on this, especially as, I mean, Smarter Webco has a very interesting, you know, rise to fame here, starting out as a small cap pubco back in, you guys IPO'd what, back in April, and to go instantly from the $3 million market cap to, I think it was, you know, upwards of almost $1 billion, right? And then an MNAV at one point of 14x, which is crazy. People must have been thinking, like, what is Andrew doing? Is this reckless? But you're very smart, you're tactful, you're reserved. How are you analyzing risk on your end?
Yeah, so what we've done since the start is we've just stuck to our strategy. The most important thing that you can do as a public company, in my opinion, is to put the shareholders first. So since before we IPO'd to the IPO and every day thereafter, we've made every decision with them front and center. You know, clearly there is some risk if you invest in a Bitcoin treasury company. You know, I have almost 100% exposure to Bitcoin and Bitcoin treasury companies, but I wouldn't be comfortable, or put another way, I would always do my best to communicate the risks. You know, as an example, in the UK, we were the first company to clearly specify the risks in every single announcement that goes out. You know, if somebody can understand the risks, then in our opinion, these things are the very best valued equities in the whole world. You know, when we look at, you know, the MNAVs that a lot of them are trading in, you know, in quite a few different locations, you know, the period that they will earn back that Bitcoin for the investor is absurd when you compare it to traditional metrics like PE metrics. So that's all we do. We try and make every decision based on the investor. Ultimately, they are the people that own the company. They are the reason why I listed my business, because I wanted the business to invest that did it this way. And then we just try our best.
Gurpreet, you and I were chatting earlier about the importance of brand value and how that accelerates brand velocity. And Kraken's always been kind of at the forefront of that. You know, what lessons can you kind of share with the crowd here, and maybe even Matt and Andrew on the importance of that?
Yeah, I mean, Kraken is one of the biggest supporters for BitMiner, Tom Lee, and we believe that's probably after MicroStrategy the best executed treasury company. And what we learned is that velocity, knowing when to hit the ATM, and understanding lockups, right? For investors, like MNAV can be a fictitious number, right? Because if your shares are locked, you know, your stock price rips when the product gets listed. So I think, you know, understanding how to touch the ATMs, understanding capital markets, understanding structure is very, very important. So it goes back to, right, when you start off, you need velocity to hit the game, right? Like institutions, hedge funds, pensions, endowments, they'll not invest in the 10th Bitcoin strategy company. So I think figuring out how to be the top 5 is very important to be succeed in the long term.
Maybe just, you know, a little bit of controversy is fun here. So I think that brand value is important, and you've seen that with Tom Lee's company, but I have to call out, Ethereum makes for a horrible asset for a treasury company. And oh my gosh, why?
Everybody, a round of applause here real quick, come on.
Because Bitcoin perpetually goes up versus fiat currencies because they're being debased. Ethereum is like a company, and a perpetual strategy as a treasury asset to buy Ethereum or Solana or Dogecoin or Pepe coin, I don't really care, it's building a house on sand. And so the brand can accumulate the coin quickly, it can make the coin go up, but ultimately, Tom better start buying some Bitcoin, or I think his days are numbered.
I mean, Kraken is a service provider, so no comment. We support everybody.
So, gentlemen, we're coming up here on time. 30 seconds, final take. How do you value a Bitcoin treasury company? Andrew, final words.
So look at the MNAV, look at the yield, and then look at the size of it. Remember the 3 things that I said, and then just do your research further after that.
I mean, Kraken's a service provider. You know, we want strong teams. We're long Bitcoin. We support everybody that's in the ecosystem. So we'll, you know, through our platform, we'll back everybody.
Tom's a smart guy. I followed him for years. I like him. I just don't like Ethereum as a treasury asset, but agree. I think it's great you guys provide the service for everyone.
Gentlemen, I appreciate the time. We're at time here. Thank you very much. And Hong Kong, thank you. We'll see you later tonight.
It's all coming down to this day 2 of Bitcoin Asia 2025, wrapping up, coming to the big finale. Eric Trump soon to take the main stage. We're back at the Bitcoin Magazine News Desk presented by Metaplanet with a new round of special guests here to break down everything you're seeing on stage. We've got Jason Fang of Sora Ventures, and joined also again by returning guest Nolan Bowerly of Roxham TV. The question on the panel, how to value a Bitcoin treasury company. Let's start with you, Jason. Obviously, this is a global opportunity. There are companies looking to crack this question. What's the answer?
Yeah, that's a great question, Pete. I think it really depends on the jurisdiction you're in. I think the general answer is, like the panelists have kind of mentioned, the MNAF, but really, you know, our business, Sora Ventures, we've been doing a lot of these treasury plays in Asia, and Asia is a very unique market where we go beyond metrics. So, for example, we'll care a lot more about regulation, understanding of the depth of the difficulty, the challenges that you present to be unique in those areas, and then we find the team that are able to kind of really crack open those abilities to really stack Bitcoin on their balance sheet. You know, the first one we did was Metaplanet, which is last year, and then now we've done one in Hong Kong called Moon Inc. 1723, and then a couple months ago we did Thailand, DV8, and then today we announced the Korea one. BitPlanet.
Oh,
right? Initially it was called SGA. And then
quickly, how do you think about these markets? Are there markets where you think there's more opportunity than other markets? Like, what's the differentiator here?
Yeah, great question. So, Peter, I mean, you've been in the industry long enough. You probably know very well that, you know, Asia as a region has put in significant, I think, resources in this industry, especially in Bitcoin. And so I think even though we're seeing a lot of treasury plays in US, I think Asia presents itself to be one of the most difficult regions to crack. One of them is just because the regulation. Two is you don't have a lot of flexibility. Flexibility referring to like in the U.S. you can just stack Bitcoin. There's really no restrictions to that. In the EU, for example, if the French regulators,
Sorry to cut you off here, Jason, but we've got to go to the main stage. He's here. We've got the main event coming on the Nakamoto stage. We'll be right back after the main event.
Wow. Do you think Bitcoin's popular? Hey, I only see one mic up here. I think I should have maybe grabbed one more. Whoops. All right, everyone. Well, we have quite the discussion for you today. And, you know, I wanted to start by sharing just a little piece of history. So last year when we did this conference here in Hong Kong, I got a phone call that said, there's a meeting that's going to happen in 2 weeks at Trump Tower to talk about Bitcoin, and that you have to go buy a suit right away. And so 2 weeks later we went, and we made the case for Bitcoin, and that set in motion a chain reaction that now brings Eric to Hong Kong, has put Bitcoin at 100K. It's kind of been a big deal. Let's go. So I wanted to start. Well, first off, one thing. You know, I get asked by the media all the time, like, does the president only like Bitcoin because he wants to get votes? I'm like, I thought that was the whole point of running for office, is you're trying to get votes, you're trying to do things that are popular. But I think one thing I respect about your dad, who's done an incredible job. By the way, can we just get a round of applause for the President of the United States? So one of the things that I respect so much about your dad is that he's an entrepreneur through and through. He sees opportunity where other people don't, like a true entrepreneur does. And he saw something here that he thought was worth taking a bet on. And, you know, I wanted to start by just hearing a little bit of the backstory, not just of your father, but for you, Eric, and how you got into Bitcoin.
Well, first of all, Hong Kong, we absolutely love you. Thank you for this incredible reception. Look at this place. This is unbelievable. It's off the charts.
It's like a rock concert.
The hospitality you've shown me since we've come into town has been unbelievable, guys, and I'm truly indebted, and we love it. Which brings me to another special person, David, and he's too humble to say this, but you know, we were getting debanked as a family, and I tell this story every single time I'm on stage, but because my father was a political guy, we were getting debanked by the biggest financial institutions in the United States. I'll never forget it. And all of a sudden, we started meeting all these incredible people in cryptocurrency. One of the people we met was David Bailey. And he asked my dad, he calls my dad one day, and he goes, and I told this story to a different group a minute ago over there, but he calls my father and he said, I want you to speak at the Bitcoin conference in Nashville. And my father calls me up, he goes, hey, what do you know about this Bitcoin thing? I mean, obviously I believe in digital assets, but do you think I should speak at it? And I said, absolutely, you have to speak at the conference. And David Bailey was the first person who invited the now President of the United States, before he was president, before in fact the media even gave him a shot at winning, to speak on a stage. And the community, the Bitcoin community embraced him. The Bitcoin community embraced my father, unlike anything I had ever seen before. And I hope that's paid off in spades, because we love this community. We believe in this community. 90% of my time in life is in this community now. It is the greatest asset in the world. And we are changing finance. We are changing modern day banking. We're changing modern day finance. It's the greatest store of value that's arguably ever been created. And guys, I'm telling you, you're going to look back in 3 years and 5 years and 10 years. The people in this room are the true pioneers of the space, and all of it's because of this man right here. And so, David, we love you. We appreciate you. And thank you for starting this journey for a lot of people, including my family and including so many people in this room.
Wow. Well, I just want to say, Eric, you are the top diplomat of the Bitcoin nation. And the Bitcoin nation is in every country on the planet. This is the Bitcoin nation. So good job, sir. Let's jump into business, okay? You've dived headfirst into this. You've gotten involved in some entrepreneurial endeavors. Metaplanet, I think, first and foremost, we were supposed to be joined today, actually, by Simon up here, but for some things we won't go into, he can't join us. Talk about your involvement with Metaplanet.
So where is Simon, first of all? He was right here. I saw him a second ago. Where's Simon? Simon, stand up, buddy. Come here. Come do a little victory lap over here. What this guy has done for Bitcoin in Asia is unbelievable. I mean, he is the Michael Saylor of Asia. He's a wonderful guy, a guy who's become a dear friend of mine, and he called me a year or two ago, and he goes, Eric, would you like to become involved with the company? And I said, I'd absolutely be honored to. And I couldn't be more proud to stand by his side. You know, he has single-handedly changed not only Japan in terms of the way they looked at digital assets, but a lot of Asia, and he deserves tremendous credit. So to our good friend, we absolutely, we love you. You're great.
So there's Metaplanet, but there's also American Bitcoin. Talk about American Bitcoin.
So American Bitcoin, I've got our great partner, one of my great partners, Asher here, and Mike Ho. Asher's over there. But listen, I think if you know there's a family that loves America, I love the entire world, but if you know there's a family that's truly American to the core, it's ours. We've got some of the cheapest energy in the world in America, in Texas, and we developed a company called American Bitcoin. We are one of the biggest Bitcoin mining companies on earth. We mine about 3% of the world's Bitcoin every single day. We're about to go public on the NASDAQ very soon, coming up. And you know, our rough cost per energy per mining a Bitcoin is about $37,000, right? And on an asset that's trading at, what is it today, $112,000, $113,000. And so we're doing the Bitcoin mining game as well as anybody on earth, better than anybody on earth. And at the same time, we're doing kind of a strategy model on the other side. And so we could not be more proud to launch this incredible endeavor. I think we're going to be one of the greatest Bitcoin companies anywhere in the world. But what's so cool is you have this across the board. You've got the Simons leading the way. You've got the Davids leading the way. You've got American Bitcoin that's going to lead the way. You have Michael Saylor with obviously strategy. You know, he's obviously, you know, truly leading the way by what he's done. You've got nation states that are buying the hell out of Bitcoin. You've got Fortune 500 companies that are buying the hell out of Bitcoin. I mean, you've got the biggest families. You've got the biggest companies on earth that believe in this digital store of value. Everybody wants Bitcoin. Everybody is buying Bitcoin. And that's an incredible thing, and that's why I've always said that I really believe in the next several years Bitcoin hits $1 million. There's no question Bitcoin hits $1 million. And when you're in the room with certain people, and I had breakfast this morning with, you know, a couple of the most powerful people in the region in the hospitality space, and you're literally sitting there trying to explain to them what digital currency is, you realize how early we all are to this race, and how big of a benefit that is, right? I hear from people all the time, you know, should I get into cryptocurrency? Did I miss it? Am I too late? And I literally start laughing at them. I go, we haven't even scratched the surface of what Bitcoin is going to be. We haven't even scratched the surface of what digital assets are going to be. This is the time to buy. Volatility is your friend. Buy right now. Shut your eyes. Hold it for the next 5 years, and you are going to do terrifically well. And so it's been so much fun. Guys, it's been so much fun.
You know, I didn't tell you I was going to ask you this question, so you may not have an answer off the cuff, but, you know, when I think about who gets in the room with the most interesting, wealthiest, most powerful people in the world, I really couldn't imagine anyone more than the Trump family who is in those rooms. As you've been on this journey, what's the most interesting things you've heard from people? I mean, you're talking to the most powerful families in China, you know, but you've been to many countries to talk about Bitcoin. What's surprised you the most?
Well, listen, I had one person who runs a major country tell me that they literally take the entire energy supply of a major city in the middle of a winter and use it to mine Bitcoin because that's how much they believe in the asset, right? And so, you know, I'm not going to tell you which country it is or who it was, but What I can tell you is there are sovereign wealth funds who really believe in it. You've got the biggest families who believe in it. You've got the biggest banks that believe in it. You've got accumulators that believe in it. And more, you have retail consumers that are starting to understand it, but not only understand it. I think there's a lot of people who understand what Bitcoin is and what cryptocurrency is, but never really had the access to it, right? Every single day, it's becoming more accessible to the everyday person. It's easier to get. It's starting to be custody at major financial institutions all over the world. The exchanges are getting better and getting more user-friendly. I used to be the guy who, coming out of the hospitality business, would yell at the exchanges saying, it's too difficult. You're making it, on DeFi, you're making it too difficult to ultimately buy cryptocurrency, and it's literally holding back the masses. The exact opposite's happening. Another thing that I'm working on is a company called World Liberty Financial. But I mean, we're literally trying to get cryptocurrency to the masses. We're trying to bring hospitality to cryptocurrency, and more people are finding their inroads into being able to buy it and being able to purchase it. In America, people are buying it for the retirement plans for the first time. It just became available. So you've got trillions of dollars of liquidity that's opening up, that are allowing digital assets in for the first time. You've got BlackRock, you've got all the biggest banks in the world that are buying it, right? You've got all the major companies in the world that are holding it on their treasury of their companies, right? And they're not letting it go. Those retirement accounts are not letting Bitcoin go. Those companies are not letting Bitcoin go. Those sovereign wealth funds are not letting Bitcoin go. And there's only 21 million coins. It's the only commodity in the entire world that they're not creating more of. I mean, if gold ever goes to $20,000 an ounce, I'm going to knock down this damn building and I'll find gold in that column right there. Like, we'll find it. That can't happen with cryptocurrency. That can't happen with Bitcoin. It's finite. And that's what makes it so damn powerful. And being in the room with those people, including the people this morning who are all of a sudden intrigued and you better believe are going to go off and start buying Bitcoin. Again, the people that are in it now, the people that are buying soon, those are the people who are going to win the race, because those markets, those capital markets, are opening every single day and just making it more accessible to the masses that want the greatest asset that's arguably ever been created.
So in Nashville, your father promised to make America the Bitcoin superpower of the world. And he laid out a pretty ambitious timeline. I think some people were skeptical he could get it done. And then he's proceeded to just knock it down one after another. We just got the stable coin bill passed. We got the SBR signed into, I mean, he's done so many things, it's kind of wild. We're here in Hong Kong today. I don't know if I should say this, but, the other Bitcoin superpower in the world is China. It's one of the biggest markets for Bitcoin, Bitcoin miners, Bitcoin users, Bitcoin held. How do you compare, what America's doing on the policy front and what is coming next, and, where the other Bitcoin superpowers of the world are on their policy side?
Well, listen, congratulations to everybody in here, because there's no question that you have made an unbelievable mark on Bitcoin and cryptocurrencies. There's no question that China is a hell of a power when it comes to this world and doing it well. By the way, I give the same credit to the Middle East. I mean, the Middle East has really embraced cryptocurrency in a massive way, and they are running fast in that endeavor. And by the way, there's a couple small countries in South America. They don't have the buying power. They don't have the GDP. They don't have the true monetary means. But what's equally as important is they have a hell of a lot of heart and soul, and they believe in it. And so what they lack maybe in terms of monetary resources, they certainly made up for in spirit. But again, not to try and ever play, one country against another. I do believe, because my father really believes in digital assets, and he took over from a totally incompetent president. I can say that. Biden was totally incompetent. All of a sudden, he's changed the trajectory of America 180 degrees, and he did so instantly. The second he got into office, he embraced the digital revolution, because he understands that that's the future of finance. And so we went from 0 to 100 instantaneously. I mean, I think in terms of America, I think we've made more progress in terms of digital assets in the last 7 months under his presidency than we probably did in the 10 previous years. And the reality is the entire world is following. The entire, so much of the world looks to America to lead the way on so many issues, and then they use that as a little bit of a roadmap to either to emulate or to chart a path, albeit they might diverge slightly. And what he's done has really kind of transformed America, and I really do believe the United States right now is winning the digital revolution only because you have somebody that's so committed to its success, somebody who truly, truly believes, somebody who owned the asset long before that they were president, who saw the vision, but also somebody that had every bank and financial institution so weaponized against them that it forced them in. People always ask me, if the banks hadn't gone after your family, if they hadn't shut down all your accounts, do you think you'd be doing this? And I said, I don't think I'd be here. I think I'd still be building every single hotel around the world and in every market. And by the way, I still do a lot of that. But I don't think I would have fallen into cryptocurrency the same way. It was a combination of them canceling the hell out of us, them coming after us relentlessly simply because my father was in politics, combined with the fact that they were going after all of you. So many people in this room, they were going after you. And guess what? I started meeting some of the greatest people I've ever met in my life who are incredibly honest, who believe in the future, who believe in technology, who are great people, who wanted to build dynamic companies that could, transform the future of life. And they treated you like dogs. They treated you like hell for no reason whatsoever. And they were doing the same to our family. They were doing the same to us. And so, they often say kind of the enemy of your enemy is actually your friend. That's how the Trump family became friends with this community. The enemy of your enemy actually became your friend. And, as you talk to these people, you realize how brilliant they were. As you talk to these people, you realized how antiquated the old financial system was, right? At 4:59 on a Friday afternoon, you can no longer send money until the next Monday, which if you're very lucky, might actually get to the intended recipient by Monday afternoon or Tuesday. That's not the modern world. Give me a break. That's not, finance has to be 24/7, 7 days a week. That's what people expect. That's what people demand. And we're changing that every single day. And so the road's been beautiful. The road's been something I would have never guessed in my wildest dreams. If David could have brought me back 10 years, no way would I ever have thought I would have been here. But it's also probably been the most rewarding venture of my entire life.
So your father's put Bitcoin on the global stage, and I have this perspective that money bounds people together, and so the Bitcoin nation, no matter where you live in the world, there's a common bond. And I think there's a big future for Bitcoin as it comes to diplomacy. And so I got a question this morning that I wanted to ask you in that regard from a CNN journalist that's here. Your father and President Xi are going to be sitting down to talk at some point soon. Is Bitcoin going to be one of the topics they talk about?
Never really expected that question. I don't know if they. Hey, listen, I would certainly love them to talk about Bitcoin because it's certainly something I'm passionate about. I think they've probably got larger things to talk about. But hey, that would be my question. That'd be my instant question. Talk about Bitcoin.
I think I just want to throw an idea there. I mean, maybe we could pay tariffs in Bitcoin going forward. I think that'd be a great idea.
That's interesting. Hey, listen, I think it's two things that America and China are definitely leading the way on is cryptocurrency. So it's probably actually something that the two of them understand better than anybody else in the world. But no, if you look at this, if you zoom out, I mean, kind of joking aside to David's thing, and I said this earlier, this has really become a community, and it's one of the most diverse communities in the world. I mean, you have more diversity at a table when talking about Bitcoin. People from different cultures, different societies, different languages, different religions, than I'd say any group of people ever. I mean, it really it's a global community of people that all truly believe in something that's so powerful, that's so transformational, that's going to redefine the future. And it's beautiful. I've met more incredible people from more incredible places through this community than, honestly, even hospitality, which is kind of, has always been my bread and butter. It's kind of hard to believe that this group, I mean, so many of the people you'll see in this room, you'll You'll see at the next conference in Miami. You'll see them at the next consensus conference in Toronto. You'll see them in Abu Dhabi, and you'll see them everywhere in between. This is truly a global community, and I really believe that's great for humanity. That's number one. Number two is one other thing that never gets talked about, and it might even be a little bit crude to say, but guys, the traditional financial system in the world has benefited guys like me, and it hasn't benefited the vast majority of people, right? It benefits the people that, you know, were fortunate enough to have some zeros behind their name. They're the ones that have leverage. They're the ones that have power. They're the ones that can call the heads of the bank, you know, and negotiate off a, you know, a full point on a loan, or, you know, get all the fees knocked out, or, you know, listen, there's a lot of ways that we can, or just borrow money in an environment where they wouldn't give other people money. You, for the first time, have kind of a community which is agnostic to true wealth. And that's a great thing. It gives the person in sub-Saharan Africa, you know, the same opportunity as it gives the, you know, executive on Wall Street in New York City. And that should never be forgotten. It's the first time in any kind of finance, probably in the history of the world, where there is no kind of disparity between socioeconomic classes, and that should really be cherished.
So this is going to be my last question. This is everyone's favorite question. Since you mentioned, you know, adding a couple zeros behind your name, what's going to happen to the price of Bitcoin a couple years from now?
Well, I've said this for a long time, but there's no question in my mind that Bitcoin hits $1 million. There's no question about it. And by the way, I don't think it has to stop there. I think it could go a lot higher. You have every person who wants an asset class, and you have a very limited supply, and it doesn't take a genius to figure out where that goes. Then you combine a traditionally kind of hard asset that didn't have as much utility behind it. It was a true gold. It was digital gold. It was a store of value. And now every single day, you know, and David probably sees this much more than I do, but every single day they're figuring out new ways to kind of stake it, to get yield on it, to use it for everyday purchases, to use it, you know, as kind of buying power, right? So more and more you're taking this digital gold that was really just a store of value before, and you're putting massive utility behind Bitcoin. And so, I mean, every use case for it is fantastic. And honestly, volatility is our friend. Like, you know, people ask me, like, when do you buy? Buy right now. Buy this second, right? I mean, I can't tell you how many people over the years I've told to buy Bitcoin, and every single time they come back to me having not done it, and they say that I wish I would have bought. In fact, I made one of like the great all-time Bitcoin calls on Twitter. I think it hit 83,000 or 82,000. And I go, right now would be a great time to start buying Bitcoin. Sure enough, it hits, what, 79? Was like 79 the bottom, like 78.9 or something like that. It was like 79. And it goes from 79 to like 124 in, what, 90 days? And I called it within like 1,000 or 2,000 of the bottom on, you know. And then people come back to me, you should have told me. I'm like, I put it out on my Twitter following to, you know, 10 million people around the globe, like when to buy Bitcoin. But I really believe in it. Go, buy it now, you know, close your eyes, hold it long term, do not get rid of it. And I think Michael Saylor always says, you know, sell a kidney, buy Bitcoin, right? And I think he's, you know, I know obviously he jokes when he says that, but he's right. Buy it, hold it, and I think you're going to do extremely well.
He's not joking, for sure. Actually, he sold one of his kidneys, I'm pretty sure, so. Well, with that, ladies and gentlemen, I want to thank you for being a part of a historic event. I want to thank Eric for joining us all the way in Hong Kong. Hong Kong, can we give a shout out to the one and only Eric Trump?
Amsterdam 2024. The visionaries have gathered and set the stage for the revolution of our time. Bitcoin knows no borders, no barriers. The path to a decentralized economy is now clear. there are only possibilities for tomorrow. The energy, electric, as the brightest minds shared their insights. What comes next is limitless, from Amsterdam to the world. We're ready to build it. Are you?
I'm Simon Gerovich, president of Metaplanet. The global financial system is broken. Where can you build long-term value when every system is stacked against you? A year ago, we were running a struggling hotel company in Japan. So we flipped the model. We made Bitcoin our core reserve asset. Everything we do flows into a single goal: increasing Bitcoin per share. Today, we've become Asia's leading Bitcoin treasury company and the top performing listed equity in the world. Now, most companies fear volatility, but we harness it. Very few companies globally are compounding value at this pace and at this scale, and we have no intention of taking our foot off the gas. We believe we can redefine the market from the ground up. And our goal is to become the most held stock in Japan.
I've got a dear friend. He spoke on the stage before, Simon from Metaplan, and I asked him, what's the hardest problem? And he goes, honestly, we're running out of Bitcoin.
That's the Bitcoin effect, and this is just the beginning.
The grand finale of Bitcoin Asia 2025 is in the books. 20,000 people just saw a conversation between Eric Trump, Executive Vice President of the Trump Organization, and David Bailey, CEO at Nakamoto. Eric Trump's words, 90% of my time is spent in this community. Quote, everyone wants Bitcoin. Everyone is buying Bitcoin. There's no question that Bitcoin hits $1 million. Here to break it down and to tell you their thoughts on what they just saw. We've got George McHale, Managing Director of Bitcoin for Corporations, Matt Cole, CEO of Strive, and Jeff Walton, you know him as the analyst who's always on your Twitter feeds trending about the Bitcoin Treasury Corporation. So, guys, let's talk about what's happened, what Eric Trump just said on stage, really in the location where he said it, here in Hong Kong, sending the message about how the U.S. is taking the lead in this industry. Matt?
Yeah, they really have, and why? Because prior to the Trump presidency, the biggest risk for institutional investors for 10 years straight was regulatory risk. And it went from number one to completely wiped off the table. And that is what leadership looks like. That is how you lead. You completely deregulate and allow it to thrive. And then you saw him talk on the other hand of what does that mean for the price of Bitcoin. And initially he said $1 million, and I said, okay, that's kind of a conservative target. Then he said, or higher. And it kind of gets into why. Because fiat currencies will be debased forever, right? It's not that one Bitcoin is going to buy you an entire state. It's that they cannot stop printing money, and so Bitcoin will go up forever. And so $1 million is a pretty conservative target if you have a long enough time horizon.
Jeff, assuming there's not much you disagree with here in Eric's assessment, too conservative about $1 million.
Yeah, I mean, the road is wide open. And now you've got these corporations that are becoming more ingrained into the traditional financial ecosystem, right? You've got companies like Strategy and all these other Bitcoin treasury companies that are now in retirement accounts of people, and then you've got these fixed income securities that are being launched to the market, and they're fitting into banks and pension funds and passive ETFs, and that's all a function of the political wind shifting. And that shift is really ingrained Bitcoin and cryptocurrencies deeper in the traditional financial market, which I think is going to make it more difficult for any political wind shift to change the path of where things are going here.
And George, obviously the conversation on stage, pretty positive about what President Trump has been able to deliver, talking about the Genius Act passing, talking about market structure and how favorable that looks. What did you take away from the conversation?
Yeah, I mean, obviously a very bullish conversation. Love the $1 million plus price target. You know, what I really appreciated, though, was a lot of the backstory, that kind of a little peek behind the scenes of how everything went down.
The personal relationships here.
Yeah, definitely. I mean, how much props he gave to the Bitcoin community and how big sort of that influenced their decision to really, dive in with both feet. Trump Media Company holds 15,000 Bitcoin on their balance sheet. They're ranked number 8 overall. Yep. So a lot of people forget this. They're not just kind of dabbling their toes in this. Like, they're all in.
Yeah, and the personal story was great, and you've heard him talk about, and Donald Trump talk about it many times, is that these guys were debanked. And so this gets back to traditional Bitcoin principles around freedom, sovereignty, self-custodied Bitcoin, right, which is important. And as we're running Bitcoin treasury companies, it's always the first thing that every individual needs to do is buy Bitcoin, self-custody it, secure financial freedom, and these guys lived that, and I think that is really encouraging, because when you've lived it, then you really believe. And,
Definitely. Yeah,
a little undertone in the conversation about the message it sends to the world. Just wanted to know quickly that the conversation about China, right? We're in Hong Kong, so maybe, George, sticking with you, the geopolitical context of this conversation.
Yeah, I mean, I think, again, it's like a couple other speakers that we've heard talk about the U.S. is really leading the way, and other countries kind of tend to follow suit. So I think that's going to continue. I think that we are going to kind of set the template that other countries are going to essentially copy, which I think is bullish. So, yeah, I mean, I think David tried to kind of pin him into some questions about China there, and, he did a good job handling it. My favorite part probably was when he asked about the upcoming meeting with President Xi, if he was going to ask about Bitcoin. And
yeah.
We'll see if that actually happens, but David had to shoot a shot, so you love to see it.
Well, Eric also saying that he would perhaps ask the same question as well. Matt, you're thinking as an institutional investor, you know what this audience is looking for. Obviously, continuing to send positive signals. How optimistic are you about the future of regulation in the U.S. right now as we look towards the end of the year?
Yeah, so I think regulation risk is near zero. For me, the most important thing for the U.S. is the Strategic Bitcoin Reserve, and I'm not super optimistic of that in the short term. I would like to be more optimistic. I think for American strength, it's super important. But maybe just to go back to the China comment one second, there was actually a report that was published that for the first time in 30 years, international countries own more gold than they own U.S. treasuries. So there's a 30-year period where they own more treasuries and gold. So I think that extends to China, right? We know that China owns substantially less U.S. treasuries. When do they buy Bitcoin? Or are they buying Bitcoin?
Well, we know that they hold some Bitcoin. We know the U.S. not selling. Jeff, your thoughts on this Bitcoin U.S.-China relation?
Well, I mean, ultimately, success breeds more success, and you're now seeing companies like Strategy go from $500 million in cash to $70 billion of capital with Bitcoin, and you're looking at Metaplanet going from a single hotel to now I think they've got $1.5 billion of Bitcoin on their balance sheet, and that is attractive. It's positively polarized to capital, and that is causing people to rethink their business model, rethink about how they're capitalized, rethink about their relationship with money and banks and banking infrastructure, and that's going to continue to evolve as, I think last year Bitcoin Asia was 4,000 people. It sounds like this year is around 20,000. So it's 5x year over year, and it's going to get larger. The price of Bitcoin is going to go higher. The success is going to happen in the environment, and there's going to be more people that are interested in following along in this environment.
George, your quick thoughts as you look towards the end of the year. Obviously, people expecting a bull market to return. Your thoughts?
Listen, I actually am one of those crazy people who thinks that this time is different. And I don't know if we're going to see the cycles that we've seen in the past. Maybe we'll see some drawdowns. I don't think it's going to be as violent as it has been. There's just too much. There's too much demand. I mean, treasury companies are buying more Bitcoin than is being mined quarter over quarter consistently at a larger and larger scale. So yeah, I'm optimistic. I'm bullish. I think this time is definitely different.
Well, we'll get some more thoughts from the panel after this quick break. We'll be right back. Stay tuned. It's the grand finale of Bitcoin Asia 2025.
I'm Simon Garovich, president of Metaplanet. The global financial system is broken. Where can you build long-term value when every system is stacked against you? A year ago, we were running a struggling hotel company in Japan. So we flipped the model. We made Bitcoin our core reserve asset. Everything we do flows into a single goal: increasing Bitcoin per share. Today, we've become Asia's leading Bitcoin treasury company and the top performing listed equity in the world. Now, most companies fear volatility, but we harness it. Very few companies globally are compounding value at this pace and at this scale, and we have no intention of taking our foot off the gas. We believe we can redefine the market from the ground up, and our goal is to become the most held stock in Japan.
I've got a dear friend. He spoke on the stage before, Simon from Metaplan, and I asked him, what's the hardest problem? And he goes, honestly, we're running out of Bitcoin.
That's the Bitcoin effect, and this is just the beginning.
Bitcoin Asia 2025 is in the books, but of course we're still having a little bit of programming remaining here to recap all the events. But quickly before we begin, b.t/events, you can go online, claim your free GA pass to Bitcoin Asia 2026. We've got a sneak peek at what's coming from the event directors here, introducing our new panel. We've got BTC Viv, event director at Bitcoin Asia, Craig Deutsch, director of programming for the Bitcoin Conference Series, and Frank Corva, senior White House correspondent for Bitcoin Magazine. What a couple days. We saw a wild amount of content, everyone from Adam Back to Eric Trump taking the stage. BTC Viv, let's start with you. What is it like to see an event like this come to fruition and to see 20,000 people come together in Hong Kong?
It is definitely super rewarding for me to see months of hard work, staring at floor plans, staring at renders, to see everything taking place from 0 to 1 and coming to the physical reality and welcoming so many guests. I think the attendance and the energy is through the roof, and glad to see everybody's having a great time.
And the largest conference ever held outside the United States, Bitcoin conference, is that correct?
Yes, this is our biggest international event to date, I believe. We welcomed over 102 countries and regions of attendees joining us at Bitcoin Asia.
Craig, over to you. You put together a lot of content, 2 stages over 3 days. What were the highlights that you saw?
Well, you know, one thing that's funny about my job is I actually don't get to see much of the programming.
Okay, well.
But, you know, we had Eric Trump speak at the event, David Bailey. We had a number of these Bitcoin treasury companies. That it definitely is the meta of this current event this year.
Well, very different flavor from last year. I mean, I wasn't in attendance, but, you know, read the coverage on bitcoinmagazine.com. Encourage you to do so as well. But the theme of that last year was really a return to building, right? You saw a lot of developers come out, a lot of projects, maybe crypto projects coming over to Bitcoin. Some of that this year, of course, there was the Bitcoin Builders event here, co-located, where a lot of those companies were out talking, but maybe a little less enthusiasm around that. Frank, your thoughts on what the general atmosphere and trends have been here?
Yeah, absolutely. I do want to give a shout out. There were some builders here. We did have some people who were involved with the technical side here on the live desk with us. There were some panels on that as well, but surely Bitcoin treasuries were sort of the main event here, or the main theme for sure. Generally speaking, first I want to take a quick minute to thank both Viv here and Craig, because the work that they do to make this all work as seamlessly as it did, it was absolutely stunning. I know how much work went into this, and it's remarkable, so I want to say thank you guys on camera here. Round of applause, everybody back home.
In the comments, feel free to give them a shout out.
In the comments, that's right, exactly. So it was very special to see. There was a really, really nice vibe here in that it was big, it was enormous. It made a statement that Hong Kong is about Bitcoin, and that these 102 people from 102 different countries were willing to come here to convene to talk Bitcoin. But it was also, there was a really it wasn't too much. It wasn't overwhelming. You could go see the people you wanted to see, and it was just a nice, there was a nice flow to the whole event. You might have sort of noticed it in the background here as we've been presenting for the last 2 days. But yeah, just again, one more huge shout out. It takes a lot to make it all seem like it was sort of meant to be, and that's definitely what it felt like here. It felt very meant to be, so thank you both for your hard work.
Well, of course, the conference road never stops. I know you're thinking about 2026 for next year. So BTC Viv, anything you can tell the folks at home who are still to claim their GA pass with the QR code?
Yes, so next year we'll be hosting Bitcoin Hong Kong 2026, and the date has been settled, which would be on August 27 to 28. So very, very similar dates to this year. So this is your cue to claim your GA pass while they're still up for grab, and we welcome everybody to join us in Hong Kong this year, next year, especially if you witnessed the incredible energy that we're having this year in Hong Kong. And if you need an excuse to travel to Asia for the first time or for the millionth times, this is another reason why you should come join us at Bitcoin Hong Kong.
Well, for the folks at home, we know it's not all about what happens on stage. There's a lot that happens off camera, talking about the parties, the nightlife. Craig, wondering if you can share what you saw, Whale Night and these kind of different events. What were the highlights maybe outside the venue that you experienced?
Oh, well, we got to see this incredible drone show designed by our own design team. Even just the expo hall, seeing all of this great design work.
Drone show? What, a light show display?
Flying drones over the harbor. Yeah.
A Bitcoin logo?
Bitcoin logo, the Hong Kong flag, rocket ship. Bitcoin going to the moon, max bidding, max bidding.
Rocket emoji style. Rizzo, do you know anything about rocket emojis? Have you?
Have I learned about rocket emojis? I think they're a very effective tool for communicating emotion,
yes,
Frank. Yes. So, Frank, your nightlife experiences, anything that you can share?
What? I do try to make it an early evening so that I can give 100% here at the desk, but I was at Whale Night last night. I was at the drone show, which was spectacular. And I had a bit of an emotional moment. It's like we get to do this around the world. And I think to Eric Herzman, CEO of Gridless, a Bitcoin mining company in Africa. I saw him recently, and he was a bit tired. And I said something to him like, "You good?" And he's like, "Yeah." He's like, "What I constantly remind myself when I'm tired and putting a lot of effort into all this is that I get to do this, and that's a privilege." And I had that feeling last night. And with all these people I've come to love, the people on this staff, people I've really respect and I love working with, and we're just in Hong Kong watching a drone show over the water, and we're running this live desk during the day, and we have Eric Trump here, and it's just like, it all kind of feels like a bit of a dream. Very grateful for it. And again, it goes into the hard work that not only Viv and Craig did in putting this all together for the conference itself, but yeah, other members of the team who are organizing drone shows in Hong Kong. Thought to myself, like, how does one do that? But I guess there is a way, and we have someone who does it. Again, it's a privilege to be a part of this team.
Well, still time to claim those GA passes, but of course, different types of experiences. We've had Whale Pass holders, institutional holders, B2C VIB. Before we break, maybe share a little bit about these other experiences, folks who may be considering a GA Pass, but maybe want to upgrade to Whale. It's worth the money, right?
Of course. I believe it's about what is your goal at these events, and definitely come to Hong Kong. Hong Kong has a lot to offer, not only for the Bitcoin community, but also the entire world. The level of culture, the level of history, the level of characteristics of the city and the people really brings a lot of energy into our daily life and make us think a lot about our lives beyond the Bitcoin standard.
Love it.
And if you're in it for Bitcoin and want to stay on top of what's happening in Bitcoin industry, then definitely come to Bitcoin Hong Kong more prepared, because they are different pass types that get into different stages, for example, and then different stages will have a different bit of focus. So let's say for GA pass, you already have incredible access to the entire expo hall pretty much, so it's a huge value just to come in and see the vibe and see the talks. Because the theme for this year is signal over noise, and we're really making an effort to try to attract people who are Bitcoin curious, who are not yet into Bitcoin but have seen Bitcoin so many times and wondering what it's about. So if you are one of those people, then the GA Pass might be enough if you're here just to
Well, I would share from the Whale Pass experience. I was over in the Deep. I saw up close Eric Trump speaking with Tracy Hoyos Lopez, and a few feet away from some of the most influential people in the industry, so you really can't beat that.
Yeah.
Yes, and the speech happening on the VIP stage in the Deep are not recorded. So if you're missing the conversation, then it's gone forever.
Yes. Right. Well, before we log off for good, I want to go over to Craig. Share a little bit about Bitcoin Amsterdam. The show never stops. About to head on the road again later this year in November. Anything you can share as we look to the next Bitcoin Magazine event?
Well, we've got a lot cooking for the rest of the year. We have Bitcoin Amsterdam happening in November. We also have Bitcoin MENA a few weeks after that, happening in Abu Dhabi. Michael Saylor will be speaking at that event. First time in the region since adopting the Bitcoin strategy. And Amsterdam, there's a lot cooking that we are getting ready to share, but we're not quite ready to yet.
Well, of course, to find out more, b.tc/events. Go claim those free GA tickets to Bitcoin Asia 2026. Check out Bitcoin MENA. Check out Bitcoin Amsterdam. We hope to see you there. A special thanks to everyone who put on the programming. A special thanks to everyone who tuned in across X, Rumble, and YouTube for these 2 days. You can catch it all on those channels on the Bitcoin Magazine YouTube. All the events, all the panels available for watching. Just stay tuned, stay subscribed, smash that like button, and we'll see you next time. This has been Bitcoin Asia 2025, a Bitcoin Magazine event.
To the moon.